right. Good afternoon, good morning, good evening, whatever you're at in the world. Quasar Markets Live. We are going to go all day today. This is Quasar Markets Media Day, and we are super excited as we are going to go back to back to back to people. We have an exciting lineup, a really, 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 really good lineup today. And stick around as we will be going full-time, back-to-back, no stopping. We're going to be full-time Media Day page. So I'm super excited about this. Our first guest coming in today is one that everybody loves. Obviously, that is Gordon Scott, CMT guy, and already contributing in Quasar Markets. Mr. Scott, how are you, man?
I'm doing well. Thanks for having me around here, Steve.
I love it, and I love everything you're doing, man. You know, one of the things that we wanted to bring here to Quasar Markets is this whole thing about charts and understanding, because so many people quote, love charts, but they don't really understand charting, and they don't really have the tools in order to do that. We're building him at Quasar Markets and bringing people like yourself into it, and I love this. So I'm going to get out of your hair and let you do your thing, and you get started, and go have fun, Gordon.
All righty. Well, what I'm going to present today here is something I think people need to know about. I like the idea of trying to use charts to find opportunities in the market. I'm going to share my screen here and just try and give you an idea of some of the things that are going on. Well, right now, you've got about a 1% move in QQQ, the NASDAQ 100, that's trying to hang on just out of the gates. That actually is a bigger move than we've seen in the past couple of days. The past couple of days have been really low volatility trading in general, and in comparison to where we've been in the past. But that really belies a pressure cooker that is stewing underneath. Even so, something happened in the past couple of days that I want to tell you about. In the past couple of weeks, in fact, a whole new shift has occurred in the market, and that is the business of options being given on Mag 7 stocks. So options that expire Mondays, Wednesdays, and Fridays, and they're getting ready to do it every single day. These are what some people call zero DTE options. Now, these zero DTE options, I think, represent the market's big gamble. I'm calling it the gamma experiment of 2026. Okay, I think people will look back on it and call it that, or something like that, because really, what's being done right now hasn't ever actually been tried in the markets. I think that option sellers, the professional option sellers, think they have a handle on this. They think they know how this is going to go. They think they've done the testing and the work and so forth for it. I don't know. I doubt that they're far off from their guess. But what they've done is created an incredible opportunity. Now, let me explain what I'm talking about. Gamma is an option Greek variable. It's a measure of option price changes. You can kind of think of it as acceleration in option prices. I'm going to give you a couple of examples to help you better understand. But the thing to remember right here is just that higher gamma equals more rapid price change, okay? So we're looking for options that have higher gamma if, in fact, we want to be able to exploit that price change. Closer to expiration means you're going to get higher gamma. Prices are going to change more rapidly when you get closer and closer to the option's expiration. So if the option expires today, zero DTE options, that's going to have the highest gamma of all, right? It's also the case that you get higher gamma when you're closer to whatever the price of the stock is. This is what they refer to as at the money. So at the money options that are expiring on the same day are going to have an extreme sensitivity to any kind of price change. So that's what I'm talking about. Zero DTE, at the money strikes, big opportunity. Let me show you more precisely what I mean from a recent example. This happened just 2 days ago, 48 hours ago, less than 48 hours ago. Google is doing this. I've got the price chart up here on the screen. The top line is Google. The bottom line is the option price that I'm comparing it with. Now, a typical option play is somebody wants to say, well, Google is going to go higher. I feel confident. So I'm going to buy a call option on Google. Maybe a little bit out of the money that, a little bit higher strike price, with the idea that if Google's at 300 today and it goes to 310 or 320, I can buy an option to capture all that move and spend a lot less money than I would have to buy Google shares, right? That's the idea. Well, look at what Google does on Wednesday, February 18th. It moves a total of about $4. $300 stock moving in a range of just $4. That's about 1.25%. Hardly anything. This is a boring, sleepy day. I want to draw your attention to the very end of the day. That option, 305 call, which expires about 45 days out. You want to give it enough time, right? That's the typical thing. That option has a 10% price change, even while Google is making just about 0.5% move. So Google shares move from 301.5 up to about 303, 302.5, 303.5, somewhere in there, just in that final half hour of the day. And that option goes from $9.50 to about $10.50 at its peak. It's about a 10% change. Well, now compare this. On zero DTE options, you have more granular strike prices. And so we can get precisely at the money. A 302.5 call, which isn't even available clear out in March, but was available on Wednesday, that thing was priced at a low of 5 cents right before Google made its little move. Now, that move was nothing. That move happened because institutional market makers and people holding large shares got to kind of equalize their shares for the day. So they had this big downward move for a couple hours right before the end of the market, right? A lot of people picking up shorts, and then they got to get rid of them. So they just sort of buy to cover, just get themselves out of their positions, and the price moves up. This is natural market move, prices breathing in and out, so to speak. And yet, look at what happens here. A 1,200% change. 1,200%. That's not a typo. We go from 5 cents to over $1 and settle back down at a little bit lower than $1 there for that day. Now, that is kind of lightning, a strike right at the exact spot. There are all kinds of options. How would you know? How would you know to be sitting there and grab that one particular option and get that big move? Well, that's the thing. This is the reason I'm showing this example. I did. I was watching the market on that day. Now, I didn't buy only that call. I bought the 302.5 call with about an hour and 20 minutes left to go. Bought it at 60 cents. But then as it dipped down and got to the end, I realized I could add on to my risk just a small amount by adding a 7-cent option. That's what it was at that time at 15.27 there. And between those two, I had a averaged cost basis of 27 cents. And within about a half an hour's time, this thing went to 63 cents. And I did quite well. On a $1,000 risk trade, this yielded about a $1,500 profit. It's one thing to be able to look back in hindsight and do that, but I was doing this in real time, watching these, documenting these, and communicating with my trading buddy. And I realized this might be a replicable example that can be traded. I don't know for sure, but I'm going to start experimenting with it. So I'm calling it the Gamma Experiment. Wednesdays, just like this last Wednesday, Wednesdays at 2 o'clock Eastern time, I'm going to try to do these kinds of trades in real time to take advantage of the gamma opportunity that zero DTE options on Mag 7 stocks have created. See, market makers have been putting out zero DTE options on SPY, QQQ, IWM, the big index ETFs, heavily liquid and so forth. The thing about those ETFs is they move at a less volatile, or they have less price change in terms of percentage than the Mag 7 stocks, individual stocks do. So these large cap individual stocks, they're going to make moves that are a little more rapid than the option market makers are used to pricing in. And I don't think that they have a way to account for how much gamma risk they will experience as a result of this. The question is, can somebody like you or I, just an individual trader watching from wherever you might be, I'm in snowy Salt Lake City, but could you look and watch the markets and just make a simple exploitation of that price change in anticipation? I think it's going to be possible, and I think we're going to have a good time showing people how. So I'm looking forward to that. Steve and the Quasar Markets team has graciously allowed me to put this experiment live in front of you for free. And we're just going to do this for a little while. And we will be paper trading, but it will be with live data and something that you could actually follow along with. It's educational in nature, just to see whether or not the retail trader has a loophole in the markets through gamma exposure.
Yeah, Gordon, let's talk a little bit about yourself, because I think everybody needs to know about yourself, man. I think so many people, in our cases as traders, who are we and what are you? Have been in this game a long time, like me. You know the world of trading, and you've built a product that I think is awesome. And that's why I built Quasar Markets, to put people that are actually know what's really going on out in front of people's public, and to do this the right way. And Gordon, you got to talk to me a little bit about yourself. How did you get started in trading? Let's go way back, like you and me. Let's go way back to the beginning, if our memories are still service as well as it used to, and talk a little bit about how you got into trading. We got Andrew Johnson, our producer, right? He's played baseball at school, and how you guys got to meet, and the whole world. So I'm going to let you talk a little bit about your background, why you are the person to bring Edge Finder to us, and what you're doing.
Oh, all right, thanks. Personally, I got started trading out of a crisis moment, clear back in 9/11. I had just the month before been in a situation where I was working for a tech consulting company, and we were benefiting from all of that Y2K spend, and it was running up, and I thought, this is great. This is an excellent career move that I've made here. But by summer of 2001, all that money had dried up, and I was thinking, this wasn't such a smart idea. And I found myself out of a job on 9/11, and I was wondering what I'm going to be doing next. And my wife is calling at me from the other room saying, hey, you got to come see this on the TV. And I come looking at, why are you bothering me, right? I look at those pictures that, everybody has seared into their memory from those times. And I saw the smoke going up off the towers, and I thought, wow, this is a real crisis. And that, little business about crisis and opportunity being in the same place, I thought, well, okay, if this is a crisis, is there an opportunity here? And I thought to myself, I have been interested up until that point. I had been, working with my own 401k nest egg. And I'd done pretty well in the previous, 10 years. I had doubled the account over and above the contributions just by making individual trading decisions. That is, getting in, getting out of the stock of the company I was working for through that period of time, which was IBM. And so I would trade IBM stock, but it wasn't, rapid. It was, I'd get in when I thought IBM was relatively low, and then I'd hold on to it for 6 months to a year or so, and get out when it was higher. And, like I said, over the course of the time, in addition to my contributions, I also doubled the performance of the account through that time. It was about a 5-year period where it was big enough to do. And
yeah,
so
when you asked that, Gordon, about getting things out of a bad time, and how, talk to me a little bit about that, right? How did you know that it was actually a bad time? I mean, I get the situation, right? But you made a very conscious decision, and that takes some guts, I think, a lot of times. And I think traders need guts, right? Sometimes.
Yeah, well, no doubt. I mean, I was looking at the situation, and I said, most of the time when really big bad things happen, it seems to me that markets overreact. And I didn't know as much then as I do now, but that's all the more true in my experience with trading and markets, was to realize that, hey, the market is going to overreact. People are going to panic. It's something new they've never seen before. And once they're done panicking, that's where the opportunity will show up. And so that's when I got myself started actively trading. And that was November of 2001, November of 2001. And I made 50% return on my account in that single month. And I thought, look at me, I'm so smart, right? Well, it turned out that month was the best single month in the history of the NASDAQ up to that point. And so I was really benefiting from a mini bull market. But I had a lot more to learn through that. I continued to trade and refine my circumstances and trading abilities, to the point where in 2008, at the end of 2008, I was up 9%. Now, that doesn't sound like a lot, but if you remember, most people were down about 40 to 50% in their portfolios during that period of time because markets were crazy. But I had kind of anticipated that it was coming, and in 2007, moved all my money to cash and just made half a dozen trades throughout the year 2008 in gold, and it worked out very well. My neighbors came around and asked me, like, Gordon, what did you know? What did you see? What did you? And one particular neighbor, he was a genius programmer, and I told him a little bit about how I have a trading plan. How much do you risk? How much you're trying to get? What amount are you going to put into it? And he had never heard any of those kind of things before. Well, fast forward to just 3 years ago, he comes back to me and says, I've been working on this project, this software project, for years. And I don't know what to do with it. I don't know where to take the next step. Would you be interested in partnering up with me to try to improve that? That was the genesis of the software that we call Edge Finder. The website is myedgefinder.com. You can go check it out there. But basically what we've done is we've found an incredible way to both back test and forward test individual stocks at a rapid pace, so that we can come up with trading solutions that are machine learning based, deep machine learning. You come up with a signal that derives from a chart so complicated a human can't even read it. These signals come out and they give a zone of, hey, here's an area where it's long, here's where it should be short, and here's what we call the dead zone. You don't make any trades in there. So we're experimenting with that, overlaying it on the market situation right now, and it looks like it's going to have very promising results. It's one of the things I'm excited to experiment with as we do this thing on Wednesdays.
Yeah, Gordon, it's interesting when I look at the markets and I just see all these algo trades. It's all all this computer trading, And sometimes those algos get it wrong, man. A lot of times they get it wrong, right? Because they're just hitting on headlines. And we just saw the headline coming out about the Supreme Court striking down the Trump's tariffs. And it went both ways, right? The algos didn't know which way to go. They didn't know where to buy or sell. And yet, Gordon, you've got a machine now that helps people wade through that nonsense, kind of see what's really going, because price dictates, as our friends always say at CMT, and it does. And here we go. So how did you know to wade through that and to pick, not be the algo company and actually be a smarter move on that?
Well, what I've understood, what I've come to learn through my years studying with the CMT Association and working through the curriculum of the CMT Association for 4 years, I was the guy who had to say, here's what the test should have on it. Here's what the curriculum for the test should be. These are the things that professional chart readers and institution level forecasting guys who use technical analysis or fundamental analysis or both, which is pretty much the way it is nowadays. Everybody's using both. They're looking at this and saying, how do I use this on a realistic professional scale? And so as I did that, I realized the most important thing was not forecasting, was not trying to say, oh, I know where the price is going to go next. The most important thing was managing risk. But can the technical studies actually help you manage risk? Well, they can if you start with one single assumption, that is that the market's prices are randomized. That's where we needed the help of the machine learning tool. Because if markets are random, you would think, oh, well, you can't get anything out of them, right? No, turns out there's a deeper math, a probability math. It's something we call the arcsine law. It's a little bit heavy to get into, but what happens is prices, even if randomized, are more likely to trend away from where they are at any given moment. And if so, what's the best way to exploit the move when it shows up? That's the question we tried to use EdgeFinder to answer. And we found that using the tools of technical analysis, just technical analysis alone, we've come up with 200 different sets of rules, coming up with which would generate an astronomically large number of possibilities. And that's what EdgeFinder sorts through and says, here, for Microsoft, for Tesla, for Google, for SPY, here's a way you can trade it and exploit the price action. And that's been really exciting. Over the past 2 years, I've actually managed 4 different model portfolios based on this, and they've all beat the market. And it's kind of exciting.
Yeah, and what's cool about it is, our partnership with the CMT Association. Of course, everybody here knows Tyler Wood is also on the board of Quasar Markets, and this partnership's great because one of the cool things about it is you guys are the ones who do all the real stuff, right? I mean, I think people love that, right? This isn't like some kind of hokey pokey and who's the guy out in North Korea making algos for us to play with. You guys are the real deal, and I love that, and I think that's very cool. Let me ask this last question before I let you go, because we got an extra coming in. I'm looking at this too. Your friend as well, Vincent Rendazzo. Let's talk about this, Gordon, before I let you go. One last thing. I've been asking people the question, come summertime, up or down? S&P, what you see it from here? What do you see? Wait.
I'm bullish. I think that we'll see a lot of fluctuation, but generally speaking, the market really doesn't want to quit. And you can tell that right now if you compare SPY and RSP. RSP is the equal weighted S&P 500 portfolio compared to the SPY. SPY kind of looks like it's anemic and about ready to throw up and just looks terrible. But RSP is just, quietly moving up the stairs. That's the difference between the Mag 7 stocks, the AI trade, and everything else. You look at sectors, basic materials, defensive stocks, all the boring stuff, it's moving higher. Those sectors don't move forward in a market that wants to give up. And I feel like what we're seeing is the shine come off of the AI trade, the battle between Google and NVIDIA It's having to play out, and people are sort of realigning their capital allocations based on those competing technologies. But under the covers, hey, I mean, I know people like to complain, but I think things are actually moving along pretty good here.
Yeah,
No,
Gordon,
there's a lot of geopolitical roil, but in general, I'm bullish for the summer.
and you think about it, Gordon. There's $9 trillion in money on the sidelines. Does Edgefinder also factor all that into as well?
Doesn't even have to. That's the crazy thing about it. We assume people are going to just work in their own self-interest, and the cross currents of people buying and selling are going to keep the markets doing something similar to what they've done in the past, and that is be efficient, be difficult to predict, be something that looks like random. And within that, the nuances of that, we can find moments to exploit.
I love it. I love it. Well, Gordon, I'm looking forward to seeing you. Pretty much, you got a lot of time here at Quasar Markets. I love that, and we will see you in the next one. All right, folks, I've got a good one coming into you. Listen, when I talk about the markets and I talk about the professionals coming in, that's what I mean, the Gordon Scotts, and I got another one coming in. I love this one, Vincent Rendazzo. How are you, man?
Steven, I'm great, man. How are you been, bud? It's been a couple months since we've seen each other.
That's right. What I love about it is the Quasar Markets portfolio, how we bring people in here and what we're doing and growing this thing. And I'm looking forward to this. I'm looking forward to seeing what you got, what you're going to talk about today. But before we do that, everybody always wants to know about how they got started in trading. So I'm going to ask you the same thing. I'm going to ask everybody today how you got started, what you're doing, and what you're working on now. And I'll get out of your hair, man.
Yeah. Well, thanks, Steven. Yeah, it's great to be with you, man. I mean, I've watched what you've been doing the last few years. I think it's incredible, and I'm really, I'm obviously in your corner as a fellow CMT. So yeah, I mean, a little bit about me. So I started my career in 2002. So really awesome timing because that was the start of the most recent lost decade. So I started in equity research sales at Morgan Stanley. So our job was to sort of, digest the research call and get it out to the advisors. And very early in that time period, I got introduced to technical analysis through my colleagues, and also Rick Bensinger, who was the technician at the time. He had taken the place of Phil Roth, of course, about a year before I got there. So and of course, Rick ended up being sort of the person who spurred on the careers of Katie Stockton and Mark Newton, who both worked for him at some point during that time I was there. So that was sort of how I got started in the game. And again, very quickly realized that from a risk management perspective, you needed something there. And what I thought was best, or what I came to the conclusion what was best at that time, with fundamentals sort of failing, right? Because there was all these sort of pie in the sky numbers when it came to what these companies were going to do in 2000, 2001, 2002, which of course didn't come to fruition. And I thought that technical analysis, and I had been shown that hey, technical analysis really has some value here and can help you, especially from a risk management perspective. So that's sort of how I started my career. And subsequently, I had sort of jumped around. I had gone to UBS in a kind of a similar capacity. Got my CMT while I was there in 2008, and then moved to the institutional side for a little bit as an analyst, a desk analyst there, where I was able to incorporate technicals into what I was doing, which I loved. And then ultimately, was kind of looking for a move. I had worked for NASDAQ for a while on their market intelligence desk, and decided for my family's sake, I needed to get out of New York City and wanted to get to a warmer climate. So ended up hooking up with Lowry Research, who of course is the oldest technical analysis shop in the country, and I've been publishing since 1938. Was lucky enough to work with Paul Desmond and have him sort of be my mentor for the first several years that I was there. Richard Dixon was another person that was really important at that time in my career working there. And then just in the last year, about a year ago, I started my own firm called ViewRight Advisors. And what we do is we sort of take the whole view as far as market breadth, because that's really what I got into. as my specialty within technical analysis. I think we all sort of at some point get into some sort of a specialty, whether it be momentum investing, whether it be pattern recognition, candlesticks, Elliott wave, whatever. I think that we all sort of look for our edge. Where do we have the best value added? And for me, it was breadth. That was my answer, and I created a system around market breadth and particularly sort of the ability to dial up and dial down risk based on breadth. And historically, looking at 100 years of data and what all these divergences in breadth have done in the past and what that's meant in history, how do we divide the market into distinct sort of regimes based on expected return and risk? And that really is what I've been concentrating on in the last year. And of course, there's always something new coming. For us, in April, we have an exchange traded fund launching in partnership with an RIA. So more to come on that. It's going to be the Tamarisk Defender Risk Adaptive 500 ETF. So it's on the S&P 500, and it's going to be sort of that risk management framework around that. So you can sort of be tactical inside of that ETF wrapper in a tax advantage way, right? So that's the idea. But again, we're just using market breadth. Really unique. Nobody else really does this. Certainly not the way that we do it. So that's kind of where we're at. We really believe in what we're doing and see tremendous value. And of course, within the context of the last 15 or 20 years almost now, we've had a secular bull market. Hey, it's been great. We've still been tactical at times, but at the end of the day, we know historically a secular bull market is always followed by a secular bear market. And not that we see that coming right now, but that is certainly, we're getting a day closer to it, as we pass in time, right? I mean, that's just that's the history of markets. That's how it works. And, there's nothing wrong with that, but you have to have a plan. And we're trying to help as many people as we can in the way that we can help them best through our analysis.
Yeah, Vincent, and one of the cool things about you, and I talk about this with Gordon and yourself too, is that the professionals, right? And there's this feeling that from the retail side that, I don't need a professional because I know it all. I mean, Vincent, when I started in this business, I thought I knew it all. And the first thing I learned was I didn't know anything, right? And as I grew in the markets, 35 years, same thing with you, 20 years of institutional risk management. I mean, to me, that just tells me everything I need to know about you as you started this new company, viewright.ai. And I mean, look, folks, look, the head of technical research is Sifra. I mean, if you don't know what Sifra is, explain Sifra to people, but Lowry Research, you are the guy who did it, right? And that's the key when I talk about market makers and the people. Sometimes it's the market makers or the people that, I don't know who that guy is or that girl, but they're just institutional. I don't care what they have to say because I'm playing zero DTEs and I know what I'm doing until they lose all their money, Vince. And when I look at this, I go, yes, this is what I want to know. I want to know what you're thinking, what your mind. I may not agree with you. Right. But I want to understand what you're having to say. And folks, if you don't know, do it right now. Viewright.ai. I'm going to put it out there for you. Please, please, please give Vinny. I'm going to do it right now. Make sure that you go out there. Make sure you click on this link for him. Give him a follow. It's all out there. Man, it's a cool product, and I love it. That insights, you can't get that by going on Twitter. Folks, you just can't do it. You can't get it by going on some crazy stream of some YouTuber who's 12 years old and knows the markets better than you, right? It just doesn't work. So this is what I do like about this, Vincent. Talk to us a little bit about viewright.ai.
Yeah, so I kind of came at it from an insider's perspective. I was in research my entire career, and I was like, you know what? What's wrong with research? Well, the problems I have with research is it's sort of self-serving in the sense that we just want to smash your inbox as much as we possibly can. We don't really care what you do. We just want to hit you with ideas constant. That's how we demonstrate our value. To me, I don't think that demonstrates value. That sort of that tells you you can give me quantity. What about quality? Anybody can do quantity, right? So I want to say, okay, well, why don't we just tell people what they need to know? And this product is designed for financial advisors, right? And then that's why we sort of invent the ETF is coming out to get to to get our strategy in the hands of individuals, because that's what we really want to do. That's what we feel really strongly about. Get this into the hands of individuals. So that's what the ETF is all about. And again, I can give you some information to pass along on that, we can sort of talk about. But yeah, so that was the main problem, right? It's just, okay, over flooding people with ideas all the time. That doesn't help anybody, right? And the other thing I had a real big problem with was, okay, well, let's say that the market is changing. There's sort of two types of analysts out there. I think there's one that sort of just always needs perma bull. No matter what, you just buy it. Okay. And then there's the other type, which is the best they're probably gonna tell you is, oh, we're getting more defensive right now. And it's just like, okay, well, like, what does that mean? Are you going full cash? Are you taking half off the table? Are you doing nothing but you're gonna be buying some puts? Like, what does that mean? And have you tested it through history? These exact conditions that we're seeing right now, what's happened in the past? And then how would you want to be optimally positioned based on that? So I just did that. I basically said, okay, here are the conditions I've broken down for breadth. Here's extra healthy breadth. Here's deteriorating breadth. Here's deteriorating breadth number 2. And then here's, poor breadth, bear market stuff. Okay. Yeah. In each one of these environments, how would I want to be invested? So I designed a system to give me thresholds around breadth using duration, rate of change, and magnitude for different factors within breadth to tell me what to do at each moment. So, we're selling a third, potentially going all the way to full cash if we need to, right? It's really rare that it happens, but it can happen. So, for example, back in last year, February 21st, we got a signal to sell a third.
Yeah.
So we had a note out to our clients. Defender is telling us sell 1/3. So we're not saying, oh, we're getting more defensive, or, oh, we see the possibility of a correction here. It's like, no, based on these conditions, again, it's quantitative. Right. Based on these conditions, historically, this is what the model is telling us to do, right? So being really specific about, where we're at, and then again, not pounding people with tons of notes that's just going to confuse them and turn them around and get them to do what we want to do. Because I was, again, on the institutional and the research side, our idea is like, okay, well, we want you to trade with us, so we're just going to keep pumping with you ideas, and some of it's going to hit you, and you're going to do it, right?
When I watch TV and the fintech stuff and the finance and all, and I love it, right? Because we're part of it, Vince. But sometimes they don't always. You're right. They don't always tell exactly what they're doing. Oh, I'm very bullish on Nvidia. Well, how are you bullish? Are you bullish because you're buying options? Are you bullish? How far out are you bullish? They don't ever give that direct information about exactly what they're doing. And even I'm guilty of it. Even in my own trading platform rooms, I say, yeah, hey, I like Oracle here, and I do, and I don't always say, okay, well, here's what they do. I have to go back and they go, well, what'd you do, Steve? And I have to do that with your platform, with you, right? You actually give the whole signal, how to do it, what you're doing, and it gives you a much clearer picture, and I love that.
Yeah, and we're positioned, we're focusing on the market broadly. So sort of like your asset allocation, your allocation to equities, this is how we think about it, right? So we're not talking about any single stock ideas. We're not talking about sectors. The way we see it is that, hey, there are a lot of people who do that kind of stuff, and they do really great work. So, hey, there's plenty of people in that sandbox. I don't want to compete in that sandbox. That's not my edge. I know that, right?
Right.
That's my edge. I'm at the top of that game. So, why don't I just try to help as many people as I can from where I could be helpful? Right? That's how I see it.
And Vince, if you got a chance, I'm happy to let you present your platform to everybody. If you want to click the buttons down there on the present button. But I'm sure that Andrew can probably help you out too as well. But click on the present. But what's really cool about all of this and what we're doing here at Quasar Markets is putting people that are the professionals that actually do this day in and day out and actually are the real deal, right? They're not just, oh, I'm going to go play 0 DTEs with my $500 account, right? I mean, I'm okay with that, and I like that, and I'm here to help them. But I also feel like in a lot of ways that we're here to help them in a way that is exactly like this. What's view right, it's professional. I'm going to get out of your hair again. I'm going to let you do your thing.
Yeah, I mean, so this is not our platform. I just want to show you some of the things that I like to look at. I use Optima. Shout out to them. They've got a great system built by CMTs for CMTs for professionals. I love their product. I use it every day, and this is one of the charts I like to look at. Again, I want to look at overall market health. So what do I want to see? I want to see the most amount of stocks pulling in the same direction as I possibly can. And I want to watch that really closely. So one of the things I like to look at is I take the Russell 3000. So I have my top chart, Russell 3000, just a simple price chart, no lines on it, nothing, simple. Bottom though, I've got the percentage of stocks in the Russell 3000 that are above their 20-day moving average, that's in yellow, 50-day moving average, that's in green, and then the really important one above the 200-day moving average. What do I try to determine? Well, I want to know how many stocks are in uptrends in the short, the intermediate, and the long term, and how does that relate to where we are going directionally, and where we've been, and then what does history say about that? So if I'm just looking at this chart right now, I can see that 61% of the stocks in the Russell 3000, which is basically the Russell 1000, which is a large cap index, plus the Russell 2000, which is a small cap index, and you're putting them together. So it's really biased towards small caps if you think about it. And the fact that you've got pretty decent number here, 61%, demonstrates to me that things are actually going okay. They're probably better than a lot of people think, and they're still improving from the low that we had back in April. So they're actually still getting better. In other words, they're not diverging yet. And this is really key to what our philosophy is based on, right? Is that the market will give you time. The market gives you chances to get out if you know what you're looking at. So I'll just take you through history here. So this is back in late 2023. You can see this number hit over 70%, and then it just kind of bounced around. I'm talking about that red line, the percentage of stocks above their 200-day moving average for the Russell 3000 stocks. This number just bounced around at a pretty high level for a long, long time. And then what's really interesting is that you get this big divergence, right? Where on this high here, you had, let's say, 66% of stocks above their 200-day moving average. But by the time you get to the all-time high in the index, the S&P 500, that number's down to 54%. So that's a negative divergence. That just means that because this market, this index, the Russell 3000, as is the Russell 1000, as is the S&P 500, is market cap weighted. Okay, what happens in a market cap weighted index? Well, the biggest stocks get the biggest weight. That's just how the math works. There's nothing wrong with that, but you need to know that when you're looking at it, that it's not necessarily going to track the health of the market all the time. At the end of bull markets or right before corrections, you're going to see divergences that show up almost every single time that warn you and tell you, okay, now it's time to start being more selective in our own portfolios, whether that's through adjusting the beta in your portfolio or actually raising cash. We prefer just to raise cash because it's just cleaner, and that's what we do. But this is just an example of one of the items I like to look at, and it's something that gives me a lot of information in one chart. And because I know how to look at it, and I know the history of this data set, I can discern when it's valuable or when it's actionable and when it's not.
Yeah, and I like the part of this is that it's not just one stock or one indice. You pretty much have the whole gamut, right?
Yeah. I mean, I also like to look at the S&P advanced decline lines. I like to look at all flavors of breadth, right? So I got my S&P 500 advanced decline line. I got my S&P 400. So I got my large cap with my 500, my mid cap, my 400, and then I've got my small cap, the 600. And then I've got the 1500 in the top right. That's going to add all three of these components together. And what I like about the 1500 is that it's not biased towards small caps, not biased towards large cap. It is really all cap. You pretty much have an equal weight in each one of those categories, large, mid, and small. So you get a pretty good sense for what the market is doing as a whole, not just one segment of the market. And I think what's compelling right now here is that, this is not a new story, right? The S&P 500 breadth looks great, right? That's not new. But what is really great to see and encouraging to see is the fact that you've got the mid cap AD line also making new highs, and you've got the 1500 breadth also making new highs. Now, small cap breadth, the S&P 600 breadth, it's really been a laggard, and this is not new, and that's why this is not an alarmist message to me. So I'm going to take you to a different chart to help you conceptualize this a little bit better. So now I've got in my black line, I've got the S&P 500 AD line, and then on my green line, I've got the S&P 600 AD line. And this goes back all the way to 2011. I can take it back further here. So go back to all the way to 2008. You can see that they move pretty much together. And I think you can also even make the case that
it's bullish, right?
Yeah.
It's bullish. I love it.
They move together, right? But now check this out. What happens when we get to 2021? That's the last time we saw a high in small cap breadth. So for 5 years now, there's just been this disconnect for whatever reason. Again, I'm a technician. It's not my job to figure out why. I don't care. I want to understand how to interpret it. So, and what does this necessarily mean? I don't know what it means necessarily, but I just know what this means is that I don't want to really be making new friends in small cap land when my AD line is kind of looking like this, right? And if I knew that information, if I was aware of this, then I would say, okay, well, that's my bias. My bias is toward larger cap securities. And that would have been a great thing to do because, small caps in general have been really, really difficult as stock pickers, as we know. Right now, what I think is interesting
you must be saying something good. We got like a lot of people coming in the show, man. You're very popular. I love this. Yeah, for those of you out there, thank you so much for watching Quasar Markets Live. Hit that like, subscribe, retweet, and go. I mean, Vince is awesome, and he's telling you exactly what you need to know, right? I mean, this is not just some rando talking about it. This is a CMT Association member. He is the real deal, folks. And when he's talking about these numbers, he's telling you not that he's just bullish, but explaining why and telling you exactly what's going on. So Vince, talk to me a little bit about, and I've been asking people this question, come summer, are you more bullish than you are bearish come summer?
Yeah, and I'll show you one chart, one chart to that effect too. And it's going to be similar in thematic to what we talked about before. And again, like for me, I'm just big picture, right? So just kind of bear with me. So I've got another chart here for you. Again, I'm using the S&P 1500 from a different perspective this time. The black line with the blue histogram at the bottom, this is going to show me how many stocks in the S&P 1500 are within 20% of a 12-month high. So basically, how many stocks are not in bear markets? If you want to think about it that way, you can, right? And then on the top line, my green line is the S&P 500 price. So I'm comparing an all cap breadth index to a price only, large cap only index. And what I think is really interesting right now is you can see that the S&P 500, the price index, has been kind of languid, right? I mean, since the end of October, it's been not much progress has been made. But what's really kind of cool to see and great to see as far as general market health perspective is the fact that these percentage of stocks that are within 20% of 12-month highs in the S&P 1500 are exploding to the upside. I mean, there are plenty of stocks that are looking great, and especially in relative terms. Again, you can just visually see that. You don't need to be a technical analyst to see this, to understand this. But like from this low here, this was not even a 5% pullback, right? So from this low here back up here, we had a huge move in the percentage of stocks that are within 20% of 52-week highs. So that number went from 47 all the way up to 72% in a matter of 2 months. Now that's a really tremendous move, especially when you don't have much going on in terms of the top line index, right? So I mean, this is all really, I think, encouraging stuff. And again, just looking at historical perspective, something I always like to do. Okay, great, that's what it looks like now. What does that tell me about what's going to happen in the future? Well, I got to look to the past to tell me, okay, what are those conditions? When those conditions occur, what does that mean? Well, this blue histogram above this green line here, which is about 55%, shows me that, well, once this number gets above about 55, 60%, it tends to stay up there for a long time. And then you can get very long divergences, negative divergences before you have an actionable top. So for me, the fact that this number is still climbing, it just tells me that we're in good shape for the time being. Again, every bull market has an expiry. Every secular bull market has an expiry. We're getting closer to each one of those every single day. So I don't know what to tell you. I can't tell the future. I don't know exactly when it's going to happen. But hey, listen, that's how cycles are. You just have to accept that.
I feel like Michaela Schifrin winning the gold LFG right now, man. I mean, it seems bullshit, but you have a real thesis and a real play here all the way to summer. So it's just not just backing it. Oh my God, I want to stop right now. Thank you so much for watching, guys. We're hitting all time. This is awesome. We're now the #1 watch show right now. Looks like on all of FinTech. I want to say thank you so much. Oh my goodness, we're pushing higher now, fast. Vince, man, I have to ask you, man. You're so popular. Will you be on here quite a bit now on Quasar Markets Live? I love this.
I'd like to come back, man. I think we have a good rapport. Hey, listen, I'd love to come back anytime. When the ETF comes out in April, I'd love to come back and talk about it. Again, our goal is to help as many people as we can and share the knowledge we have with those who need it the most. So
yeah, I'm not letting you go. I'm not letting you go right now. I want to keep you as long as I can because I love this. Wow, folks, with this, I just want to say thank you so much. The numbers are exploding right now. Thank you. Make sure you like, retweet, subscribe, follow, whatever you're seeing us on YouTube, Twitter, LinkedIn, wherever you're at. Make sure you're with us. We have Media Day. This is an exciting day. We've got we got people that you see on TV all the time coming. People like Vincent, Gordon. We got we got names of TV names coming a little bit later. We're not going to stop this show all day long. We're going to go all the way to the end. Hell, I may go all weekend. I don't know yet. Not even go boating this weekend. I don't know yet. You should go boating. Vince, I got to ask, when you see these markets and you see these tweets and you see the news and how do you go, okay, you know what? I want to turn all that nonsense off and I'm going to focus back on charting, which is what I love doing. But charts aren't everything to me. I like the thesis side of it. I get that. But what when you put charts together, what are the technical indicators that you love the most? You like John Bollinger? Do you like RSI? What do you like?
I used to be really into a lot of the price derivative indicators early in my career. The more and on singular stocks, I still love to use those. I still like to use your MACDs, your RSIs. I love pattern recognition. That's big for me on singular stocks. But when I'm talking about the market and the index and broad market health, there's nothing else than breadth that I want to see, right? So I want to look at the New York Stock Exchange Advanced Decline Line. I want to look at the S&P 1500 Advanced Decline Line. I want to look at those percentage of stocks within 20% of new highs. I want to look at those percentage of stocks within above their 200-day moving averages on various indexes. Those are the types of things that I go to when I want to make those big, bold calls and sort of get out of the way when I need to.
Yeah. How do you make those decisions? Like, okay, today I'm going to put on Elders Force and today I'm going to change it up. How do you make those decisions?
I mean, on the single stock basis, I don't really do too much of that now. I mean, just really in my personal account type stuff. I like to look for, I'm a base guy. I like base breakouts. I like breakouts. I like momentum. I like relative strength on a single stock basis. I think that's the way to go. I think Gordon was great talking about, his views on momentum and momentum investing. I think that's brilliant because, you can test that. And I'm big on quantitative, you can test it historically and understand this works and you understand why it works. I mean, it's really simple. And sometimes the simpler the solution, the better the solution. That's why I love breadth. It's so simple. You can't even lie to it if you wanted to, right? So to me, that's huge.
Man, Vincent, you must be the most popular man on the planet right now. We've just passed up Reuters. I mean, everybody's watching us today. I love this. It, yeah, let's keep this going. Okay, so let's talk about you and I. We have something in common. We love the sunshine. We can't stand cold weather. And
yes.
And we live in Florida. Do you think, especially you're on the East Coast of Florida, are there a lot of traders over there on the East Coast of Florida?
I mean, you know what? It's becoming a bigger community. I think every day, right? I mean, there was a patch time after COVID where it seemed like we were getting 100 people to the town every day, right? But I think it died down a bit. But certainly, like West Palm Beach has become a kind of a hub. Boca and Miami have really blown up in the last 4 or 5 years in terms of our industry, whether it's traders or hedge funds or whatever. I mean, the community's growing. And as a transplant myself, I kind of throw my arm around the new guy and be like, hey, it's better here. Trust me. Don't be homesick.
I love it, Vincent. I love it. And I'm glad you're friends. And I love the community of CMT and the professionalism of the CMT Association. Of course, we love them. And the chartered market technicians, if you don't know, guys, if you don't know right now, the numbers are pumping. Make sure you retweet, repost, like, subscribe. We've got a lot of people watching. I think, Vincent, I think you're Mr. Popular today. And I've got my other friend coming in now. So, Vince, I'll let you go. But I'm super excited about today. It's awesome. I love all the things that I've been working on. And Vincent, you and I have been doing this for a long time. So I appreciate all the help. And I look forward to seeing you next week. Let's get this thing going.
Yeah, thank you for having me again, Stephen. I love it. I think you're doing a great thing here. And I hope your audience got something out of it. And I want to be back. So, let me know. We'll do it again.
Every time. And I think our producer Andrew is watching, so I'm going to have Andrew make sure that you are on the list weekly here too. All right, Vincent, thank you so much. Vincent Rendazzo, make sure you hit viewright.ai, folks. All right.
Thank you, sir.
See you, my man. All right, the Quasar Markets Live. This is one of the parts of the show that I really love to do because we are about to take this Quasar Markets, the company itself, to the next level. And this is what I've been dying to show everybody of what we're doing, what we're working on. And I get to bring in my friend. I'm just going to do it this way that I like to do it. I'm going to bring in, this is going to be fun, folks. So get ready for this one. I'm going to pull it up so you all see it. And here we go.
I like that.
You like that? All right, folks. This is a very special time for me because if you don't know, of course, 35 years of my life I've dedicated to social and great things going on. And of course, we're building Quasar Markets Live and Quasar Markets itself to really change the views of the world. And I am super excited to talk about it from the fact that, man, you're the guy that I used to watch, Ron, and now we're partnering up. Let's talk about that. Quasar Multimedia. I'm excited about this. Ron Insana and I are going to help build a TV show here at Quasar Markets. How are you, Ron?
I'm doing great. And that, look, we couldn't have picked a better day to start this conversation. The Supreme Court just invalidating the IEPA tariffs that the president imposed last year. And you have the GDP that came in softer than expected, inflation stronger than expected. You've got the markets moving all over the place right now. And so I think, as we move to build out our video capabilities, being able to capture this news on a daily basis, fact check it in real time, and make sure we have some very high quality people, joining us in the process is going to be, I think, extremely important. And evolution, revolution, however you want to characterize it, but a new form of both business and general news television that, will be, I think, very, very high quality and very impactful.
Yeah. And there's just so many out there that I've seen. And I talk about this and I complain about it. And so many people say, put up or shut up, guys. So we put up, didn't we, Ron? You and I talked about this. This is something we've always wanted to do that's been missing in the markets. There's, the retail side of the institutional. There's not been a place where people can actually get to understand what's really going on in the market. It's being shoved down our throats, the news or some narrative or someone talking in their book. In this case, we really want to give people the truth and knowledge and understanding of how things actually work and why they work. Is that right, Ron? I mean, am I missing something here?
Well, yeah. Look, I'm certainly not going to trash any places that I've been affiliated with over the course of my career.
Oh no, that's all right. Yeah.
But yeah, look, I mean, I think from my perspective, there's always been a way I've wanted to do this, and there's a process and a group of people with whom I've wanted to do it. And I think over time, you'll see some familiar faces who will join us, and you'll see some new faces that haven't gotten the attention that they should have, who have unique ideas and who have differing opinions, and I think bespoke concepts that don't get necessarily enough airtime, if you will, that might help people change their minds about the way in which markets work, economies work, how geopolitics works, and so on and so forth. And so I think that's really important to widen the aperture, if you will. And bring in some voices that haven't been heard from before, but who have, truly novel and insightful ideas about all these different things and share time with them while also, building out I think a breaking news, team that will deliver, value added content that also becomes actionable as many other, networks, of course, have done and continue to try to do.
Yeah, and when we talk about it from our perspective, Ron, we're the old hands at it. We also want new people in here too as well that come in and say, hey, you know what, I've got a fresh perspective, maybe that the stalwarts of Wall Street don't have, and we'll have both, right? I've always wanted a place that was not pushing one agenda, but that was everything, right? The everything place. And I love that. And we're building an ecosystem where we're friendly to all the agencies, right? I love Schwab Network. I love CNBC. I love Bloomberg. I'm not, we're all about building the eco. All right, ladies and gentlemen, I just have to say it right now. Our numbers are popping right now. So thank you so much for this. Is exciting, Ron. Oh my God! Between you and Vincent, I think we're going to break some big numbers today.
You keep bringing the Italians in, and it's going to happen.
Us Irish people, I love it. Folks, if you're out there, please, we love this. Hit the retweet. Hit the like button, subscribe. And it's what's cool about this is we want to have also a place. I've always complained about this, Ron, that it's great to have talking heads, but they didn't have a place where the talking heads could answer questions out there. So if you guys have questions from Ron or myself, or we asked some really cool guests today. So I'm really excited about that. Ron's going to bring on some really cool people today later that I really am excited about.
We're going to have a little mini reunion at 3:30 today. It's going to be Sue Herrera, Tyler Matheson, Bob Bassani, and myself talking for a half hour. I think we're going to call it, I want that segment ultimately, if we can all do it on a regular basis, to be called Old Money. We've been around for a while.
I feel like where I'm from, Ron, we call it homecoming, like a church thing, right? Like it's gotta have dinner on the grounds and bring them all. I'm so guys, I'm so excited. The numbers are exploding here. Again, make sure you hit that that subscribe, whatever it is that you have to do, retweet it out there, because Ron and I are going to be together a long time. We're gonna build something cool. And it's something that I've always wanted to build. And I'll tell the story. I haven't seen Ron in a long time, and I walked off the floor of the New York Stock Exchange. And it was during Christmas time, and I literally had Michael Litt with me, all know him from The Big Short. Walk off the floor, and there we are. There's Ron. I gave him a big hug. Us gave him a hug, and I said, I thought about it. I was like, damn it. You know what? I got it. You know what? I know what to do. As everybody knows here, that's what I was saying. I know what to do. And I just picked up the phone of Ron. Hey, I got an idea. What do you think? I don't even think you hesitated, did you?
No.
Didn't even hesitate. I love it. Guys, if you don't know, we are now hitting all-time numbers and we passed up passed up all of fintech today, but we're now 4 times more than the other fintechs, and we are now passing up Reuters right now, and that's the tariffs of the president. So these are some big numbers here, Ron.
Yeah, and listen, I think that this news is important. I mean, the market's been all over the map. It's up now, but this decision by the Supreme Court, which by the way is quite complex. I haven't had a chance to go through it all because it's a multi-part decision. But what they did do is tell the president he does not have the power under the International Emergency Economic Powers Act to impose those reciprocal tariffs that were put in place last year. Now there are big questions around this. Do companies?
He said that I don't care what happens, I'm still going to find a way, right?
Well, there are 2 others, right? So there's Section 232 and Section 301, which deal with either unfair trading practices or national security issues, right, respectively. And so, yes, he can impose those tariffs, but they require a study by the Office of the Trade Representatives and determinations as to whether a country or company is affecting those areas. Then they're only limited in scope and size to 150 days. So this can't be the permanent thing. At one point, the president was talking about using tariffs in 1870 to 1913 style to replace the income taxes. He was talking about sending out $2,000 checks to everybody as the tariffs were collected. Now there's a possibility he has to refund $150 billion or so to companies that paid those import duties. And so we don't know exactly what happens. Now, clearly, I think what the market may like here is that if the tariffs are taken off, or at least this version of the tariffs is removed, then inflation could come down. Because what we saw from the New York Federal Reserve, and the White House was quite critical of this study the other day. In fact, Kevin Hassett was on CNBC and said that the economists who came to this conclusion should be disciplined for arriving at the conclusion that Americans are footing 90% of the tariff bill, whether it's American business or American consumers, pushing inflation up. If they're reversed, inflation comes back down a little bit, falls towards the Fed's target. That could be really good news. Allow the Fed some flexibility to cut rates down the road. We don't know, though, because the White House could come back with other tariffs and try this whole process all over again.
And it seems like, there's a lot of trepidation in the markets with so many people. Good Lord, folks, if you don't know, we are really burning up the numbers now. Thank you so much. Keep hitting that like button, subscribe. But, Ron, it seems like people are just nervous, and the market seems to be nervous too, especially on a day like today.
software stocks are down 30% because
Yeah.
you have AI CEOs saying that their businesses are going to eat SaaS businesses for lunch.
Yeah.
You have Anthropic CEOs saying that white collar entry level jobs, 50% of those will disappear in 1 to 5 years. You have private credit disruptions. While Blue Owl came out and defended its decision to a certain extent, constrain its retail investors from redeeming their shares when they're trying to push more and more private equity and private credit products into the retail channel.
And Ron, tell me the last time that happened when a company like that, what happened in the markets, right?
Yeah, and that's the thing. And look, it's not, from my perspective, it's not 2008 where you have systemic financial risk that the banks are going to fail, but the banks have been extending credit to private credit companies using the loans that the private credit companies are making as the collateral for the lines of credit. Now, that is a bit of a daisy chain that's, an echo of 2008. But I do think we have a couple of market problems out there that may emerge and, could shake the tree a little bit. I mean, you've seen some underlying weakness in the economy, even as we hover near record levels. So I'm a little worried. And you see this wild outperformance of overseas markets, right? I mean, the global Dow ex-US is up 8%. South Korea is up 34%. Japan's up 14%. We're flat for the year. We've seen this since through 2025 into early this year. So I think there's so much to talk about. And I think, again, widening that aperture too to include the rest of the world is going to be critical because we've got so many moving parts, trade alliances that are forming and breaking. The tariffs are having an impact on all that. Geopolitical risk with Iran that may very well, show itself over the weekend.
And yet the Nasdaq's up 1% today.
I know. Yeah. But it's up 1% this year. If you look at other countries, most of Europe's up 5, 6, 7%. They beat us by a wide margin last year, and Asia's up huge, right? So I wouldn't call it the debasement trade because I hate that expression. The dollar's not about to be removed as the reserve currency of the world anytime soon.
But that's what. But when you say that, you don't like the word debasement because we're the professionals, right? We really kind of know we're not setting the narrative. We kind of understand that they're setting the narrative, right?
Yeah. And look, I'll probably piss off some of the crypto guys, right? Because I still don't understand it. I've spent
I'm on the crypto side. So
I know you are. I know we have a difference of opinion here. I don't get it. And listen, I've been 1,000,000% wrong on price. I don't think I'm 1,000,000% wrong on use case. So that's where I think maybe, as a tradable vehicle, yeah, sure, whatever. Is it going to be the currency of choice going down the road? That to me is doubtful. And I also get into these, rather interesting arguments about, and with others who are in the space, decentralized finance was supposed to be the order of the day. They just centralized the entire process of cryptocurrency.
Yeah, but Ron, I heard that nonsense. Oh, what's the internet good for? Or what did Katie Couric say?
No. Okay, listen. You have to go back and remember when she asked that question.
She did.
I think AOL had just started, and Netscape had just started.
True.
And so we
That's
didn't know.
true, but
you had dial-up service.
My goodness, these numbers are flying, folks. Thank you so much, Quasar Markets. We love this as we're building this new thing we're doing, and we're gonna show a little bit of that later today. We have a new website, a new platform coming. We're gonna talk about that too. Oh my God, I can't even keep up with the numbers now. So this is exciting, Ron. Tell me a little bit about what is that you're most excited about building out this show, and I'm gonna leave it to you, man.
Yeah, look, I think to the extent that we are going to build out the functional equivalent of a news network, that is largely focused on, business, but does extend out to other topics that have an impact on the market community, the economy, the business environment. I think that, and having the luxury, if you will, of you giving me some autonomy in choosing the structure, the formats, and the people to be involved with it, is very important to me. So that's very exciting. It's something I've wanted to do for quite a number of years. And I think, look, one of the things that's going on is, as you well know, is there's massive disruption in legacy media. And what that has meant on the one hand has been, obviously some serious pain for people, but it's also left us with surplus talent that is looking to, ply their trade. And some people out there are extremely good at what they do. And, they're looking at independent routes for journalism and hosting shows and so on and so forth. And I'm hoping we can access some of those names that people will recognize and bring their skills to bear, because I think, we don't want those skills to go to waste as people are, hunting around for jobs and trying to figure out how to do a Substack or something like that, which, I myself am doing. And it's an interesting vehicle. It's helpful. You get followers. but having a coherent, cohesive lineup of individuals who can really raise the bar is something that I'm really dedicated towards doing.
And it feels like over the last whatever we've been lowering the bar.
Some places, yeah.
Oh yeah, you just got out of college. Great, you can go now run a whole presidency of White House if you want to. I just don't see that, Ron. I see.
Yeah.
I always say the first time I went to Washington D.C., I thought I was the smartest kid there, and the first thing I learned was I didn't know jack. First thing I said was, "How y'all doing?" I learned very quickly that I was not the smartest guy in the room.
Oh, by the way, if you are the smartest guy in the room, you're in the wrong room, right? That's kind of the whole point, right? You want to bring all those people who are smarter than I am, or the people that would be running the shop, and let them do what they do well.
That's right.
That's let them bring it.
Yeah, and it's always been my philosophy is hire smarter people than you because it'll always work out better, and that means you, Ron, in my case. And I'm very appreciative of the friendship that you and I have had, and I look forward to what we're building, which is really cool together. And we have some great partners, financial partners. We have some great things that are happening behind the scenes that I really can't talk about yet, but we will be showing that. And that's how we're doing this. We want to show the world that something bigger and better is coming. Not the same nonsense as we've seen so far, but something that we can build that's cool and together. I want to build an ecosystem together. I've always said that, there's no reason, there's lots of money out there. We can all be together. And I love that side of it. All right. And Ron, look, your Rolodex is damn near ridiculous. It's big. For those of you who are younger, don't know what a Rolodex is. That's a lot of contacts in your phone.
Yeah, right. Yeah, it's like having a Timex watch, right? I mean, I'm not winding it anymore. But look, I mean, I've been doing this 41 years, and so thankfully, and through the good graces of a lot of people that I've encountered, they've given me access to their brains, and that's important. It's interesting. I was on the phone this morning with a former ambassador to Israel, and we had a conversation that was really enlightening. And being able to pick up the phone and again bringing along people who can do that very same thing and get access to information that's extremely important and share it with the folks who are watching is, in my mind, going to be critical, because again, on the one hand, you just there's been and this is a critical statement to make. There's been a move to a certain extent in some places towards access journalism, and just having access to certain people doesn't mean you're doing a good job. We need critical thinking. We need the ability to dissect what people are saying. We need to challenge them in real time. We need to use AI tools that will fact check people in real time as well to supplement what we do and what we know, and to drive people towards deeper understanding by giving them links to various topics that we might be talking about in real time, where they can then go do some additional research and arrive at a conclusion that might be closer to the truth than just listening to somebody try to, filibuster an anchor or, kind of take control of the time and not give an answer when an answer is really required and would be very helpful.
And when as we build this out, what kind of answers are you actually looking for? Are you looking to go deep dive? Are you looking to be surface again? Or what are we looking forward to an actual?
No, so look, I'm looking at deep dives because, one of the things, the way in which I'm thinking of structuring this is much more content time and much less ad time. And so that's a very technical thing to get into with respect to kind of how even a quasi linear service will work. But, if you shrink the commercial time, and again, it's premium content, so you can draw premium dollars. But if you have 54 minutes of talk time, which includes reporting, which includes deep dive interviews, which includes access to information that's being generated by Quasar itself, that's also important because, you don't have to stop the conversation just because you're hitting a break, and a commercial break. And I think that's important. I think sometimes, in the course of my career, we've lost opportunities to finish a thought that's critical because of the economics of the way the business is structured. And so I think we're trying to a certain extent, rearrange that model a little bit to give more quality airtime to the people who will be joining us and still maintain, a business that can support itself.
Yeah, and one of the cool things about us is we want to bring it all on there. We want to give the opportunity to other people that wouldn't normally get that airtime, right, Ron? That we consider quality, right? You're gonna let me on? You're gonna let us on? I love it.
I'm kidding. I'm kidding, but yeah. I mean,
I'm happy to let it go to you guys. I love this. Yeah,
No, I think time is important, and again, I had an experience a long time ago where, I God rest his soul, somebody that I worked for mandated that I shrink an interview with a really important person to between 7 and 9 minutes. I could have talked to this guy for an hour. He's a very, very important individual. And our viewership, our audience would have loved an hour. It was that stuff for an hour. And so if we want to give somebody an hour, we're gonna give somebody an hour. That's the thing, and if it's value added content, if it leads to greater insights, if you understand the oil markets better, if you understand the stock market better, if you understand the implications of what's going to happen to the economy and your own personal situation, I think, you let it ride, right? You just let it ride and you get as much information as you can.
You make a great point. And like yesterday, I watched on CNBC, I saw Daniel Yergin, the prize, right? And look, if you're going to trade oil, you better read Daniel Yergin's The Prize, right? You need to understand. I mean, I've been to oil since I was a kid. I mean, I grew up in the oil fields, and I can tell you, even living in it, I didn't know everything about oil. I didn't understand the back ends and the shipping lanes and all that. You'll learn that over time. You're
going to find out about that this weekend potentially, because if we attack Iran and Iran closes the Strait of Hormuz, a third of all global oil is transited through the strait, and so we don't know what the ultimate price is. Oil's not exactly exploded, but it has gone up, and so if we do see, military activity take place, and it's, it might be limited in scope at first, but if the United States were to try some sort of decapitation move, and it really gets risky,
I'm looking over at $62 a barrel back just a few days ago, and now it's at 66. So there is definitely some movement, right?
Yeah, listen, I told a buddy of mine to cover his short at 59. Because I thought it was going up, and that was a function of a conversation I had, in the hallway at MS, and somebody said to me, "Look, I think this is what the 101st Airborne is doing. They're not going to Greenland; they're going somewhere else." And I was like, okay, that wasn't exactly inside information, but I mean, it was, it was an insight, and that's the type of thing you're looking for, right? You want somebody who knows what's going on. Come on and say, "Look, this is what's going to happen. This is the time frame, and these are." The risks and the potential rewards. And so that obviously drives whatever's happening on the platform at any given time.
Many, many years ago, I remember my first time run on the floor of the New York Stock Exchange. It was like going to church, man. It was like I have to ask, your first moment on the floor, what was it like, man?
Well, it's funny. My first moment on the floor was actually not on the floor. Let me rephrase that. My first moment on a floor was the Chicago Board Options Exchange. So when I was at Financial News Network, we had a show called, very creatively entitled, The Options Report, that we did in concert with the CBOE. And so they were offering an options trading class. I was going to visit a buddy of mine in medical school who was at Northwestern, a kid I'd known since I was 13 years old. And I was going to hang out for the week. I hadn't spent a lot of time in Chicago, and I wanted to learn more about how options were priced, how they functioned. And so Bill Griffith, who was my boss at the time, let me go. I was going to do a live report that Monday morning at 10:30 Eastern time and take this options trading class for 3 mornings going forward. That morning was October 19th, 1987. So I was on the floor of the CBOE, went over to the Merc, went over to the Board of Trade that entire week, did 12-hour days covering the biggest crash in the history of U.S. markets. And still the largest percentage decline in history, almost 23% in a single day. And it was an unbelievable learning experience. I met John Najarian on the floor that day. He was the largest independent options player at the time. Tom Bond was the market maker in IBM. And literally the crash course that I had in that experience was a mind blower. And then coming to the New York Stock Exchange later, when we were allowed on the floor, which was not the case in 1987, it was just, the culture was fantastic, right? I mean, you sat there among all these individuals who were doing things at ultra high speeds. Granted, we're at much higher speeds today because it's electronic, but you watched people go through the emotions of these wild market swings. And some of the days that I was down there, and you remember this team, on a bad day, the room got a little noisy. There was a lot of scatological activity. There was a lot of slamming of plastic phones, a few epithets hurled at other individuals for, decaying on a trade and all that kind of thing. And it was eye-opening, but the culture was fascinating to me, right? I mean, and we were accepted. I mean, Maria was down there, on the floor. I was down there on the floor. And, we'd be going live and ad-libbing a show, and somebody'd slip me a piece of paper and tell me that, there were 200,000 IBM for sale, and they actually, we ended up, kind of coming together as they understood increasingly the utility value of us being around and sharing the information that emanated from the floor.
And talk about that. I know you guys are going to have that homecoming reunion later today, but talk about that camaraderie that you all have. Y'all probably have your own chat room somewhere, man.
Well, we still talk. I mean, a lot of us are still talking, and a lot of us, have in a certain sense come to the end of the road with respect to our prior, associations. And so I think, what's interesting is that we, having this cumulative experience, when you look at Tyler or Bob Pisani or Sue Herrera, Sue Herrera and Bill Griffith were among the first employees of Financial News Network in 1981 and went on the air the very first day that business news television started. And, that's a fascinating thing. Tyler's been doing it just as long, if not a little bit longer. Pisani was at CNBC when we merged FNN and CNBC in 1991. And, we all got to first learn this all together and then also join the community, if you will, on Wall Street and live side by side with everybody, and that meant not just the traders on the floor, but hedge fund managers, private equity folks, big business people, bankers, and so on and so forth. And look, there was a community. Having said that, though, we had also a responsibility to draw these people out and to the extent possible, tell us the truth about what was going on. And that, extended for me out to the Federal Reserve, to the White House, to Congress and other places. And I think that's another area that we're going to focus on very closely is policy, because policy is driving markets, in the last couple of years in ways that we've not seen before. And I think, and the Supreme Court decision, for instance, today is a very good case in point. So we can't ignore that. It can't just be, you can talk to 10 traders every day. You got to really dig down and kind of reach out at the same time to make sure that we're encompassing not just our world, but the entire world and getting information wherever it may lie. And,
it's interesting. When I grew up, to get a Wall Street Journal, the paper, it was always a day or 2 days late. I was happy to get that. And I learned that this new station was coming. And I lived so far out of town. My parents and I, we lived 6 miles out of town, and there was no cable at where we lived. So my dad had to go buy a satellite dish, and I remember tuning it. I thought I had tuned into the wrong channel because it was still snowy, and there it was with Bill Griffith talking about FNN and coming on, and my dad and I watching the ticker and watching as you guys built this awesome thing at CNBC, and I was like, wow. It's really cool. It's what I really, 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 really wanted to do. And when I look back now on all the time and all the news that has gone on and the changes that have gone on in the technology side, the changes, the styles of how people come in, it's been really a very cool thing. And to be a part of that, help build that, right, with Benzinga and Money.net and all the things that I've done.
I can give you a smart example, by the way, of that change. So you just said talking about getting the journal 2 days late. Like we'd get it, the next morning. But when I was a producer, before I got on air at Financial News Network, so early 1985, before I hit the anchor chair later in the year, Bill Griffith used to have me write once a week a corporate report on a stock that was in the news. So we had these S&P information books on the shelf. And they were updated once a month. So you'd go to the book, you'd pull a tear sheet out that described what was going on with the company, what its revenues were, and you're writing the report based on the news that was happening. And this is what their revenues were, maybe not are, but were. And we were dealing with, aside from the news wires, which were real time, a lot of this stuff was, old information. And it was all on paper. Everything was on paper. Our scripts were on paper. The wires were paper. The books you had to refresh once a month. And, now things happen so fast, we can barely keep pace. And I think that's another element of this is, being able to keep up with the information flow and also then delineate between what's good and what's bad information, which is increasingly important in an environment like this, where, you see it with social media, disinformation, misinformation. And that's a real challenge when you're working in real time to be able to, and that's why you use experienced people, because they kind of know it when they see it, right? They or at least they'll question something that looks a little sketchy.
No question. That's right. Yeah. Dave, thank you for watching. I see you out there. Glad to be here. Glad to have you there too as well. And of course, the numbers are exploding here, Ron, as we just blown through all the numbers today. Wow, we're just past CNN up. Like, what the heck's going on? I love this. And now Look, I'm gonna be really excited about this next one. Kenny Polcari is coming in, folks.
Yet another Italian. There's a plan.
You know what I'm gonna do? I'm gonna bring Kenny in. We'll talk for 2 seconds, and I'm gonna let you two guys have fun. I'm gonna get something to drink. I'm thirsty, but super excited, guys. Look, hit that like button, subscribe, retweet. I love this big day here at Quasar Markets and a big day on Wall Street. So I'm gonna bring him in now. Ladies and gentlemen, Kenny Polcari, man, how are you? Man, I love this, man. This is super exciting. I love those glasses, by the way. How are you, man?
I am good. Thank you for having me. Ron, how are you?
I'm doing good, Kenny. You know, it's funny. When Dick Grasso took over the New York Stock Exchange, the Italians took over the wasp bastion of Wall Street that it once was.
Yeah.
It was Pisani, Bartiromo, Insana, Polcari. Bob Zito was running communications. Kenny Langone's on the board. It may have been a large Italian dinner at one point.
I see Ken Langone every Sunday at church right here around the corner from me.
Kenny's a good man.
Yeah.
How you doing?
I'm good. How are you?
I'm good. What do you make it today?
It's good. It's 75 degrees down here in Florida and gorgeous blue sky, sunny. You know what I mean?
It's
after I leave you, I'm going out on the beach.
Yeah, that's 40. I'm not 40 something here, cloudy, and the snow is on the ground all month.
Yeah, I hear you.
Yeah.
So what's going on up there? It's kind of getting very interesting. What's happening in the city?
Well, yeah, the city's interesting. We'll see how that plays out. Obviously, and to a certain extent, New York and Florida are opposites when it comes to tax and social policy and economic policy. What I'm interested in is your take on, what's going on today. We had softer than expected GDP. We had higher than expected inflation. We had, more importantly, the Supreme Court decision rolling back the tariffs. It's kind of a wild day, and it's been really choppy. It looks like Wall Street's confused.
Yeah, I think Wall Street is confused. First of all, I think the GDP number, I think you can explain most of that away with the 45-day government shutdown. I think that's fair to say.
But that was 1 percentage point, right? So, yeah.
Okay, so what did it come out 1.4? So that'd bring us to 2.4 had that not happened, right? Certainly a little bit weaker than the expectation. I think it was 3%. So we could talk about that a little bit, but I'm not so sure that the market's that worried about that, because look, that's going to be revised 2 more times before there's a final on that. Number one. Number two, the PCE report was interesting, specifically because on Wednesday we heard the FOMC minutes where they said there's a vast majority of the committee. There's only 12 people on the committee. So what's a vast majority? It's got to be 10,
more than 6.
It's certainly more than 6, and vast kind of puts it more towards 10 in my mind.
Yeah,
that are concerned about inflation, much more than concerned about a labor market. And today's PCE report, which was only 0.1% higher, but the fact is it's going higher and not lower. So I think that's a little bit of cautiousness. I think all that says is that there are enough people on the committee that recognize that. And so maybe cutting rates, anytime in the near future, certainly I think off the table.
Right. And it looks like inflation is stuck around 3%. That version of inflation is stuck around 3%.
That's right. And I think at some point, quite honestly, and I don't know if you and I talked about this, in the back of my mind, I'm kind of thinking that the Fed has recognized that 2 is going to be really hard to get to, and they're trying to figure out a way to settle around 3 and say that 3 is going to be normal.
I think that'd be a problem. If they raise their inflation target from 2 to 3, there's a credible.
I agree. If they say it out loud, I think that's a problem. But if they just kind of let it simmer there and don't really say it, but continue to work, I think then, that's kind of going to be where we are. But that being said, I think the PCE was much more of a concern in terms of what the expectation is. And then you had this headline that just came out about the tariffs. And the reason I don't think the market completely went negative on that headline is because Scott Bessent has done a very good job so far of saying, look, there are other ways to skin this cat. If they come back and they say we can't do it, then we can do it this way. So I'm waiting to see. There's going to be lots of analysis of, today and over the weekend. I'm going to watch, the weekend talk shows and see who comes out and what they say.
Well, the other thing too, though, I think if the markets thought that the rollback would be permanent, that's positive for inflation, right? That gives the Fed leeway to cut interest rates if inflation were to fall. And we talked about this earlier. The New York Fed said that 90% of the tariff cost is being borne by U.S. businesses and consumers, right? So if you can push that inflation number down by getting rid of the tariffs, which this president won't do, but if you could, that would be a net positive. And so I think the market's trying to figure out whether the Trump administration come back with other sets of tariffs to replace these. and we're right back where we started.
Well, and I think Scott Bessent has kind of said that, right? Scott Bessent has
Yeah,
said there are other ways to skin this cat. So I think the market's kind of anticipating that there's going to be, there's going to be a second act here, and it's just a matter of waiting to see now how they respond to this headline. So I think that's it. I think the other thing that's kind of causing markets to be a little erratic is the ongoing geopolitical tension in the Mideast. And look, he's threatening. I know he's given them 15 days. He's given around 15 days, which is kind of like early March, to come to the table and make a decision. But, it is Friday. It is a weekend. A lot can happen. There's some underlying nervousness.
Look, yesterday's map in the Washington Post showing the positioning of all our war material. And I was talking to somebody this morning who said tomorrow the USS Gerald Ford will be in position, our largest aircraft carrier and aircraft carrier group, to do whatever it wants to do if the order is given.
Right.
There's a lot of stuff there, including refueling tankers, which you don't send out if you don't intend to use the planes, right?
Right. And so I think, enough of that might just be enough of that threat might be enough to get them obviously to come to the table, which I think is what they want to do, I would imagine, because I don't really think anyone wants to move beyond this. But there has to be, they have to come to the table.
I think, listen, if they do come to the table, and it's funny, I had this conversation with someone who's been involved in these chats before. If they come to the table, all they're really going to end up doing is resurrecting the same deal that Obama had that we pulled out of in the first Trump administration. That's called JCPOA, right?
Well, they may try to resurrect it. I don't think Trump is going to go for it, right?
And they bomb him.
Right.
Then they attack him.
Right. So Trump's going to say, no. That's all we want. Look, he's already made it very clear that he wants zero enrichment.
Right.
Zero. Right. So that's going to be the ongoing narrative that kind of simmers under the surface. And again, it's a Friday, the weekend's coming. You could get that kind of nervousness going into the weekend. So I think you might actually see the market trade off into the end of the day today. Not fall out of bed, but just kind of trade off as traders.
It's down from where it was earlier, right? I mean,
yeah. I mean, while it's still up right now, it's certainly not. It had rallied. That was up 200 points early on, and now it's only up 18. So it certainly has rallied back. Has come back in off its rally. The Nasdaq has well. The Nasdaq was up more. It's up 164, but it was up two something a little bit ago. So there's going to be that ongoing churn. So I think that's kind of what's driving it. I think there's a lot of earnings today, but most of them are SMIDs. None of that's really going to drive the broader market. It will drive most likely the small and mid caps, and in fact, the Russell is down. Slightly. It's -2.
And it's been outperforming. And I was talking to Steve about this earlier. Yeah. The rest of the world is outperforming the U.S. by a wide margin year to date and through all of 2025.
Yeah,
already
the emerging markets, right? I mean, the developed markets are, but even the emerging markets are.
And emerging market debt, if you look at that in local currency terms, last year just blew it out, right? And if you do have a weaker dollar, then when you repatriate those profits, you get another kick. So it's been, a year ago, January, I said 10% allocation to Europe because they're going to spend $1 trillion on infrastructure and defense. And, you had big double-digit rallies almost across the board in Europe. You're already, the global Dow ex-US is up over 8% year to date. South Korea is up 34%. Japan's up 14%. You get some big moves outside the US.
Yeah, and look what the aerospace and defense industry here has done. We're up 14%. The XAR ETF is up almost 14% year to date, right? And so that's interesting. But then you also have outperformance in consumer staples, which was this boring dead group last year. One of the leaders, right? Industrials, one of the leaders. You're seeing tech financials are having a difficult time. Certainly, yesterday's news on private credit, Blue Owl didn't help it.
Well, they had a slightly different explanation this morning with some of my former colleagues as to what they're doing. But again, and I said this in my Substack yesterday, they've gone from being a blue owl to being potentially a canary in the coal mine. It worries me a little bit that however they want to describe the event, it's still not great.
Well, okay, but so here's what I find interesting. They said the media got it all wrong, that they're not stopping, they're not halting, they're just changing the way it is. Listen, okay, but if I were Blue Owl and I was doing what they said they were doing, I would be very sure and very clear that when that news hit the tape, that it was what I wanted it to be, right? Which I find very interesting because now they're coming out today going, oh, no, after we got beaten up yesterday, down 9%. No, that's not what we meant. Well, okay, then you should have said what you meant.
Also, for those who, and there are some people who I'm sure are quite familiar with this process who are watching us right now, when you start selling your assets to a subsidiary of your own company and you're marking the value yourself,
yeah,
that is that's a caution sign. I mean, it's a continuation fund where, you're selling to yourself. You may not be marking it 100 cents on the dollar, but you're marking it the prevailing mark that you want.
That's right.
And that's
your canary in the coal mine, right?
Yes. You and I are exactly the same age. We're a day apart. Yeah. And we've seen this more than
I'm a day older, just so everyone knows. I am a day older.
And it looks like you're a day older than I am. But look, I mean, this is not our first rodeo.
No.
And, every time you see one of these things, you go, yeah, maybe not.
Yeah, maybe not. Anyway, I do think, look, I talked about this the other day, is that, we're in this, while the broader market doesn't appear to be, and it looks like the NASDAQ's only down, 1.5% year to date. That's true, but it is down more like 6% off of its high. Yeah. So tech has been, and we know
tech down, software's down 30% from its high, right?
Right. There are a bunch of names that are well into bear market territory. Yeah. Right. They're down better than 20%, and they're great names. I mean, I think
Microsoft is down 30% from its high, and it's lost all its outperformance relative to the S&P over the last 5 years.
Yeah. Yeah. But I think there is some interesting opportunities there because, like anything, the pendulum swings too far to the left and too far to the right. Some of those names are not going anywhere.
Unless you
look at Amazon was down 20% or 22%.
Amazon's now the biggest company by revenue in the country, just surpassed Walmart.
Who? Amazon.
Yeah.
Amazon, yeah. Yeah. And I think yesterday's Walmart story, by the way, I thought, and I put it in my note this morning, I thought the guidance was realistic, but what happens is the stock was trading at all-time highs. It was priced to perfection. So the minute, the traders and the algos don't hear exactly what they want, they go into panic mode, right? I think it's ridiculous, but I think Walmart's a core name, right?
I love this because you remind me of every relative I had with the hand gestures, the volume going up. We don't even have any dinner on the table yet.
Can you imagine if we had dinner on the table and a glass of wine, what this would be like?
But yeah, it's like, you do see these things. And yeah, is Microsoft going away? Or are the SaaS companies going away? It really depends fundamentally what you believe. Is artificial intelligence going to replace, SaaS systems that companies have installed that are layered and complex? And can they, with a, stroke of literally just, touch of a wand, make all that disappear? That's the way the stocks are trading, right?
Right.
But the question is, and the CEO of Anthropic has said things to kind of encourage that kind of thinking. He said that, 50% of all white collar entry level jobs are going to go away in 1 to 5 years. And you hear from other guys in the space that are saying like, look, none of us are going to work again. We're just going to be in this period of abundance. I don't know how we get paid when it happens.
Right. I'd like to get into that period of abundance where I could just sit around and do nothing. Right? Yeah. Show me that door. I'd be happy to walk through it.
But there's a lot of confusion around what it really means, right? I mean, and who and picking out the winners and losers. What I guess OpenAI with this funding round is going to be valued, I think, in excess of $800 billion.
I thought it was closer to $1 trillion.
Yeah. So that's a lot of money for a private company.
It's a lot of money. It's a lot of money. And when you think about, listen, you think about the speed at which this is happening. Is it unnerving? It's 100%. It's unnerving. And while you can say, the last 3 industrial revolutions have created concern like that, this one's, and it's the same in the sense that it's creating concern, but this one I think is creating a little bit more concern because of the speed at which it's not only happening, but look at what it can do.
Yeah.
Right. Look at what it can do. And look, last week it was the financials and it was legal. It was going to attack those industries. But, it's going to do the same in insurances. It's going to do the same in mortgages. It's going to do all that rote stuff that a lot of people did. Right.
Here's a headline. This should support that just crossed on Quasar Markets. President Trump says he has to do something about the courts.
Oh God, here we go.
That was not something that engenders a lot of confidence.
No, see, and he can't help himself when he says stupid shit like that. He can't. I apologize.
I don't want you to hold back.
No, I apologize. But he can't help himself. Like, why would you say that? Why would you do that?
But again, look, I mean, the system, right? relies on trust. The system relies on reliability, right? The system relies on, the rule of law and the ability to understand property rights, understand policy, understand the implications of each and every one of those things. Yeah. And when you just start throwing comments like that out there, you create, and that's, again, I've switched from uncertainty, like we've forever said markets hate uncertainty. This is unpredictability. It's a different thing.
Yeah. Look at it. Ever since that headline came out, now the Nasdaq has rallied, the Dow has rallied, right? It's ridiculous how the markets respond, right? These headlines.
And I'm not sure what they're responding to, because I don't think that would be a positive for the markets, right?
No, I'm kidding. I'm not sure they're responding to that at all. Yeah. I'm just laughing because here we are talking. We go from up 100 to down 100 to up 100, all in the same conversation.
Yeah, it kind of reminds me of 86, 87 when program trading was introduced, and you'd have these, 1 to 3% swings in a day, and you didn't know why. These are now. It's what's interesting is, having said all this, Bespoke Investments had a data point out the other day that the high and low for the S&P 500 this year, peak to trough, is 2.67%. It is the narrowest range in which the S&P has traded since 1966, when we were 5 years old.
Yeah. I got to tell you, if you go, it's funny because if you look at the chat, you're going to see that it's very, very tight, right? Yeah. We keep hitting our head on 7,000, can't break through, but yet they try to sell it off and we find support down at the 6,800 level, right? And so, yes, it is very tight. I think what's going to be interesting is what's going to push it. We're either going to break out or we're going to break down.
So this is interesting you say that, right? So I'm sure you remember my late friend Ed Hart from Financial News Network, who was our credit market reporter. He used to either refer to it as tension on the tape or compression. Right. And when you get into one of those environments, something is bound to happen.
Right.
Right.
Right. And it's going to, because it's so tight, it's going to go one way or the other. So what's it going to be? Is it going to be potentially this weekend if there's a military strike in Iran? Could that be what's going to break it? Is it going to be, I don't know, Scott Bessent coming out saying, okay, no problem. Here's how we're going to fix this problem. And we're going to go on with that. And the markets go, oh, that's great. And rally. I don't know. I guess that's the big question, right? You have to kind of wait and see how this unfolds. But yes, we're getting to the point where it's going to go one way or the other.
Yeah.
And look, I actually think that the market, look, it's a midterm election year, and this as well as I do. Typically in midterm election years, you see a drawdown in the S&P somewhere between 15 and 19%, right? So
not
I'm not
20, 19.
Not 20, 19. But it's interesting because now in tech, you could say some of that has already happened in some of the tech names, right?
Sure, yeah.
But it hasn't happened in the broader market. So I'm in the camp that we are going to see a drawdown in the first half of this year. I think once we get through the summer and the election, kind of the candidates become known, because right now there's a lot of noise, right, around who's running, who's not running, are they left, are they right, are they center, whatever. I think once the summer comes in, who's running in each race. Because look, every seat, by the way, the other day I said on television, every seat's up for sale. And I go, no, it's up for grabs. It was a Freudian slip. Okay,
well, I'm not going to respond to that one. But,
every House seat is up for election, right? And so that's causing some angst, I think, in the markets.
And look, you're talking about not just the House flipping, right? Which seems to be, and again, it's early. It seems to be that's a foregone conclusion.
Correct.
Now they're talking about the Senate.
Well, are they talking about the Senate flipping?
Yep.
Oh, see, that must be relatively new news because I haven't heard that yet.
Yeah, I mean it's narrow. It would be narrow, of course, because the math doesn't favor of more than 60 or more than 51 or 52.
If it's a split Congress, the market's like that because it's gridlock, so nothing really happens because you can't unless they come to the center and legislate around the center. Nothing will really happen because you can't go too far left, too far right. It won't work, right? And if you get the Democrats that take both houses of Congress, he'll just veto everything that comes to his desk.
Well, but then you also have impeachment proceedings,
right? That's the first thing that they'll do.
Yeah,
because they've already threatened it, right? They did it 3 times last semester. Last semester.
You haven't had a semester in 45 years.
I haven't had a semester in a long time. We're going to be 65 next month.
Did you get your Medicare card, by the way?
I just signed up for it. I got it in the mail. I'm like, when did this happen?
I am my grandfather. That's the worst part of this.
When did this happen?
Granted, he was 90, so if I can get that one, I'm good. But the other question is, look, after the midterms, Medicaid and SNAP are going to be reduced by $1 trillion. The ACA subsidies have already been cut as a result of all this, kind of stuff that's been going on in DC over budget issues. And that may not be good for the economy. I mean, as it is, when you talk about the K-shaped economy or the bifurcated economy, in my parlance, the two economies, and Moody's Investors has shown this in graphic detail. I showed it yesterday in my Substack. The top 20% of wage earners account for 60% of consumer spending. And then you see that downslope for those who are, below the median income or at it. And if you were, again, to cut $1 trillion in Medicaid and SNAP, you're going to rug pull those people. And if there is a market correction, like you say, the people who are spending may dial back. Then you start to run into a recession, a small recession.
They'll pull back because they feel, you feel less wealthy, right?
Yeah.
If the market backs off, if your portfolio is down 20%, you feel like, not right now.
Yeah.
Right.
Yeah. So that's a risk down the road. Whether it gets pulled forward, I think is an open question. But again, this nervousness kind of although I haven't seen it, I have to say it hasn't engendered the type of nervousness I would have expected because I've been traveling.
Yeah.
Airports are still packed. Now, again, it's the top 20% largely, but the airports haven't slowed down all that much.
Listen, the airports haven't slowed down. I try to go now. I know it's in season down here in Florida now, but you can't get a reservation to go out to dinner because it's always packed. I go to New York City. I'm going on Sunday to New York. I'll be there for 3 days. Even in New York City, you're trying to get a rezeration, at 6 or 6:30 or 7 o'clock at night. Restaurants are packed. You can't get it. So I'm sitting here walking around going, what am I missing? Because
also,
I know it's busy.
Tourism is down in the United States. It was down 6% last year. It's down 4.8% year over year in January. Canadians have entirely stopped coming. And yet, when you drive to New York City, and I'm going back in tonight for work for MS Now with Stephanie Rule, it's crazy. I mean, there's so many people on the sidewalks, and I they're apparently not tourists, but there's just a ton of people walking around Manhattan right now. And you're trying to square that circle, right? Because what you see doesn't necessarily comport with the numbers, what people say they feel.
Right.
In a certain sense, does comport with the numbers because when you look at the cost of things that matter to people, education, childcare, groceries, handful of other things, gasoline, those prices are up a lot, and people are downshifting and doing different things, going different places.
But people also say to me, like when I say that, people say, yeah, but you're traveling between Florida and New York, New York. You go to other parts of the country to see kind of, and they're right. I agree.
Right.
Not that I'm not saying, but I'm saying where I'm spending my time.
Your millions, yeah.
Yeah. Where I'm spending my time, it's always busy. Like the flights are full, right? The restaurants are full. Everywhere you go, it's full. And there's traffic and people are out and they're shopping and all that stuff. So, but yeah, if I go to, the center of the country, what's it going to be like? I don't know. I have to go.
I haven't been. So I've been to, a handful of places. I was in Utah. That was pretty busy. I've been in Orlando. That was, again, a lot of this is conference stuff.
Right.
And businesses haven't really fully dialed back yet.
Right.
We haven't seen that kind of, fear. They are struggling with tariffs. They are struggling with certain issues. They're struggling with employment. They're struggling with AI and how to deploy it. But they haven't necessarily stopped spending. But again, you've got this bonus depreciation. You've got some other pieces of the one big beautiful bill that's kind of cushioning the blow for corporations more than for individuals. I mean, presumably tax refunds are $1,000 bigger than they were last year.
And
but
the tax brackets are different this year that we're in, right?
But the impact of tariffs on individual households is also $1,000. Yeah. So it's kind of a wash, right?
It's a wash. Yeah. Let me ask you a question. Let's talk real quick about Kevin Warsh because I know we're going to run out of time here. Okay, great. Kevin Warsh is the name. I get it. I'm happy with that. I don't know. You happy with that?
Mixed.
I will say, I had my money on Kalshi on Rick Reeder. I really thought I thought he was going to be the dark horse, right? That suddenly,
right before, so when he spiked on Kalshi, right?
Yeah.
BlackRock comes out with a piece that bonds may not be a good investment.
Right. Oh, I missed that.
Yeah. So you're like, yeah, maybe not. I'm glad it's not Kevin Hassett because, and I'll be blunt here, I think he's a horrible economist. I think he's not up to the job. Kevin Warsh, I've known for a long time, since the great financial crisis. And I talked to him during the crisis back in 2008 and 2009. At that time, he was opposed to quantitative easing. He was opposed to zero interest rate policy and the other unconventional things that Ben Bernanke was doing to stave off global systemic financial collapse. He didn't want to lower rates a lot then. Now we have no such risk, and he wants to lower rates. So there's some cognitive dissonance there outside of wanting the job that I don't understand.
Well, will he do that and also shrink the balance sheet? Because if you shrink the balance sheet, then you can lower rates. Like one cancels the other, right? Because
Right. Not only that, you're draining liquidity from the banking system at a time when we're seeing the Fed now throw $18 billion the other day, into the banking pool for whatever reason. Some people on the internet are getting, on Twitter or X and elsewhere saying, oh, they put $18 billion in, largest infusion since, pandemic or whatever. They're balancing reserves. This is more mechanical stuff than it is fundamental, as far as I can tell.
Okay, so let's get back to Kevin Walsh for a minute. Yeah. So I don't think there's going to be a problem with him,
I like how we switched roles, by the way, but go ahead. Yeah.
I don't think he's going to have a problem not being confirmed and all that stuff. I think it's fine.
Until they have to drop. I mean, they have to drop the investigation of power.
Yeah. I think if Trump wants to get him in there and do all that, I think they'll drop that. Yeah. Which then leads me to the next thing. I think Jay Powell is going to say thank you and goodbye. I don't think Jay Powell's sticking around.
I think he's sticking around.
Well, okay, but I'm sitting here thinking to myself, if I were Jay Powell, he's 78 or however old he is, he's got grandchildren, he's got all that shit. Why does he want this anymore at this point? See you, goodbye.
To maintain balance at the Federal Reserve and ensure its independence.
Well,
look, this is a guess on my part. There's no information associated with this at all. If I were Jay, I would say.
Yeah, no, and I get that argument, but I'm putting myself in that seat. And I'm going, I am so out of here. I'm going on vacation. I'm going to take my grandchildren. I'm going to travel the world, be done with it. Because look, we both know, again, he's 78. You're not getting any younger, right?
Same age as the president. So
does he want to put up with the constant badgering? Even though he won't be Fed chair, they'll certainly continue to badger him. Why does he want it? So I'm in the camp that he's going to say, yeah, okay, see ya.
I mean, I hope he stays. I truly hope he stays. Look, I think
there's a bunch of people on your side of that fence that they want him to stay.
I think he's been unfairly, not just by the president. I think he's been generally unfairly maligned. What we did not know at the end, towards the end of the pandemic, because there were multiple variants, because things were happening, we didn't know what we didn't know. So if he was late, on raising rates and taming inflation, some of that was in an information vacuum. Right. So I don't blame the Fed for being late. It wasn't the only factor that drove inflation up.
No, I agree. But the part where I'll agree with you. Like if it was 1-2 months into it or 3 months into it, they kept saying we're not sure. But after that, when it started to really spike, I'm like, dude, you got to stop telling us it's transitory now. You got to do something about it.
Well, look, it's unfortunate they use that word because the second definition of that word means not permanent.
Right.
Correct. Which it wasn't.
Yeah, no, I hear you. But I do think at some point, that they were late after, okay, 2 or 3 months, I'm saying, okay. But then I think when it became obvious, I'm like, okay, stop saying that, just be more proactive. That was my argument. I actually think rates where they are right now today, I think the rates right now are fine. I don't think there's any reason to cut rates.
This is as normal as a rate environment as you can find.
100%. 100%.
Historically, this is in fact, this is lower than we were on. I think Fed funds averaged over history about 5%.
Yep. And so I think rates are fine where they are. This argument, they have to cut them, they have to cut them. I don't think they need to cut them at all because I think rates are fine where they are. You know what I mean?
Problem, looking at the labor market, so you got to cut because of jobs. These are structural issues. These are transitional issues. They are the jobs problem, as it were, low hire, low fire, has nothing to do with interest rates. Even the housing problem that we have is a question of price and supply. Mortgage rates are 6.01%. Now you do have people locked in at 3 and 4 and 5, so they're disinclined to sell. But again, even housing per se isn't a rate problem.
No, I don't think it's a rate problem. But look, you also have a generation of people, let's put ourselves in that bucket, right, that may be living in a house that they've owned for 30 years and they don't have a mortgage. But what they didn't want to do is they don't want to get hit with this massive capital gains tax. Right. So if Trump does what he's suggested or what he's proposed in terms of giving, seniors 65 and over the ability to sell the house and no tax, that's going to bring or should bring.
If you're married, you have a $500,000 exclusion as it is.
I agree.
You give that away,
No, I agree. But if people look at it, housing prices got dislocated because they kept rates at zero for way too long. We can talk about that all we want. So I think that's part of the problem. But if they cut rates again, that's only going to cause the housing market to start to heat up again. That's why I don't think they should.
Look,
housing prices come down.
let's say there's no capital gains tax, right? And on whatever you make on your house that you've owned forever. When you go to buy something else, it's going to be more expensive than the larger house that you're already living in.
Well, okay, again, let's think about that. That depends. If you're scaling down, if you're retired and you got no kids and you're scaling down, maybe not.
Well, wait. So in Alpine, New Jersey, which you're familiar with, which is maybe it's kind of the quasi Beverly Hills of New Jersey, right?
Yeah, that's where you live.
I don't live in Alpine. My wife works there, but I don't live there. They're building townhouses on the main road, like the main road that goes through Alpine.
Yeah.
For $3 million. I mean,
ridiculous.
No, absolutely not.
It's ridiculous. Who wants to do? Now, I'm curious to see what idiot's going to buy them.
Yeah.
That's what I want to see. Who's going to buy those?
It's right on, and they're right on the road.
And it makes no sense. So at some point, the math is just not going to work. You can't tell me that people are so desperate to live in Alpine, New Jersey, that they're going to buy something for $3 million on a main road like that.
I was just. I am definitely not living in Alpine, New Jersey. Thank you very much, guys.
It doesn't make sense to me.
Agreed.
This is super exciting. I love this, guys. I want to keep letting you guys just run and go at it. Kenny, man, you have crushed it today. I appreciate the energy, bro.
Well, listen, I appreciate you inviting me, Ron inviting me. I love Ron, so I was happy to do it.
Okay.
And I moved everything around just to do this with Ron and you.
And I always end the last.
I would have been at the beach already, but I stayed here to do this with you. Now I'm going to go to the beach.
Well, first he's going to bench because he's got to puff that up before he gets out there.
Hey, by the way, I want to tell you, I don't know if I told you this. The scan came back clean.
Good.
8 months. So I'm
very happy. Very happy.
Good so far. We'll see another 4 months. We'll check it again. Anyway, all right, listen. Thank you very much. It was a pleasure.
Thanks,
Steve,
man.
you can reach out anytime you want. Anytime Ron's on, I'm happy to be on.
You heard that, Andrew, our producer is smiling right now. We're gonna have you on a lot, Kenny. So get ready, man.
All right.
I'll pay you this time. Don't worry.
All right, goodbye. All right.
I love this stuff. I love it. All right, thanks, Kenny. I appreciate that. Thanks for your time, man.
Bye-bye.
Ron, hang out a second for me. I'm going to bring in our other buddy here. I love this one. As you know, our dear friend Scott Bauer, Prosper Trading. Here we go. Scott Bauer, Prosper Trading. How are you?
Hey, I am great. How are you, Ron? How you doing? Good to see you again.
Same.
It is all good, guys. It is all good.
So talk to us a little bit. Ron, do you want to take this or do you want me to do it? How do you want me to do this, man? There's so much going on.
I'm gonna pull out like you did because I've got to go do some other stuff and then I'll come back because I know I'm gonna prep for Sue, for Tyler and Bob. So I'll see you in a little while.
For those of you who don't know, we got a big one coming up. We're going to call it the homecoming reunion, I guess, for CNBC. It has big numbers there. And for those of you that are actually watching right now, huge numbers. Thank you so much. Retweet, repost, do all those fun things, like and subscribe. And Ron, we'll see you in a little bit as I interview our friend Scott. Scott, how are you, man? The president just got busted on the tariffs, and the market doesn't seem to care.
Yeah, I think that's kind of a surprise. The expectation leading up to this is if the Supreme Court overturned this, I think a lot of people, a lot of traders that I know, a lot of traders on the floor at the CBOE thought that we initially would have seen a pretty big down move, I believe, and so far not so much.
Yeah, and of course you're down the CBOE. What are the traders down there? I mean, you would expect on a day like today, the VIX would be up, the pit, the nuts, but nothing's going on really. I mean, it seems that the Dow's up 100, Nasy's up almost 1%, and the SPOOs are 6,900, my man.
So I was actually just over in the VIX pit, and there is a lot of flow on the put side today. A lot of opening positions on the put side. Just a few days ago, earlier this week, we were seeing call buying up to the 70, 80, 90, 100 strikes. Okay. Now, could be totally separate, right? We don't know what people are doing with that. Maybe that's a hedge against, something else there. But boy, with this news this morning between PCE, GDP, and then I think the big one was the tariff situation. Now, all of a sudden, we're seeing put buying, which means, at least if you follow that on the retail side, people think the market is going to be just fine here.
Yeah. But there's just so much on the sideline, right? There's
So
Iran
much on the sideline. This tariff thing's not over with. We know that.
right?
And what about Iran, China, Taiwan? I mean, Ukraine. People are still nervous, but yet there's 8 trillion on the sideline, and they're still buying, right?
Yeah, they are absolutely still buying. I'm going to tell you what I think is the biggest risk to the markets outside of a geopolitical event. Okay, obviously, if God forbid something happens in Iran or whatever it is, that can upend. What I believe the biggest risk to the markets is people not believing the data that comes out, or the president coming out ahead of an announcement and saying something about the announcement. Now, this morning it happened to be GDP. He came out about a half an hour before the announcement and said, if it weren't for the shutdown, it weren't for the Dems, we'd be 2% higher. And then lo and behold, 30 minutes later, the GDP announcement comes out. And yes, the number was light, 1.4%. But a lot of the talk about that was, well, if we didn't have a shutdown, it would have been higher. Now, he certainly has egg on his face from the trade data that came out. But he came out, on Tuesday, whatever it was, and said, boy, best trade numbers we've ever had, and blah, 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 blah. And the market reacts to that. And then the very next morning, we get that it was probably the worst month ever for trade. This is not the first or second time that this has happened. It happened with the jobs numbers last week. The market doesn't like that. The market doesn't like it. And I'm telling you, that can upend this market.
When you say upend, I've asked a lot of traders over the last week, people that as well. Summertime, the SPU's right now, or SP is right around 6,900. Just fell a little bit, 4 points here. Up or down from here?
With no geopolitical escalation, up.
Okay. Is this the whole climb the wall of worry situation?
I think it really is. And this rotation that we've seen over the last several weeks, last month or so, out of Mag 7, out of some of the big tech names into Dow stocks, cyclicals, some of the industrials, I think it's overdone. I really do. And now that earnings are behind us for those big stocks, they can now trade back to fundamentals. And, take today out of the equation, because you don't know the market reaction today. You got a nice big up move on Google and Meta and some of the others. But I do think that stocks like those are going to recover. And that's going to be a good thing, because what we have seen over the last month or so since the Mag 7 has gotten, I'll say, obliterated. I think Mag 7 has not done really well. Is the markets are still holding in, and the markets are still near all-time highs. We're not at all-time highs, but we're near them, right? So when you look at the S&P 500 and the Mag 7, you take that out of there. Over the last several years, the Mag 7 accounted for about 32% of the move in the S&P. The other 493 stocks now that are in the S&P are doing something. That is good. That is good for the market as a whole, this broadening out. So as Mag 7, in my opinion, starts to come back a little bit, I think that makes this broadening that we've seen that much more sustainable.
And Scott, I just want a big shout out right now. We have almost 30,000 people watching the show right now, Scott. You must be very popular between Kenny and Ron. And we've got a big day here at Media Day. We're so proud and so happy that Prosper is a part of what we're doing here at Quasar Markets and growing it. And of course, announcing that we're having a new TV. I love all of this, man. Scott, thank you so much for being a part of this, man.
Always a pleasure. And you never shied away from a camera, so it's always good.
I always say there's not a camera I don't love, right? But I've also said this a million times that I want to create a place for people like yourself, right? That are the professionals out there that need to be seen and heard, and not just because you got 1 million followers does not make you the smartest person on the Wall Street. It just means you're good at marketing, right? And so and Quasar Markets did that, and I'm really proud. You got some really good traders out there. As you know, we have Howard Greenberg over there, and Charlie Moon, and Mike Short. You got the whole group. Tell us a little bit about Prosper Trading Academy and what you guys are doing.
Yeah, so we have developed a team of real traders, right? Not just gurus that you see on the internet that are self-taught or taught from following the internet. We have developed a team of actual real traders who spend time on the trading floors, in the pits, learn this business from the ground up, who are not only excellent traders, but excellent teachers, excellent educators. And there is such a thirst for financial education out there worldwide. And so what Prosper has done is, we're going on year 12 now. We brought this to the marketplace where people can come in and literally have their hands held by myself, Charlie Moon, Mike Shore, Howard Greenberg, Dan O'Brien, and the others all throughout the market day, live in the marketplace, see what we're doing. See how we're trading, see how we approach different scenarios, right? Because as we know, there is not a strategy that works the same every single day. The market is dynamic, the market changes every single day. So we teach people how to approach the markets, and you're getting real people. You're getting real traders. I literally just was out an hour ago walking my dogs, had to take them out. So we're very relatable. We're just like everybody else there on Main Street. This just happens to be our expertise in our profession.
Yeah, and I just put the link up there. Prosper Trading. I just showed the website. Look, Scott is a real deal, folks. I mean, I've known Scott a very, very long time. And when you talk about, and of course I'm long Amazon right now. That goes back into your history as to what did you do with Amazon back in the day?
On the trading floor, on the SIBO, the old SIBO, I was the first and only trader in Amazon. When Amazon was first listed back in the late 90s, I was literally the only market maker in the world trading Amazon options for about 3 months.
Explain that to people that don't understand that. What was it you saw about Jeff that you just, I like this guy, I got to be a part of this thing?
Honestly, when I first started trading it, I couldn't even tell you who Jeff Bezos was. And if you remember when Amazon first, came out as a company, what they do, they sold books online. They didn't have this. I didn't care. They could sell nuts and bolts books, dog food. Didn't matter to me. This was an opportunity, a company that was now publicly traded with listed options where there was a lot of interest. So I will trade anything. I will trade anything that has listed options. Okay. So because at the time that this came out, we're talking the late 90s, way before, the bubble, the 2000 tech bubble, whatever you want, this was one of the first really high flying volatile NASDAQ stocks that ever came out and was tradable. So most traders, okay, at the time, we're used to trading stocks like Coca-Cola, like I did for a very long time, IBM, Microsoft, stocks like that didn't have the volatility, didn't, have intraday swings like some of these new tech stocks that first came out. Most traders didn't want a piece of it. I embraced it. So literally, and this is fact, this is not, kind of blowing this up at all. Literally, the day that Amazon options were listed down on the SIBO, and at the time, many people don't know this also, Steve, at the time, if a stock was listed on an exchange with tradable options, so at the SIBO, there was no multiple listing back then. So the fact that it traded at the SIBO, that means it did not trade in New York. It did not trade on the Philly exchange. It did not trade out in San Francisco. So when I say that literally I was the only market maker, I literally was the only market maker. So this stock, it gets listed without a lot of fanfare. Nobody knew what Amazon was going to be like or anything.
Right.
And I am
right.
literally, okay, now people have to picture this. And if people have never seen a trading floor, okay,
or smelled it.
Think about what you see in trading places, okay? If you've never seen a trading floor, also, by the way, the SIBO is lively, open outcry. Anybody that ever wants to come to Chicago and see the actual trading floor with what happens in the SPX, in the VIX, just talk to me. I'm happy to take you down there. So I am literally laying on the floor in the Coca-Cola options pit, okay, doing a crossword puzzle because it was summer, wasn't busy. And there's an announcement over the loudspeakers. We need market makers to Amazon. I'm like, whatever. I'm going to continue doing my crossword puzzle. 10 minutes later, same announcement. I'm like, fine. I'm going to just walk over and see what this is all about. So I walk over to the pit that Amazon got listed to. And in that trading pit, there were other stocks like AIG, National Semiconductor, some of the older, stodgier stocks, if you will. And none of the market makers that were in there wanted to trade Amazon. They couldn't grasp the volatility. So I literally walked in there, no computer program, no trading sheets, which is what we used to have for theoretical values. And because of my inherent knowledge of volatility, I just started making markets and I just started trading it. And I literally was the only trader in the world for 3 months. And it finally got to the point, honestly, it finally got to the point that it was so busy. Amazon became so busy that I literally could not trade all this paper on my own anymore. I was trading millions. When I say millions, millions of option contracts a day. And so people just, finally started coming in, which was fine. And, Amazon, grew to what it was. So I would say that, my expertise in trading volatility was born out of walking into that Amazon pit.
And today I'll show a picture. It's a lot different than it was back in the day, man. Tell us, what are we seeing here, Scott? Show us.
Yeah. So that's the S&P 500 options pit at the brand new SIBO, which opened right, kind of a year or so after COVID. So 2022 or so. That is the S&P 500 options pit, where there are still about 150 traders and brokers in there trading live, trading open outcry in the markets. Now that pit looks a lot different from the old trading floor and the trading pit that I traded in, because now everybody's got their computer stanchions and everything is lit nicely. And it wasn't like that. It wasn't. It was a it was a pigsty, quite frankly.
But that was like a high school locker room.
It was. But for me, it was like getting up every morning and going to summer camp every single day. It was intense. It was nerve-wracking. It was busy. It was loud. But for me, you know what that was like, Steve?
Heaven.
A Cubs win over the Cardinals.
That doesn't happen very often, so it makes me feel good. I understand, and I'm not looking forward to this season. I'll tell you. For those of you who don't know, Scott's a big Cub fan. I'm a big Cardinal fan, and yes, we're still friends. And I have been to Wrigley Field several times. Everybody knows that. And I will sit with Scott every time and take that baseball right from him as the foul ball goes through. But I will say, I love Cubby Bear. I enjoy the places right around Wrigley Field. I enjoy going there. It's fun. It's life. All right, Scott, let's get to it. Tell us a little bit. You've got, with profit trading, you've got shows too. I mean, you've got like the penny trading stocks, you've got crypto, you've got it all, man. Talk about what's going on there too as well.
Yeah, so we trade across all asset classes. So I specialize in trading option volatility. So my trading room, all the traders, the students that are in there, we're going to discuss setups throughout the day, and we are going to trade options primarily based on volatility and movement. So that's what I do. And I'm not a day trader. These are all pretty much swing trades that we'll hold on for a couple of days. We do entertain lots of positions around earnings. I know a lot of traders say, oh, how can you trade earnings? It's way too risky, blah, 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 blah. Earnings is a great opportunity to trade volatility. So that's what I do. There's another room that I am part of that also Jeff Lake runs. That's called our Option Essentials room. Pretty much the same types of things we're doing in my room, but really for beginners. So if you're just getting into options and you only want to trade the very, very basic of trades, the very basic of spreads, that's a great place to start. Mike Shore, who was an option trader at the Board of Trade for his career on the floor, he traded bonds, he traded grains. He runs our short-term option room, and that's a day trading room. He's an unbelievable trader, unbelievable educator, and that is, if you're interested in day trading, okay, which I am not personally, but that is Mike's thing. A lot of people are. That's where you want to be, is in Mike's short-term options room. It's day trading. Charlie Moon. Charlie, and Charlie. Charlie's been on your shows before. Charlie's all over media also. He is just a guru when it comes to charting, when it comes to technical analysis. Charlie trades an AI room, and he trades momentum stocks, and he is unbelievable. Howard Greenberg, who you all know. Howard runs our crypto room, and he also now trades penny stocks. Now, penny stocks doesn't necessarily mean that they're a 3-cent stock, a 12-cent stock. Anything listed $5 or under is a penny stock. Well, penny stocks over the last several months have really started to pick up volume, and there's a lot of opportunity there. So that's what Howard does. And we also have a futures room. Yes, where we trade futures. Dan O'Brien was a trader on the floor for a long, long time, developed his own software called Karnak. He trades futures, whether it's in the ES, the NQ, the Russell, crypto futures, whether it's commodities like oil or natty gas or anything else. So we basically offer every kind of entry into the financial marketplace, and it all depends where each individual's interest may be. Someone may be interested in trading stocks, not options. That's great. Someone may be interested in trading futures and not equities. That's great. Whatever it is, we've got something for you.
Yeah, and I just had the up there. I'll put up again one more time. Click on the button, guys. Listen, prospertrading.com. Click on it. These guys are the real deal. All right. Listen, BigBeat approved here. And first of all, I gotta say thank you, Scott. I think we're getting very popular here. 33,000 people are watching right now. Let's go. Popular here. Let's go. All right. Or as Michaela Schifrin says, that's LFG, right? If I get it to go, congrats.
Michaela, by the way, Michaela Schifrin is a neighbor of mine.
Chicago girl. That's right. Yeah.
Well, no, in Colorado.
In Colorado, right? In Colorado, yes, right.
My place in Colorado. We actually live in the same town, about 2 blocks away.
Wow, I love that. All right, Scott, let's get to it. About 8 minutes now till I'll let you go too as well. But Scott, what's on your radar right now? What are you actually watching that you're telling your people that what should they expect when they're watching you?
Yeah, so we're coming down towards maybe the tail end of earnings season, but there's still a lot of opportunities out there. And like I mentioned earlier, I love trading around earnings, especially when there's huge opportunity for volatility arbitrage. On a more macro level, I still truly believe in the buy the dip trade in gold. Not as much silver anymore, but definitely in gold. So GLD is probably the one. I'm not going to call it a stock because it's an ETF. That's probably the one position that we have been in and out of the most over the last 12 months. In fact, we literally just exited one yesterday. That was a big one. And that to me, it's still less of a technical trade and more a buy the dip trade. Now that's going to stop at some point, but I love that. I also love having bullets in my pocket. What does that mean? When volatility, when the VIX drops down to mid-teens, which actually mid-teens historically is pretty high, but in this environment, mid-teens is actually cheap. I love having, whether it's put spreads in the SPY or the triple Qs or upside VIX calls, I'm always watching to have those, to have basically as a hedge against a good portion of my portfolio. And there's that old saying as a trader, you buy when you can, not when you have to, right? So we get long volatility. We buy that protection when the market tells us to. What does that mean? When the VIX is depressed, when S&P volatility is single digits or even mid-single digits. And I think that is something that traders don't take into account enough, of making sure that you always have that protection. Okay. And often that protection goes out worthless. And I am fine with that because it's an insurance policy. It's an insurance policy that a lot of people don't want to have. And if I give up a bip or two, but I know that I can be really aggressive on other trades because I have this here, great. I also know from the emotional side of things, not just for me, because I've been doing this for 35 years, but for my students and the people that follow us, having that in your back pocket lets you trade at ease. It lets you trade unemotionally and not get worried when you see a spike in the VIX, or not get worried when you see S&P's down 2 or 3%. It allows you to grasp opportunity that's out there rather than having to be reactive to what's going on. I would rather be proactive than reactive.
And as I always quote you all the time, you buy this when you can, not when you have to.
That is
so
right.
If you don't mind, Scott, can you give everybody that quote that you always tell everybody about volatility?
Yes. Volatility is your friend, everyone. Volatility is something we should embrace. Buy it when you can and not when you have to. Meaning, over the last, earlier in the week when some concerns hit the marketplace and all of a sudden we're seeing these prints in the VIX on the 70, 80, 90, 100 strikes go up, and all people are like, oh my God, I've got to rush to buy this protection now. It's too late at that point. It's too late. Okay. This sounds, kind of cheesy or whatever it is. Warren Buffett said it best. And I know I'm not going to quote it exactly right, but be opportunistic when others are scared, and be frightful when others are, really opportunistic, right? I can't follow that more to a T than I do. And I suggest anybody that is a trader, whether you're a day trader, swing trader, whatever it is, okay, you will feel better. You will trade better. You will be emotionally in a better place when you have something in your back pocket. But the time to have that something in your back pocket is when things are cheap, because things get cheap, things get expensive. Volatility is mean reverting in the marketplace. That's one of the things that we really hone in on and harp to our students, that volatility is mean reverting. Yeah. And you've got to be aware of that.
And you have specific ways of actually making that trade. So can you explain how you make that trade?
Sure. So I trade almost exclusively option spreads, where I'm buying one, selling another, maybe buying a couple, selling two others, whatever it might be. But I'm always looking to place that trade, that strategy, with what the current environment is. So if the current environment is really low volatility, I am going to be looking for strategies to take advantage of buying time or buying volatility, because if I can buy time when it's cheap, it's on sale, great. So what does that mean? That means there's strategies like calendar time spreads that you can do where you're buying time. And then there's other times, and this has happened over the last week or two, where we've seen big spikes in volatility, whether it's in the overall market or in individual equity, whatever it might be, and say, man, look at this volatility chart, where you can look at that and it's very similar to the stock chart. And there's going to be a support line here and a resistance line up here. And when vol gets really expensive, I'm going to look for a strategy that takes advantage of selling that volatility, or typically a credit spread where I'm taking money in. So one of the big things that we do is teach traders when to place that appropriate strategy. When you're trading options, there's literally an infinite amount of ways you can come to the same conclusion, right? In your combination of options. However, when we can look at charts and we can say, okay, I'm bullish or bearish or even neutral, and combine that with where implied volatility is, where option premium is, to me, that's the best setting you can be in.
And I just was reading, I'm just catching it up now, that we're going to have a presser from the president coming in. So
now or after the market?
Yeah, and about he's saying 12:45, but you know how the president can be a little late. But Carolyn Levitt did say that. Wow, Scott! Wow, 35,000 people here now are watching you, Scott. They love you, man. They love Proper Trading. I mean, this is great, right? This is like,
let's go. So what is the president going to say, Steve? We disagree with the tariff.
I'm the greatest. I'm the best. I don't.
We disagree with the tariff decision by the Supreme Court. They don't know.
I hate the Supreme Court. I'm going to have to change the Supreme Court out. I don't know what he's going to say. I mean,
we have other ways to go about this. The fight's not over. Blah 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 blah. Right. I don't want to say it's going to be a nothing burger for the markets, but I think we already know what he's going to say. Now, if he says something completely different, great. I don't think that's going to be the case.
I'm just watching the markets right now, Scott. We're seeing the Dow down 130, but split that difference. NASDAQ is up 63, and the SPOO's 67. We talked about. I like the 7,000 handle on the SPOO's here. I know. Not really sure why. For those of you, I'm sorry if I get too institutional here. It's SPX, but for me, I'm loving this market. It's a trader's market. The volatility is pretty high on Friday, and it's also the monthly on the
today's monthly expiration, the February expiration. Yep. Look at what the VIX did, and I'm not sure when it. Oh, I see this headline right now. I'm not sure when it popped, but the VIX is well off its lows of the day. Maybe it popped when the news came out that President Trump was going to speak here. Maybe as a deflection, he'll announce something about Iran. Who knows? But as you said, Steve, there's so much out there that can spike volatility at any moment in this marketplace right now. Again, whether it's geopolitically, whether it's interest rates with the Fed, whatever it might be, tariffs, there's so much out there. We have to pay attention. And that is the perfect reason to always be prepared, to always have those bullets in your pocket. Yeah,
and I love that. Scott, I appreciate, for those of you who don't know, Scott Bauer, CEO of Prosper Trading. I absolutely love you. As you know, we've been friends for a long time, and I do forgive him of his love for the Cubs, but it is what it is, and I understand that. But, when you talk about professionals, it does not get any clearer than the Scott Bauer here, folks, and Prosper Trading Academy. Look, I'm going to put this link up here one more time, prospertrading.com. Click on that link, hit the button, hit that like, subscribe. And for those of you who are watching now, I mean, we're passing up Reuters. We're passing up all the big names here.
Let's go.
Live on the show around the world, Scott. So I appreciate that. Thank you so much. It's so far so good, folks. We're going all the way to the end, and I'll let you go because we've got the next guy coming in. This is not stopping, Scott. So thank you so much. We love you.
Proud of you and what you've built with Quasar.
I thank you so much. It's been a dream of mine, and I think the dream is happening. So it's very cool. Thank you, Scott. I'll see you later.
Have a great weekend. Go Cubbies.
All right, everybody. Right, keep right on moving. Here we go. Y'all love him. Here we go. Todd Bubba Horowitz. Todd, the president just got smacked in the face from the Supreme Court. He's about to come out alive here in a few minutes. What's he going to say?
Well, he's going to say that he's got another plan. Good morning, BigBeat, and congratulations. Great to be here. But he's going to say he's got another plan, and I'm sure he does. He's already bitched and moaned at the Supreme Court, and how could you possibly? And look, I'm in favor of the tariffs myself personally, but I can't believe the Supreme Court ruled against it. But hey, that's what it is. But he'll come up with something else. Look, his biggest thing is he wants to be in the news. He wants to be a part of it, and he wants to continue to try to make it. And I don't think that's going to change today.
Okay.
But what's he going to say? I mean, is he going to come out and say, hey, guess what? I don't like you in the Supreme Court. I'm going to try to fire you. You can't fire the Supreme Court.
He can't fire him. He can't do anything about it. But he's going to come out and say he's got another plan. I've already seen that quote earlier this morning. I've got a new plan.
Same.
What that is, maybe we'll get a picture of it when he comes out in 15, 20 minutes, whatever it is, and talks. I mean, we know one thing for sure. He talks and talks and talks. And he's always got something, and half the things he says is no good. And it'll be, everything is great. That we know. I'm doing a great job for the Americans, and for a portion of me is.
Yeah, and when I think about the tariffs, I mean, I look, I've always been against tariffs. I don't care who the president is. I don't care the politics side of this. They never work. They never have worked. They're not working. We saw the GDP of the United States. It's not pumping, right? And we understand now. We had our dear friend Steve Flanagan on earlier, and he made some really good points that saying, look, there was snow on the ground and government shut down, and he was right about that. He nailed that, right? So are we going to see numbers changing here? The GDP numbers changing? Are we going to see all of that? What's going to happen here?
Well, Big B, I don't really think the numbers are all that good anyways. Again, I know they missed today. I don't think we get a fair and square number ever, because every number we ever get is always revised later. So after it hits the headlines, if it's good, the market sometimes reacts, but nobody reacts to the revisions. We've seen that. Look at the big jobs revision we had from last year, from 540,000 jobs down to 140,000 jobs created. Look, government numbers are as worthless as the dollar bills that we spend. They're worth nothing, and they give you nothing on a regular basis, which is why trying to trade the news or follow the news, you're never getting the straight story, nor are you getting the intended revisions that are going to come along with it. So again, I don't pay attention to any government numbers, including WASD when they come out for the farmers. To me, they're all garbage.
So you don't like any numbers coming out of the government at all?
No, I don't want to hear from them. I want them to go away. You and I talked about this yesterday. I want them to go away. They do nothing for the American people. They do everything to line their own pockets. When is the last time, other than the attempts that President Trump has made, in my opinion, when is the last time either side of the aisle has really stepped out for the American people and said, we're going to fix this for you. We're going to make it so you pay lower taxes. No, they want to keep spending money. That's why we have these stupid government shutdowns, because both sides want to get paid. I mean, how many people who got a raise twice during COVID? Oh, the Senate and Congress got a raise twice during COVID.
Yeah, I still can't believe that one.
Okay, so when it comes to government and the numbers they report, to me, it's a bunch of garbage. Again, it's been bothering me the whole time what they spend, and look at all the taxpayer money they spend on stupid stuff, on nonsense that makes nothing for anybody. So
let's flip the conversation a little bit. One of the things that you like doing, and by the way, those of you out there, thank you so much, Bubba. 36,000 of you watching right now live. Super excited day here, media day here now at Quasar Markets. And I'll tell you, one of the things I've always wanted to build this, right? Where I have all you guys out there that are the smart ones bringing one show going live. So thank you so much. Make sure you subscribe, like, hit that button. Go to quasarmarkets.com. We got some cool things coming. Give me a few more weeks. We're going to show you the new platform, the new sites, the new everything, and something very cool for everybody out there too. You'll be able to, well, I won't tell you about it till later. But what I will say to you is I'm super excited about having you, right? And I think what's cool about this, Bubba, is you're out in Vegas. So let's talk about Vegas for a bit. You do play poker. I know that, and you're a damn good poker player. I want to learn from you someday, and maybe you'll have poker channel here someday. I don't know. Maybe we'll do that. We'll get the poker channel. I love that, by the way. We should do that. Actually, that's a good idea. How are the numbers out in Vegas? Are the casinos full? Are the hotels going? We see that people are unhappy in the world. How's Vegas going on right now?
Vegas numbers are significantly lower as well. Obviously, there's a lot of reasons for it. Partially the economy, partially there's gambling just about everywhere right now. So at the end of the day, it really doesn't matter. But things are not good in Las Vegas. Numbers are down. Just look at the Super Bowl handle and the parties that were out here. Vegas was not at all crowded during Super Bowl, and that used to be one of their biggest weekends that they had. So you're seeing the consumer is kind of walking away. And again, in the Vegas case, because there's casinos in 36 other states now, they don't have to travel necessarily to Las Vegas. So we still get the big California crowd, but overall, their numbers are significantly lower here. Business is very tough and very tight here, which is why they're offering more promotions and more things to try to draw more people in. But I think Vegas, the entertainment capital of the world, says a lot to what's going on in the rest of the country. And too many people don't pay attention to what's going on in the rest of the country. And of course, we all like to ignore it until the fact it's too late. Andrew's going to bluff me. I can't wait. Come on down, Andrew.
I love it. I love it. Let's take a quick market check here now. Dow down 100, about 118 points here, or about 0.25% off there. S&P, the SPOO's here up a little bit. NASDAQ here about up 80 points. But I think the winner today has got to be gold. And the velocity, people are nervous, right? 5,066. You called it on Thursday, my man.
You know what? No, you know how old you are? Nobody calls them the SPOOs anymore.
Yeah, sorry. They're so institutional. I can't help it. I'm still.
That's what we called it all the time. Look,
that's right.
The markets look really weak. They've really failed from higher levels. Not a surprise. I think that I'm in a sell the rally mode, but it doesn't mean you just sell a little bit of a rally. It means you got to find a level that you're comfortable. You got to find a level that you're going to exit if you're wrong, because you're not going to be right in every trade. So you got to find your exit point so that you can re-enter. Gold looks really solid and is flying higher. They tried to sell it off right after the announcement. They took it from up
Scott Bauer just said every dip in gold he's buying.
Yeah, but we still are pretty much in consolidation. And I think that, again, I think it's going to break to the upside when they finally break out. But I think you're going to see, if you look at gold today versus last Friday, we're within $20 of where we were last Friday. So we're going sideways. It's just in gold, the volatility is a little bit higher, going back and forth, but still sideways. Much like the rest of the market.
You're an options guy too. Would you put some straddles on here, some strangles? What would you do?
Well, actually, I do a lot of weighted double diagonals. I don't ever buy premium unless I'm selling premium to go along with it.
Double diagonals. You want to explain that one, everybody? I love that side of things.
That's actually, they're weighted double diagonals. So, example, for right now, I have on positions in coin. Okay. I'm sure I'll tell you exactly. I'm going to look at it right now. I'm going to tell you my exact position as it sits at the moment. It's been on for a while, but I'm short in coin. I'm short the 197.50 call, and I'm short the 177.50 put. I'm long 200 calls, and I'm long I'm long 175 put and 140 put because I rolled it down and cashed in. And my expiration for the longs is 28 days away. My expiration for the shorts is now next Friday, and then of course I'll roll them again the Friday following. So I do a lot of premium selling to finance out these trades. And by the time we finish, we don't have too many losing trades. Okay. It takes time. You sell premium. And now the big advantage for me and for those guys that trade with me, Apple, Amazon, Nvidia, they all have every other day expirations now. So we get a lot more premium selling because I will tell you this, the sum total of the daily option is always greater than the weekly, and the weekly is always greater than the monthly. Well, now the sum total of the every other day is greater than the weekly, and the sum total of the weekly is always greater than the monthly. So you're collecting more premium. We use this trade a lot in the SPY because we get to trade daily and roll daily, the Qs daily, IWM daily. So we do a lot of things that have premium that we can sell on a regular basis, and we always have that extra option. So if you get a gigantic move, like in SLV, not only did we cash the upside of SLV, we cashed the downside of SLV, and now I've got left in SLV as an iron condor.
And what Bubba's trying to say here is, if you can see here on the charts here on coin, he sees where the sellers are, he sees where the buyers are. So he's playing the in-betweens and hope they don't go outside those in-betweens.
I'm hoping, I would love coin either go to 100 or go to 250. It doesn't matter to me. I'll make a lot of money if it moves, but if it stays where it's at, I'm going to collect $300 to $400 a week just on the premium collection. So again, this is a very unique trade that you get an opportunity to make money if the stock does nothing. You get an opportunity to make money if the stock makes a huge move either way. Oracle, 2 earnings ago, we made $70 on every contract. We made $7,000 a contract on Oracle because it moved up so much on its earnings. And again, it doesn't happen all the time, but we're prepared for movement. but we understand financing out the initial debit that we pay, and we reduce the debit, we reduce the risk either on a daily, every other day, or a weekly basis.
Yep. And here's again what he's talking about. You can see the selling here in Oracle. I actually went long Oracle a couple days ago. I took that profit off, ran with the wind. I'm looking at it again here, Bubba, down 5% again. This is the hardware, right, of AI. So nothing's wrong with this thing.
No, look, I think you find a level to buy. I'd love to buy down on your purple line if I were looking to buy it. Again, we were actually playing it for earnings. And by the way, these weighted double diagonals are unbelievable trades for earnings. Okay. Because you do get paid. You get paid extra premium on the short term. And remember, your long-term volatility, especially when the VIX is lower, when you get a spike in volatility, your short-term options don't explode anywhere near what your long-term options do when you get a spike in volatility. So there's a lot of benefits to it. I teach it. I trade it. We've always got on about between 12 and 20 open trades with this weighted double diagonal strategy.
Man, I absolutely love this. I'm totally enjoying this, Bubba. Let's talk a little bit about other things that. Let's talk about your past. Let's start from the very beginning. Let's roll back. I'm gonna get in that mind of yours and pull it out. Tell us why and how, and you started out, and where you started out, and what you were thinking at the beginning, like all the rest of us that got into trading, as the institutional side of you.
You want the skeletons in the closet too? No,
I want it all, baby. That's why we're here. 40,000 people watching. I think so. They want to see how it all goes.
It's funny. Back in the late 70s, I'd been working for Pitney Bowes as a salesman, and I was young, and I said I want to be promoted. I was the #1 salesman in the country, and they wouldn't promote me. I said, well, screw you. I'm going to trade. And I knew some guys on the floor. I went down to the trading floor in 1980. You have to find a clearing firm. You have to take a test, and you have to come up with money. So I was able to accomplish all three of those things, and I actually started trading out in Superior Oil, which was a big trade because it was T. Boone Pickens who was buying and selling. But all of a sudden, in about 1981, 1982, this pit opened up that it was so busy that the people were out in the hallways. It opened up in the original bond pit on the 8th floor of the Chicago Board of Trade building. The people were trading in the hallway. It was so busy. That turned out to be the OEX, which is what really made the CBOE. And of course, that's what they built their new floor off. And I became a big trader in the OEX and traded in the OEX my entire career on the options floor. But also in 1982, when a new option or a new series comes out, they need market makers that are willing to go in and make a market. Well, there was 5 of us that were willing to go make a market in the SPX. So we actually built and started the XPX in 1982. Okay. And of course, as I traded, I continued to trade through and teach and have clerks and have guys working for me. And at one time, the OEX was the biggest trading pit in the world. And it was wild when it was wild. And of course, when it was dead, it was dead. But it was a lot of time on the golf course, a lot of time playing backgammon, but always time when it was busy to be in the pit trading away and trading, 15, 20, 30,000 contracts a day.
And for anybody who does not know, that's a lot of contracts. If you think one contract's 100 shares, folks, that's a lot. Bubba, you're pretty popular here, man. Almost 40,000 people watching. I love this. Tell us, okay, so you did all this trading, and then you said, I'm off to Las Vegas, Nevada. Why'd you go to Vegas?
Well, listen, I always loved Vegas. We used to come to Vegas. All the traders, 12 of us would go play golf every year and always end up in Vegas. I've been coming here for 50 years. Love it here. Love the no state tax here. Love to go play poker anytime I want, which I do. And I think it's a great state. And there was no trading floor. I mean, listen, let's be honest. You give me a trading floor, I'll pay $1 million today to go back to a trading floor, okay, which will never happen. But to me, there was no life like the life of a trading on the floor, okay? It was active, it was busy, and you could really play the field as if you were in a poker game. You were playing an opponent, and you could always tell, there's an old saying on the floor, when you could see a guy's tonsils, or to be politically correct, a girl or a guy's tonsils, give them whatever they want, they're wrong, okay? And that's the screaming. That's what you miss with electronic trading. But, I came off the floor. I traded at the CME. I traded the CBOT as well. I traded all three, but the bulk of my career was at the options exchange. But in 2014 and 15, there was really no floor. And then COVID came.
Yeah.
And of course, I said, okay, I'm going to Vegas. I was always going to move here. I owned a house here already. I said, okay, that's it. I'm gone. And here I am in Las Vegas. I love it because I'm done. If I want to work all day, I'm done at 1 o'clock. And
I think Vegas would totally enjoy having a true blue open cry platform. I think it'd be great to have an open cry there, wouldn't you?
I would think it would be great. But again, you know what? When the exchanges became for profit, they used to be nonprofit organizations. When they became for profit, they're coming out. I don't know if you're aware. I'm sure you are. But the CME is announced in the spring. They're bringing back single stock futures.
I like that. What's wrong with that? I'm okay with it.
No, it failed once before, but because of what's going on now, because of the poly markets, Kalshi, and all these other places, and all this gambling, now they're bringing back single stock futures. Apple, Amazon, all the big ones will have, and we'll see how it works. It did not work the first time.
It didn't work the first time.
It does not mean it will not work this time.
But I will say this much. If you play with the bigger ones, like the Mag 7, I think that would be different, right?
Yeah. I mean, it's going to be a future. It's going to be a wild moving future. If it succeeds, if they can get liquidity to go into it. But you have these markets now, okay, that again, this is the instant gratification market. Now, the big advantage for traders, okay, is no FINRA day trading rule, okay, less margin required to trade them because you can trade an S&P right now for $500.
Yeah,
okay, on a day trade basis. Okay. So that's going to change a lot of the things, and it may take away quite a bit of business from the options exchange because it's a tax benefit, 1256 income. So there's a lot of better benefits of trading futures. And I hope that someday FINRA wakes up because their day trading rule, A, is antiquated, B, is to punish the trader and protect the clearinghouse, which you and I both know is not the right way it should be.
But it's okay, though. I mean, look, there's enough money out there, right, Bubba? Come on.
The FINRA day trading rule is stupid.
I think they should burn that rule to the ground. I mean, look,
if you're in a position, you can't close it because of the day trading rule.
Yeah,
okay.
Correct.
And then when you get stuck, you get a 90-day suspension. Look, you want to make
back in the day, Bubba, I got several of those, so I totally feel their pain. I lived in the PDT problem.
I mean, let's have some reasonable rules, but of course, that's why the CFTC is so much better than the SEC right now, just because of those particular reasons. Listen, I don't want people to go blow out their accounts.
Right.
You should be able to trade more actively, and certainly
should they take a little test to see that? Hey, can you at least understand how to buy and sell and how to do? There should be a little bit of a entry fee, shall we say, to get in. I don't mean financially, but there's got to be. Look, I traded better after I learned, not before I learned. You and I probably learned the hard way, right? I lost $10,000 the first freaking month in the pits, right? I mean,
well, wow. My first winning trade was my first one because it was a history on the trading floor that some trader will walk up and give you an eighth, okay? Give you a winning trade.
So explain that, Bubba. Back then there were no decimal points. They were in the hyphenations.
12.5 cents. Somebody gave me $12.50, and then it took me 6 months. The only way I was able to survive for 6 months was by playing gin, poker, and backgammon.
I mean, people always ask me why Chicago, and I'm like, hey, you know what? Because the minute they walk off the floor, they went to Joliet on the gambling boats.
We went right upstairs to the office. Any day. When the market slowed down, there was heart games going, there was bridge games going, there was backgammon games going, and there was gin games going. Every day, the lobby, our office, which was Brant Trading, we had 50 or 60 traders. Every card table was full with one game or another. Played a lot of backgammon.
Same people that you saw that morning at 8 o'clock getting ready to go to the bean pit, the bomb pit. You saw them right there on the boats. Exactly. And, of course, you had to have drinks at Ceres. I mean, that was the place to go.
They're serious. I don't know if they're still there or not, but they were there last time I was down there.
I was just there not too long ago. I love Ceres, by the way. For those of you who don't know, in Chicago, in
and downstairs in Chicago is where the restaurant and the drinks are flowing pretty heavily on the good days and bad days, and as Jimmy Bubba says, sometimes the mad days. So
they give you a good pour too. So if you want to go get hammered, Sirius is the place.
You seriously got hammered in Sirius. I love it. All right, let's get to it. We got some cool ones coming up as well. We got Jim Batches coming in from Trade Pulse here. Folks, I'm loving this for Quasar Markets Media Day. We're blowing everybody out. I love this. And we're most popular thing on all over the world. 41,000 of you live now watching us as we are, look, a day like today with so much news in the markets and the volatility of the markets. We wanted to build a place here at Quasar Markets. And if you don't know, Todd's also part of Quasar Markets too as well. Comes here on Tuesdays and Thursdays. But we want to bring all of it together, right, into one place, brokerages and data and stocks and quotes and futures, and put it in one place, chatting, not just having separate things, but everything in one place. So I appreciate everybody. Gosh, we're just getting lined up, man. We're going to have a homecoming a little bit later from CNBC. The old traders are coming back in later in the afternoon. So, yeah, I know you've got places to go here in a little bit, Bubba, but I want to keep you around for a couple more minutes as we bring in Jim Batches here in a few minutes. But
it's my honor to be on Quasar Markets, man. You're doing a great job. This is what business news was meant to be.
Right.
Okay. Not bullshit opinions that are being forced on people. But when you get guys on, when I was on with Michael the other day, him and I both spoke our piece, and you didn't say, well, no, you can't say that. It's this is what it should be. This is what, because
this is how it was back in the day, Bubba. This is you said those words. It's okay. FCC can't do it. I love this.
You took the business back to where it should be, where you get an honest opinion. I'm not selling a book of business. I'm not convincing you to do something. I'm telling you what I'm doing. You don't like it, you don't have to do it. I'm going to give you what I think. I'm never going to filter myself and say, well, I can't say that. I'm going to tell you what I think about anybody and anything. And that's what you brought back to this business. And you should be very proud of yourself for bringing this out to people, because I think that most people really want to hear the truth. I think we're tired of hearing, if it's Fox Business, it's one story. If it's CNN or CNBC, it's another story for the same story. I think people want to hear what guys like me or guys like Kenny Paul Carey and other guys you're going to have on, Prosper, Scott Bauer, my friend, they want to hear what you really have to say, not any BS. Just here's what I think of the market. I may be right, I may be wrong. But
yeah, build a platform for that, build a machine to do that, to help people to understand how the markets really work. And not just because someone has 1 million followers, this is how to trade. I watch it all the time. And Bubba, I go, what are you talking about? I've been here 35 years. I've never seen that before. That's nothing. It's nonsense, right? And I like what we're doing here. When Ron and I first started talking about this, crypto Howard just said, "Go Bubba." He loves what you're doing. I love this. For those of you out there, if you don't mind, click the like, subscribe button. I love this. Send us messages. That's why we built this thing. But Bubba, when I look at these markets, and I go, wow, there's a lot of people who don't know jack about the markets, and yet they have a platform to yell and scream about it, and they're wrong. So when Ron and Son and I started talking about this, is what he said. Something I've always wanted to do, and I'm like, dude, have fun. Look, I want to build a platform, and I want to build a place that creates the ecosystem, all of the financial firms, all of the media in one place. It says, hey, this is what we're doing, right? I love this. I absolutely love this. Obviously, the Oracle numbers coming up.
There's so much bad information out there. There's so much of a con game or a shell game out there with anybody who's got a Twitter handle. Here, you get real opinions from real traders that are really putting not your money at risk, their own money at risk. I mean, I trade my own money every single day. I've never taken anybody else's money. And again, I want people to learn that this is not easy. This is not an easy. You're not stealing anything. This is hard work. It's
80% of retail traders lose money, if not more. Right?
You have to educate yourself. You have to take the time to learn what price discovery is, what drives the markets, why you see these crazy moves out of nowhere. I mean, you and I have been talking. When we got on, the S&P was down 5 points. Now it's up 30. Okay. Why does that happen?
I think we talked the market up here. I love this.
I mean, again, this is what people don't understand. And anybody with a handle, listen, we can all make up bullshit, and I just don't like it. Okay, that's one of the reasons that I've stayed to myself, because I only go places that I can tell what I want. Okay, that's why I have a good relationship with Fox Business, because I could say whatever I wanted. They never bothered me. I used to do spots right from the hip.
We love it. We love it. Yeah. You know, I love them all. I mean, people say, "Oh, you can't love them all." I do. I actually do. I do like the professionalism that goes in. But not everybody's going to watch it. Not everybody's going to watch this one or whatever. I want to create a place for all of it, so that the person that's watching makes a decision of what they want to see, and not just because they can how fast they can hit the button and switch the channel. I want to have it all in one place.
You got it all, and you're building an empire that will help anybody. Okay, whether you're a beginning trader, because you're going to have help for beginners, to someone who's extremely advanced. You know something? I've been doing this. This is my 47th year, BigBeat. Okay, I still learn something and try to learn something new about trading every day.
It's the best part about trading. Every day we learn something. I learned something the other day I didn't even know about trading. I was like, oh, okay. I love that, right? I constantly learn.
You got to be willing to learn. You got to be able to put your head on straight, and remember, the biggest enemy you got is the thing in between your ears. Not
everybody says that about. I was going to say,
the average trader, the biggest problem, you're most of the time, people are their own worst enemy when it comes to trading.
I had to learn that the hard way.
Yeah.
You know, I had to learn it the hard way. I had to learn to control my emotions when trading. Today, I have no emotions when I trade. I buy, I sell. I mean, I bought quarter weave today, and it's down a little more. I didn't even look. I mean, I didn't even care. Right? I bought Amazon on the dip. I said, heck yeah, that's a smart move. IBM on the dip, loving it. Right? Hood on the dip, and it's paid off. And I don't even care, because I made a thesis trade, and I love that. So yeah,
you make the right trade. Listen, they're not all going to win. You make the right trade. You found the reason. You knew where your exit point was. That's all you can do.
You know, when I look at these new traders today, what would be the first thing you would say to them? They're just starting out trading with their small accounts, and they're just dipping their toes in, as Steve Flanagan would say. What advice do you have for new traders?
I think the first thing is you have to educate yourself and be very careful with what I talk about education. Okay, there's a lot of bad education out there. There's a lot of misinformation about the option market, but certainly if you go to, I mean, even Investopedia's got good information to at least get a base knowledge and a feeling for how the markets work. You have to also understand that just because you have the ability to buy 10 contracts, maybe you should be buying 1 or 2 if you're trading options, or in the futures market, in the micros. You know, people get carried away with leverage. And then the worst thing that can ever happen, if the leverage works on the first trade, they think that leverage is easy and it's nothing but making money. I think you have to understand the discipline of trading, the discipline of watching your capital. And the biggest thing I can tell everybody is make sure that you have an out. You have to know your exit. The minute you enter a trade, you have to know where the trade goes from you liked it to do this, where it no longer likely to do that. You can't sit there and make the excuse, well, it's going to come back or it's going to do this. No, you have to be able to exit with a loss, which you are going to have, but you can get back in. You can find another reason. You have to have a reason to get in and make sure you have an exit to get out.
I agree. Bubba, I just want to say thank you for being a friend at Quasar Markets and part of what we're building and doing. And I absolutely love this. So thank you so much. The numbers are up again, folks. Like, subscribe. 43,000 people watching right now on the show.
Pay attention to BigBeat on the street. There he is.
Thanks, Bubba.
Thanks,
we'll see you next time.
Thanks, Steve-O.
Ladies and gentlemen, I just want to first of all say thank you so much from Quasar Markets. We are absolutely enthralled by what's going on here. Love what's going on, and I'm excited about the next guest because another professional showing you exactly what's going on in the market. A company called Trade Pulse. I'm going to bring him in right now, Jim Batches. Jim, how are you, man?
Steve, what's going on? Been watching all day. It's been exciting.
Yeah, thanks, man. You know, I think one of the cool things about what we're doing at Quasar Markets is that it's the partnerships that you have, right? I mean, so often it's this go it alone attitude from all these firms. And as I always said, it's because you have a great module or whatever. There's no place to put all the professional stuff in one place. And that's what I wanted to do, and professional people like yourself. So I'm gonna get out of your hair. Folks, if you don't know, Trade Pulse is a place to be. You're going to learn a lot. You're going to hear the way the professionals learn it, and you're going to understand what the institutionals are seeing. So if you don't mind, pay attention for the next 15 minutes here, and I'll let you talk about, if you don't mind, share your screen here. I will remove my screen, and you can add your screen, and then we can get into what Trade Pulse does. And Jim, Trade Pulse, thank you so much for being a part of it.
Yeah, likewise, Steve. It's always great to be with you. And it's been awesome being able to see everybody you've had on today. I mean, so many different perspectives. And in times like this, I think, all the information you can get, the better. And, that's really what we're trying to do. So Trade Pulse, anybody watching that's new to us, we're an order flow analytic company. Essentially what we do, we provide real-time market flow data. We provide real-time order flow data. We also have our own signal to help give you even a further insight on how a stock may perform intraday. So, really during these volatile times where there's news coming in left and right, we're trying to provide that edge to the real-time intraday active day trader. So, you got our screen pulled up here. So this is what our platform looks like. Got a real-time example I wanted to share with everybody today. I think this would be a good way to illustrate really how you can best utilize our platform and really get that edge. So, as you see here, we have Lumentum Holdings pulled up. This is live on our platform. All the data you see updates minute by minute in real time. So I'll go through the different data points real quick just to help tie everything together for what we're looking at. So for starters, you see that black line there. That is the stock price. We track that minute by minute in real time, so you can always see how the market's moving for, in this case, Lumentum or any other stock you wanted to search on our platform. And then some of the other data points here. You see the green shade kind of facing upwards, and you have some of the red shade towards the right facing down. We call this our momentum flow data. So this is really capturing the intraday sentiment on the retail side. So the red shade that you see is indicating that there's obviously been more selling than buying, and then conversely, the green shade, more buying than selling. And then this light blue line that you see kind of running almost kind of tangent with the price there. That light blue line, we call this our large deal flow data. So this is capturing all the big money that's been coming in for Lumentum on the day. Typically, these orders are going to be $100,000 or more in value. So, these are typically your hedge fund, mutual fund type orders that we're tracking. And then the last data point I wanted to point out is this vertical green bar that you see. We call this our power inflow signal. So this gets activated for select stocks on our platform. And just to give you a little more background, we track over 2,000 stocks on our platform. This signal comes in for maybe about 10 to 15 per day. So I picked one of the examples that came in today. And this signal gets activated anytime we've sensed a real significant shift in the order flow from negative to positive. So this is essentially a bullish trend indicator we provide. Essentially, what we're saying here is the stock has a very high likelihood of rising shortly following the signal because of the order flow shift that we've seen. Really, we're trying to get people in at the most opportune time by providing this signal. So, just dive in a little deeper into this example for Lumentum today. As you can see, the price was kind of stagnant leading into that signal. You can see it was a little choppy. But the one thing I really want you to notice is that large deal flow data we just talked about, that light blue line. If you can see it here, it was kind of moving pretty closely with the price. And at the time, this signal was pretty flat. And again, what we're trying to capture is that real order shift, flow that we're talking about, the real significant shift in the order flow. You can notice that light blue line really jumps up shortly following our signal, and you can see it's remained pretty high throughout the rest of the day. And sure enough, what do we notice with that stock price? It's really flowed with it. You can see the signal came in, the stock was around 650, it looks like. The signal came in around 10:15 a.m. this morning. And again, the stock was around 650 when that signal hit. And you can see there was a real spike following it. The stock is, really steadily rose throughout the day. Looks like the high it's got to is around 677 just in about an hour following that signal. So, again, in these volatile periods, we're trying to get people in at the most opportune time. Obviously, news is coming in all the time, so things can fluctuate. But the order flow still plays a huge part in how a stock's going to move, and that's really the edge we want to provide. Anybody who may have got in shortly following the signal today, for an example, again, say you got in the 650 range, stocks right now trading at 672. Again, got up to around 677. Just in about an hour following our signal, we're talking maybe, what's that, about a little over 4% gain just in a matter of an hour. And that's really the edge we want to provide to the active trader. And again, I think this really points out the importance of being able to follow the order flow in real time, and then using that with our signal on our platform and being able to time the market at the most opportune time. Because I think that's a challenge many people have, is knowing when to get in and when to get out. We're certainly trying to make things easier.
Yeah, and I love this. I love this, Jim. One of the things that people always get nervous about is like, well, they're always looking for a trade idea. And I don't like that. That's a stupid idea, because what's a trade idea? I mean, I got tons of trade ideas, but I really want to know what's really moving and why it's moving and what it's doing. I don't just need a trade idea. And you're showing institutional flow. We're reversing it. People don't know this, but if you're not paying for your trades, you're the product, right? I mean, they're buying that, and here you're reversing that, and you're saying, hey, I know what the institutions are doing, and you can see it in real time. And Jim, if you don't know, 45,000 people right now live are watching you in Trade Pulse, man. I gotta love this, man.
Exactly. And to your point, a lot of people trade off hunches, stocks they just may like because for whatever reason. We're giving straight data. This is real-time data that we're trying to provide to investors, so you can make that real educated decision, on really when to get in. And like I mentioned, the indicator we provide is a bullish indicator. But you can use this multiple ways, because again, you're following the order flow in real time. And like we see here with that large deal flow data, the institutional buying, you can see that really picked up. But you could use it the opposite way as well. If you see a real dip in that institutional flow data, that could be your indicator to maybe get out at the right time, right?
Yeah, so, I look at the inflow, power, what you call the power inflows. So it's giving to you in real time. So I see that RTX is popping here a little bit, right? On your power inflows.
Yep, that's been one of them today. So as you mentioned, as I mentioned, we have a list of about 10 to 15 per day. You can see the section over here we have for power inflows. If you were to click on that, it's going to list all the ones that have generated that signal today. So RTX is one of them. You can see all of them here. And to go with that, just kind of building off what we were just talking about, you see the top flows section over here. This is capturing all these stocks that have had the strongest buying power on the day. So we rank them the top 30. This updates
there's
in real time as well.
That's very popular, SanDisk. I see it right now. And look at that. Look at that. Even with all that, there's still money flowing into SanDisk.
Yeah, exactly. So, for all of these, on our platform, you would expect to see in all likelihood, a pretty strong price rise throughout the day. Because again, we're aggregating everything together. We're trying to capture all sides of the market, and we break it down so what the retail is doing, what the institutional side's doing, and then we group it all together on this top inflows section to really give you a sense of which ones have been the strongest today.
Yeah, 46,000 people are watching you, Jim. You and I have been in this game a long time. Talk to us a little bit about Trade Pulse itself, how you got into it. What were you thinking, man, when you said, I'm joining this team, man? What was it all about?
Yeah, really fortunate to be with Trade Pulse. So, we got our start in South Korea, actually. That's where we're based out of. We've had tremendous success there. We've been able to partner with, really all the big brokerage companies over there. And we've been able to reach hundreds of thousands of users in the South Korean market. And that's really where we got our start. And that success has really led us to the U.S. market. We wanted to be able to share our data with everybody. And obviously, this is the largest market. So, we really wanted to branch out and expand into the U.S. With our data, in terms of how we produce it, the South Korean market provides end-of-day investor-type data, able to separate it by local institutions, foreign institutions, and we've been able to really use that data to help train our model to break into other markets like the U.S. And that's really how we're able to generate this order flow in real time. So
And what's cool
You know,
about it is Trade Pulse is an international company, so it's not just U.S. stock. You get everything, right? I mean, you guys are really on the cutting edge of that kind of technology, and I like that because you kind of flip the script on Wall Street a little bit. You said, "Hey, I know what retail's buying, but do you know what institutions buying?" And that's the cool thing I like about Trade Pulse.
Yeah, exactly. And as you know, Steve, we sell our data as well to big institutions. We partner with hedge funds. We provide our data to them. So this is really what the big money players are using, and it's data that may not be typically available to the average retail investor. We're really trying to level the playing field there by being able to share this data with everybody. And for us, we're constantly growing. Like I mentioned, we got our start in South Korea. We're in the U.S. We're also building models for other international markets like Taiwan and Japan, which hopefully will be coming soon as well. So, we're continuing to grow, and we think it's something that's really useful for everybody, and that's why we're doing it. We feel like we can provide a real edge.
And I'm gonna pull up the if I can here. This is Trade Pulse's website, and I put the link right there for everybody to see. TradePulse.net. Click on the button, folks. There's a little video here to give you a little user guide. You see it's got a mobile part of it too as well. But real-time order flow in your hands, that's just nuts. I mean, that's crazy kind of data. I love that. I love all that kind of data, and I love the institutional side of things because that's really where the money's going. Sorry, I mean that's just, and I want to know that, right? I don't want to be selling my own data away, right? So I really like that. And I'll tell you from a Quasar Markets perspective, hey Jim, I really, really do appreciate the partnership that Quasar Markets has with Trade Pulse, and as we grow, right, and we build together. This is just the beginning. I'm super excited about all of this.
The whole thing's been exciting. It's been great to partner with you throughout the beginning, Steve. I know you've been with us, so can't wait to see where we both go from here. But I know it's all exciting. Happy for you, happy for us, and I know only good times are ahead.
Good times ahead. I love it. And when I look at the markets, I always want to make sure that I'm talking to the professionals, not just because you have some website that you got 1 billion views. I don't care about all that. I want to know what's really going on. And Trade Pulse has built that software to make that happen. So I really like that. And I'm really, really proud of the whole team there. They all know me, and I love them a lot at Trade Pulse. So guys, we got a long history going together, and we're gonna change the freaking world. I love this stuff, man. I love this stuff.
Exactly.
All right,
and for all your
Jim.
I was going to say for all your viewers, want to check us out, TradePulse.net. 30-day free trial. No harm, no foul. Get in there, test the data out for yourself, see what works for you. But we're happy to share with everybody.
I love it, Jim. And if you don't know, you can see Jim every Friday right here in Quasar Markets Live. Jim, as always, man, thank you for all your love. And I look forward to seeing you next Friday.
Can't wait, my man. Appreciate you having me, Steve. I'll be watching the rest of the day. Looking forward to it.
Thanks, man. I appreciate all the love. All right, everybody. Quasar Markets Live. We're still going at it. Hit that like, subscribe button, retweet, all the things you guys are doing. I don't need to tell you the next person coming up. I don't even need to explain this one at all. Guys, if you've been talking about gold all day long, we've been talking about precious metals. We've been talking about Chicago. We've been talking about New York. All of it. Without further ado, my friend, Peter Thomas, the guy who has been on the floors for so long. I think the floor was built around you, Pete. I mean, you, when people talk about knowing metals, they know metals. Pete, there's no one better that knows metals than you, I would say, right?
Well, I like to fool myself that way. But I will tell you, Steve, that when you stop learning, you might as well stop, right?
Yes. It's been a common theme throughout the day on Quasar Markets Media Day here that, everybody has been asking, right, about this, right? So they're talking about South Wacker right there now in Chicago. I love it.
Oh,
Thanks,
yeah.
Appreciate it. But listen, Peter, people don't really know this about you, but I'm gonna splay it out there. We were just talking about series, right? The bar, right? But let's talk about it. Let's go all the way back, Pete, and let's talk about what you're very famously known for. And so many retail traders, I love this, is about the silver trade back in the day with the Hunt brothers. You were the guy. You were the guy. So take us, let's go take a walk down memory lane and talk to us about what it was like living during the silver trades of the Hunt brothers. And I'll get out of your hair.
Well, I'll tell you what. We have so much to cover today, Steve, with political decision from the Supreme Court, all the numbers coming out. So we'll go down memory lane here as quickly as we can. But back in the day when men and women stood on the floor and there were no bots and there were no spoofing trades and things were done on a man's word, and you said, I buy him. And to tell the story on how I ended up with the Hunts is I was a young guy standing in the back months, which are called the Reds, and they have lower volume. And I was learning my craft. As everyone knows, my dad was on the floor for 40 years in the gold, and I was in the silver. And an order came in that was inverted. It was incorrect. And if I had filled it, the customer would have been mutilated. And I looked over at my order clerk and I said to him, "Chop, this is wrong." And he's, I'll get him on the phone. So I got the customer on the phone. Guy got on with this really heavy Southern drawl. And I said to him, "Look, sir, there's two ways to do this. I can either make a lot of friends on the floor right now, or we can correct this and I won't bury you." And he said, "All right, son, I like that. Let's do it." And I said, "Make all your orders to me DRT so this doesn't happen again," which is directed by the trader. "And I will take care of your stuff so that you don't get killed. You're trading big and you obviously don't know how to do inversion on spreads. So let me help you." And that's how we started, Steve. We started with me finding an error, correcting it. And at the end of the day, as I own my own seat, I get a wave from a friend of mine and who was the head of clearing. And he goes, "I guess you're now working for the Hunts." And I said, "Who are they?" "And I don't work for anybody. I own my own seat." He said, "I think you better talk to them." And
I think you're working for the Hunts after that. I appreciate that. All right, real quickly, Pete, Trump says he's going to invoke new trade authorities in the response to tariff ruling from the Supreme Court. Now let's get to it. You are Mr. Metal, so let's get to it. 5,066 now an ounce on gold and silver now.
And bid, Steve, yeah. And the one thing that I enjoy about Quasar is that you and I always try to drill down and get the truth. And the truth is this: insecurity causes strength in metals. And what we're seeing right now, Steve, is I just sat down and read the minutia from the Supreme Court, and it was confusing at best. And I'm still going over the points of it. I know right now the People's Republic of China are dancing around the central bank, high-fiving each other because this just opened the gates for them. They're absolutely ecstatic. And what that's going to do is inflation is coming back, baby. And so gold is going to be rocking and rolling.
Yeah, you look at silver, 82 now an ounce here, pushing higher here, 82.31 an ounce. Silver popped. I shorted silver at everybody has 121, crushed that market and bought it back. To me, silver seems a bit overdone again here, but is it?
Well, I mean, Steve, what we have to do is we have to use box logic. We have to go A goes to B goes to C. All right, and the first thing is let's look at A. Has anything changed? Consumption hasn't changed. All right, B.
Right.
What about production? Production is miserable. For this is the 6th consecutive year where demand outstrips production. So the reality of the market, I don't care about the rest, the political this, the that, the so-called. The bottom line is we don't have enough of what's coming out of the ground for the demand. And that's the bottom line.
So why not buy the pickaxe and shovels? Why not buy the companies like John Deere that dig it up out of the ground and Caterpillar?
Oh, listen, hey, I'm very familiar. When I had my all of my vaulting systems, they were not far from Caterpillar's main office, and I got to know a lot of those guys. They're very nice people, but they are certainly not going to be the ones digging the holes. Mining is laborious, takes a great deal of time, and it needs certain conditions. You need a lot of water. You need a lot, there's an old saying, Steve, it goes like this. A mine is a dark hole with a person standing in front of it throwing money down it, okay? And that's pretty much what it is. Okay?
I grew up near those mines. I think I watched a lot of money. President Trump now speaking live from the Brady press office. So he is not a happy camper. Says he's ashamed of the members of the Supreme Court, but not really changing the market much. Yeah, I mean, he says he's going to bring something out. He says he's ashamed of certain members of the Supreme Court. So he's not happy with some of them. Happy with some of them, I guess. But we kind of expected that a little bit. Yeah, we'll keep watching. For those of you out there watching, 49,000 people right now watching live. Make sure you hit the like button, subscribe, retweet. What a day, huh, Pete? With Quasar Markets, huh?
Monstrous day, and Steve, if you don't mind, I'm going to be speaking at the money market very shortly here, and that's going to be a pretty big affair. We filled up awfully quickly, and that's going to be on the 10th at right around lunchtime. What I'm going to do is, for all the Quasar Market people, I'm going to send a link for free access to that. So. A lot of I'll send it to you, and anybody who's following on Quasar, you can get into my lecture at the World of Money Fair, and it's at right over lunchtime on the 10th, and we'll send you a free link.
Now, what Peter's talking about now is the Money Show and the Virtual Expo. He's got it right here. You can register for free. We'll put the link out there for you so you guys can click on the link. I'm excited about this. For those of you who do not know, Peter, literally, I mean, you've been calling silver and gold. I mean, you've been nailing it. There's the link, folks. It's actually in the comments, so I know it's a long link. Don't worry about that. Just click on the link. You'll go right straight to this specific one. He is talking on March the 10th from 1:35 to 2:05. So you have to shake his hand. He is chairman of AU Secure, by the way. Not just a pretty face. He is chairman of AU Secure, and of course a very long time friend of mine and a supporter here of Quasar Markets. And we are also supporters of AU Secure. So make sure you also check that out too as well. Yeah, I'll remove it once we get back to it. But,
everyone that's asking now on precious metals, because I'm getting a lot of hits, Steve, is we're still behind.
That's the whole point, right? Yeah,
we're still behind on shipping. Okay, I mean, it's just there's no coins around, guys. I'm sorry. Gold is anywhere from 5 to 20 days out.
So you telling me if I go to the U.S. Mint right now, their website, I want to buy a coin. I can't get a coin in the U.S. Mint right now?
No, can't. Best of luck.
Wow.
Yeah, call me, and I will do the best I can to find what I can for you. Tell me what you need. But I'm telling you, everybody, even the biggest players out there on the wholesale side, just told me today, no orders under 50,000, and absolutely nothing's going out in under a week. So demand is monstrous, and it is wonderful for us, but it's difficult for our people that want to be our clients. So I'm not going to apologize. It is what it is, but we'll get it out to you. It just give us a little time.
And here's their website, AU Secure. And if you don't mind, click on that. There's a button right up there at the top. You can actually call them live. I'll put the number out there for you too as well. It's 1-855-528-4653. I will make sure that you guys have this number right now. You can call him and get gold and silver. And you do actually have gold and silver in your hands. I know that you can get the people. Is that right?
Yeah. But it's Steve, it's spotty. Okay, I'll be honest with you, and the other thing is, all the IRAs that I've written over the years, a lot of people are taking some profit. So we're getting metal coming in, but we're shipping it out as fast as it's coming in. So we're trying, So
are you telling me that every grandma, mom, and dad pop out there are melting down their crappy gold and silver bracelets and trying to get to melt it down to a bar?
They're trying to. I mean, the problem is, the people accepting it are telling them, 21 days till we send you back your money.
Ladies and gentlemen, right now we just passed 50,000 viewers right now. Pete is very popular today. Peter Thomas.
Hey.
Hey, look at that, man. We're still going higher. We want to hit 1 million views today. So help us hit 1 million views today. We're well on our way.
Let's answer the big question that's coming through here and lighten up my phone. What's going to happen with Iran? Okay, that is the underlying geopolitical gold driver right now, and that is it. Even though Putin's always in the shadows, but let's just look at right now. President Trump said on the 1st and no further are we allowing these delays in negotiation. So we're looking at war in 10 days, period. The question is then, how disruptive is that going to be to the oil markets, to the 50 shadow tankers that they're running discount to China with? What's going to happen overall? Don't know, but I'll tell you what, anytime bombs are dropping, gold's rallying. So be very careful about being short going into the 1st of the next month. Okay, guys?
And I'm looking over now, the 10-year now sitting at 4.094%. That means that they're dropping because people are buying bonds, right, Pete?
Look, bonds are the secondary for major players, primary place where they want to go to find security. So that's exactly what you're saying, Steve, and it is correct.
Wow, Pete, in the last 15 seconds, 500 more people just showed up on the screen. So, Pete, you're a pretty popular man. I get back in the movies again. If you don't know, Pete's also a movie guy too. He's got a SAG card and the whole 9 yards. I love it. I love it. Pete,
my last one was The Untouchables, guys. If you haven't seen it, dial it up. I get a check.
Hey, guys, make sure you make a phone call to AU Secure right now, 855-528-4653. Blow up his phone.
Buy on, go in, open an account online. And on smaller orders, I promise you we'll get it to you. But right now, like I said, it's difficult to find products. So don't be frustrated. We will ship to you. I promise.
I love it, Pete. And for me personally, in my heart, still as a dear friend of mine and a supporter of Quasar Markets, we love you. Thank you so much for being a supporter of us. And I look forward to a long relationship with you, man. And all the days. We've been doing this a long time. You and I have been. So I thank you so much, my man.
Well, listen, I wanted to be here for your big day. I wanted to, and I also, the one thing that you and I always do when we do interviews is we drill down and present the facts to people. And sometimes it's boring, but you know what? You can bank on it.
And you can make money. That's the whole point of being here, right? There's only one reason to do it. People always ask me, why are you in business? To make money. There's no other reason to be in business. But you know what? Do it right way. We don't have to scam people. We don't have to do anything wrong. We can literally do the right thing. So I love this, Pete. This is awesome. Thank you for being part of this. And we'll see you. And Pete, if you don't know, Pete's on all the time here on Quasar Markets Live. So thank you so much.
Thank you, Steve. And listen, continue good luck, man. I love the fact that we filled the room, and I'm looking forward to the days when we're doing 1 million a crack. All right.
I absolutely love it. Thanks, Pete. Bye-bye.
All right, buddy. Bye-bye.
All right, Quasar Markets Live. One of the cool things about we do here on the show is that we actually bring real traders here. And sometimes, look, I have been doing this for a long time, and it's not always fun. We're surrounded by screens, and we never do fun things like this all the time. So I love this, especially on a trading day like today. We love volatility. My next guest, Peter Robbins, has written a book called The Trader's Journey. And I'm going to bring Peter in right now. Peter Robbins, how are you, my man?
Hey, Steve. So nice to meet you here today. Thank you so much for the opportunity to come on this great show.
I love it. You know, one of the cool things, Pete, is that you're at the bottom here. Your book here is called The Trader's Journey. Now, I appreciate the copy, and you know, I look at all the different signals you have, like the Wyckoff method, and of course, I got a dear friend that is Wyckoff. I love all of this, but you go deep into it about your own journey and what you needed to know in order to do this. So tell me a little bit about yourself. Tell her, I mean, you got 52,000 people watching you today right now. So tell everybody, why did you write the book and what's the book about, my man?
Yeah, well, it's funny. I just wanted to start off with yesterday I did a tweet poll, and I asked people to be honest and score themselves on a scale of 1 to 4, how prepared they were when they made their first trade. All right. So it's so interesting because number 1 was no idea whatsoever. Number 2 was some idea. 3 was have a strategy in mind. And then 4 was have an edge and risk rules when I started trading. And it's so ironic that 68% said no idea and 22% said some idea. So that's the 90% of people who start trading with really little or no idea of what they're doing, right? So,
Yeah.
So it's part of the reason for writing the book. And well, it's a long story itself, but I mean, originally I started writing the book to document my sort of experience and history for my children or whatever, right? And then I started getting on Twitter and getting quite a following. I wasn't expecting that many people because I just produce sort of hard truths about trading, right? I'm not sugarcoating. I just heard you mention about scam. We don't need to scam. We don't need to do this. And I think there's a real appetite out there for the hard truths and the reality of trading, right? And the fact that, 90% of people start trading with little idea of what they're doing, and the stats around how many people fail at trading and how many people give up shortly after starting, or, they lose all their capital, which I really hate to see, especially young people, right? I see, I give this example when Bitcoin was really popular back, 10 years ago when everyone was trading it. And I had, my daughter was in university, and I'd go to the bus station to pick her up, and there was young guys on their phones setting up brokerage accounts to buy Bitcoin, and they're putting all their tuition money in there, and they're putting all their savings that they've made all through high school, all through whatever earnings they've made to date, and even taking their tuition money, which are either their parents or however they got that money, and they were putting it on Bitcoin, and literally they were losing it all because it just happened to be right at the peak. Everyone was jumping on the bandwagon, right? And they literally couldn't spend their tuition or pay for their tuition for the next year. I had to call up their parents to tell them, I lost it all on Bitcoin, right? So again, that's part of the reason why, so I support a lot of people on Twitter around, especially new traders. So that was really the reason for writing it. It was just, it's not about, this is my strategy. There's a lot of books out there on trading, right, where you get these people that have been around a long time and are really successful traders, and they document their strategy, right, and what works for them. And everyone just thinks, oh, I'll just copy their strategy and I'll be an expert trader, right? It's like, it doesn't work that way, right? So what you need to do,
work that way. I tell everybody all the time, learn every strategy so that when things change, when the markets change, when the developments change, that is how like what to put into the technical analysis, right? It's not always about the technical analysis you put on it. It could change every single day. And when it does, you make sure, as I always say something, don't have the same strategy every single day. If you have the same charts you had 3 months ago, you're not doing it right because you're missing out on volume, you're missing out on things that, or in your case, Wyckoff or things like that. I love that. Folks, I mean, I put the link out there. He wrote the book, The Trader's Journey. So I click on that button, click on the link. 53,000 of you out there. Come on, folks, hit that button for him. Say hello to Peter. I know he would love to hear from me. And it's definitely, and I bet you Peter would probably autograph that book for you too, right, Pete?
Of course. Yeah.
I love it. I love it. Peter, before I let you go, I'd love to have you back on the show, my man.
Yeah, no, I would love to do that. Like I say, I love what you do for the community and what you're doing right now. And I think we're aligned on being real, giving people what they really need, and giving them the tools they need to become successful traders. And so many people jump into it without any idea. They follow somebody that's either a scammer or they just don't take the time to really educate themselves, get the right experience, and then, to your point, eventually get to a point where they can adapt to the market depending on what's happening. They can change their strategy. They can go from, and even as your life changes, right? As you get more mature, as you get a job, as you have children, your risk profile might change. Your whole approach to trading might be a day trader when you're in your 20s and a trend trader when you're in your 60s, right? But knowing all the different strategies and knowing all the different approaches so that you can adapt. And that's the thing, is like, even traders that have been around for a long time, often they don't spend the time to really feel or see if they're really aligned to what they're doing, right? Because they've just been told.
And the world. and the world changes, Peter. I mean, if those have been around a long time, it does change. And the one thing I've learned in this game is that you got to change, or if you don't change, you're gonna get screwed, right? I mean, it's just part of that. That's why you call it a trader's journey. I like that, folks. You have the link up there. I'll do it one more time for you. Click on the button. It's up there. Updates. Peter Dash. And you can pre-order the book, and you can also follow him on
Twitter.
X. Do that. Yeah, follow it. Yeah, on Twitter. All right, Peter, I appreciate it. And last question to ask you, man. Will you come back in to hang out with us?
Oh, I'd love to, for sure. I love what you're doing, and I'd like to be part of it. If anytime you want to invite me over, I'm glad to attend. Thank you so much.
I appreciate that. Thank you, Peter. I appreciate that.
Okay.
All right, everybody. One more time. I don't need to tell you this one. I don't need to tell you this one. The guy I got coming up here, dear friend of mine, big supporter of Quasar Markets Live. And you see him every Monday, Wednesday, and Friday with me. And I love him. I'm just going to bring him up the stage. Here we go. Steve Flanagan. My God. What have we done, Steve? 53,000 people watching us right now, my man.
Oh, boy, that's great, Steve. And what a great day for you. Congratulations. And, people who know me know I have one topic. Money moves first. And I try to bring to the viewers a foreign exchange view to the marketplace. You got to watch currencies. $9.6 trillion trades every day, dwarfs any market. And that's why currencies can sometimes give you that little edge you need when making some decisions out there on your trading. Not all the time, but when we see big decisive breaks, such as we're in right now. Why is the dollar index beginning to percolate to the upside on a weekly close here when everybody says we're de-dollarization and everybody's selling America? Just something to keep watching. And I love to bring it with Steve every 3 days a week, Monday, Wednesday, Friday, and offer some insights from my 43 years plus of trading in the front line in the institutional side.
All right. See, let's get to it. I mean, you have a wealth of knowledge. By the way, we are competing against the president of the United States for airtime, and we're winning, by the way. Wow, that's huge. Let's talk. Let's pull that head back a little bit. Let's peel back some of this onion of you. Let's talk about it at the very beginning. How the hell did you get into Forex and trading? And especially if you don't know those out there, he was the head of the Forex desk at JP Morgan. So I'm going to go your hair, Steve. Let's go back in the reels of time a little bit and tell us a little bit about how you got into the whole thing and where you were.
Sure. I finished my career as the FX e-commerce global manager, risk manager. I started in 1979. I got out of college with an international economics degree. I always loved the international aspect. I joined the International Letters of Credit Department at Manufacturers Hanover at that time, which is today JP Morgan. 43 years later, I retired. But the currency side of things was exciting. Keep in mind, in 1971, Nixon closed the Bretton Woods and the exchange of dollars. The dollar was allowed to freely float. So I got in sort of right after that. And my first chance was to trade dollar yen. I was greeted very quickly with the Plaza Accord in 1984, where the central banks of the world decided to push the dollar down forcibly. And I was in the front row seat at intervening and helping those central banks do, in fact, that job. I worked into the Louvre Accord in 87. In 1990, we began to see some automation come to the market or price transparency with an EBS system. Around 2003, I was asked to move into electronic trading. And that was probably gave me a lot of life to my career. Along the way, I worked in the currency markets, which was a hot topic in the 90s. And in fact, I had often gone on a program in the American Stock Exchange I saw Ron Insana on earlier today. That probably doesn't remember me, but I used to offer currency insights to the marketplace. But in 2003, it all changed. I jumped into the electronic trading space. And the next 20 years of my career, I helped develop a lot of the models and automated programming, along with an incredibly skilled team of quants and developers. And we put that together, building us to the #1 market maker in the world around 2017. So what I can offer when we talked this morning on our program, it's important to understand how electronic, computer-driven, model-driven our marketplace is. And understanding that is the root of it is how AI is such a part of the market. It's not something that's coming, and machine learning something that we're looking to the future. It is already been embedded in our marketplace. We were working with that in 2017. So it is just maturing. And that's the type of career I try to bring to the viewers, to give some insights and some kernels of knowledge to make sense of it all.
Oh hell, Steve, kernels, you are the pit. I mean, you are the guy, the diamond that we all need, because you've been so right about the dollar. You've been so right about the trades. You just keep talking, Steve. The market's back up. Nasdaq's back up 200 points. I mean, you know, you've been right about the president. You've been saying, look, you're probably going to see the Supreme Court probably strike it down, and don't worry about it. You said that last week, not just this morning. You've been talking about it. You've been saying prepare for this moment, and you've been right. But that comes from knowledge. It comes from time doing it.
I've been embedded in it, Steve. I've been part of I've been an executioner in the marketplace to the policies that are being, orchestrated. And, I've seen it. We get so wrapped up today. We get wrapped up in narratives. Understand this to the viewers. The narratives that you hear are orchestrated narratives that work for benefit of certain types of models. Today, I've been speaking the last week about AI social market sentiment models. In other words, if there's negatives, as there are today, when you look at the headlines, negative this, negative that, these sentiment indicators pick up and they begin to trade accordingly, which reinforces. Most of these are run by the major hedge funds out there in the world, and we should all be aware of that. Now, what does that mean? It gives us great opportunities, because if the one thing that machines do is they always operate to extremes. Steve, you picked a couple of stocks on the morning program today in those extreme type of cases.
When I look at the trading that's going on right now, and it's not the same trading it was in 1992. This is fine because things are changing, right? And that's part of what I've been saying, is that we have to adapt. If we don't adapt as traders and we don't get together, then how the hell are we going to stay in the game? And I always tell people, look, some people in the market say, oh, well, they're too old. They don't know anything about the markets. The fact that they were in the markets that long means that they were able to adapt. They should learn from those people.
Change is very disruptive to the human. And 2 weeks later,
how did you do it? How did you make those change? How did you make that change in your own life?
You can easily sit there if you're an institutional trader, or even when we're doing retail trading, which I do today, we can sit there and say, oh, who changed Windows 11? I like doing it Windows 10 way. I was pretty much set up. This is no good. But you know what? When you go through one iteration, two iterations of changes, and I've gone through hundreds, initially it's very disruptive. But within a week or weeks, it's suddenly, oh yeah, I'm used to that now. And that's the one thing that gave me a longer career than perhaps many of my peers, is that I just rolled and changed And I always tried to keep my analysis simple rather than getting complex, as everything has gotten more complex. I always boil it down to its simple ingredients and make my decisions off of that.
And let's take that for a second. I don't necessarily have a routine in the morning, but I do the same thing. I get up, brush my teeth, take a shower, and, decide what I'm going to wear. But when you got ready for the trading desk, did you have a specific thing that you did to get ready in the markets in the mornings? Did you have a routine? Did you get your cup of coffee or to get on that? I mean, to be the head of the JP Morgan desk, you had to have some discipline. And I think that's what people don't have right now in the markets, discipline. So was there a discipline that you had, a way that you got ready in the markets in the morning? I'll let you tell us a little about that.
Sure, Steve. Well, first of all, I love to listen to music on the way in because I would look at where things were in the overnight market. Keeping in mind, I would be up at 4:30. I'd work until 5:30, 6 o'clock, and then I would take a commute home. So my day basically was a 4:30 to 7:30, and then I'd have dinner and then trade again in the early around lunchtime for Asia. So I would be 11 o'clock New York time, and then I would catch the London Open around 2 a.m. Yeah, that doesn't leave a lot of time for sleep, but I love doing what I'm doing. So I would always have music that would kind of, address my day. I would look at where the markets were. Did it make sense? No. I needed something to shake up my day, and I would listen to some sort of music that kind of cleared my brain, because when you have a preconceived notion of where something's going to trade, then you're trading with a view that perhaps needs to adapt. So it's important that you flush the mind and come in fresh. That's the way I started. A cup of coffee in one hand, a little bit of music, and then I would take my day.
So are you telling me you can't go out drinking all night and come in the next morning and going to make a big trade?
In your youth, yes. But again, Steve,
those days are gone, bro. There was a time when I used to keep a suit in the office because I'd come in a little bit late in the mornings. But I get that, and when we look at traders today, especially because of COVID, we're all in our pajamas, we're all thinking about, hey, how are we doing this from home all the time? Steve, when you look at technology, you look at the way that the markets have changed over time, what's the biggest change that it took for you to get over okay, I got to do this because this is coming and I got to do this and I don't want to do it, but I'm going to do it anyway? What was the biggest change you had to make?
Well, I had to make a biggest change from manually trading. Anybody sees my LinkedIn profile, I have 2 phones to my ears. That's the way we used to trade. Then all of a sudden, somebody put a screen in front. We didn't have screens back then. You had dot matrix printers that would print money supply figures, or a Telerate screen that would go dot, 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 across, and you'd pick up news. There was no information exchange. So the hardest part was all of a sudden increasing the decision-making speed, the time. And that's why I stress keeping it simple, because suddenly a machine came in front and had a price in front of me, and I was no longer having to do price discovery. Remember, I used to plug into a broker's market and say, where's spot dollar yen? And the broker would say 30 given last. I'm 10 bid, no lid. And you'd have to make a price in $100 million to a client, and you'd be like, 30 given, it's 10 bid. Okay, make it 17.22. A 2-sided price. You have to show 2-sided risk. And you just kind of wing it. So suddenly having screens that showed me where the price, and I'd be looking going, wait, that's wrong. It's lower. It's not really there. That's the biggest adjustment I had. In my day, an FX dealer ruled the planet. We called ourselves dealers. A dealer sets the price. Today, people are traders. Traders trade on a price. In my day, you were dealers, and suddenly bank dealers became small fish because the big hedge funds came in out of the 70s, out of the commodities markets. Most of them, in fact, our Secretary Treasurer in the early 90s was one of these guys and one of the big ones.
Yeah.
And they all came in, and suddenly you had to make a major adjustment. One, price discovery was right in front of you. Two, you were no longer a big fish. You were becoming a smaller size fish in the market.
Man, I listen to you all day talk about the old days, Steve. I think a lot of people don't. They don't know what they're talking about. They're old. They don't get the new markets. We understand the markets better than they do because of the psychology of it. Psychology hasn't really changed, has it, Steve?
Not really, Steve. Not much at all. The psychology adapts if you're a smart trader. In fact, I just did a conference, Steve, where it was called Man versus Machine. And everybody comes into the auditorium and they're like, oh, here's Flanagan. What side is he going to take? He's going to say the man wins. And I turned and I started it right off by saying, it is no longer man versus machine. The trader of the future is man and machine. And that's the important part. That's an adaptation, Steve. Learn how to use the machinery, especially the information machinery that Quasar Markets has, to make your simple decision. Don't overcomplicate things. Keep it simple. Man and machine, learn how AI can help you be a better decision maker.
That's right. Quasar Markets, that's exactly what we built this for. We want to put all the data into it. Let the people go, well, if everybody has all the data, I heard this the other day, a big name say, well, if everybody has all the data, well, that's just how's that working? Well, everybody's different. Right? We're all different, right? So that's what I'm saying to people, right? I'm not too concerned about that. So I it's gonna be awesome. I love this, Steve. Man, listen, thank you so much for being a part of Quasar Markets. The love that you've shown this company and you and you and I have been friends for a long time. We're old school at this. And as everybody's been saying, I'm trying to bring it back to where the world really, how it really works. Not the nonsense.
Offering transparency, Steve. When people say everybody has all the information, well, understand this. In this space, we have little information. The information and data is held up above us at the institutional level. And guess what? It's time to crack that ceiling and begin to show the market to everyone.
And right now, you keep talking, Steve. Dow's up 211. The Nasy's up 235. SPOO's now up 50 points. I think we're all going to have a good day today on Friday. And it's a witching day, normally a bearish day. So I got to love that, right?
Absolutely, Steve. The fact that the trades have been struck down by the Supreme Court. Now, what does it mean? Inflation's coming down because that's what the Fed said. 0.6 is what Jay Powell said was in the inflation rate, which puts the last print into the 2% target zone. So, all good news. You can't overreact. The narrative over the weekend is going to be, I would think, negative Nancy's. Ignore them. Look through it. I think Monday is going to be, I still think we have 3 to 4 weeks to go of uncertainty. As I pointed out, all the central banks meet March 18th, March 17th, March 19th. It's a whole new world on the other side of middle of March.
Well, I'm going to leave it at that, but I'm going to ask you what I've been asking everybody else. SPX right now, the SPOO's now at 69.09. A higher or lower come summertime?
Steve, I think higher. Make it simple. But okay. I think by year's end, we're going to be at levels that I think nobody is really looking at. And I think 2027 will probably be one of the most unique times that I have spent. By 2027. That will be almost closing in on 50 years, and it'll probably be the most unique market that I would have ever experienced in my entire career, and that would be to the upside.
To the upside. Steve Flanagan, my friend, Quasar Markets friend. Man, I don't even want to tell you. Thank you so much, and I look forward to our mornings and Monday, Wednesdays, and Fridays as the diamonds that you spit out is just unbelievable. And if you had paid attention to Quasar Markets in the morning and not just looked at charts all day and actually listened to the news and what was really going on and understanding the news by people who actually do this, you would know there's nobody out there better than Steve Flanagan. Steve Flanagan, thank you so much for being on the show, and thanks for all the love, my man.
Thank you, Steve.
All right, Quasar Markets Live. That was awesome. I could literally listen to Steve Flanagan every day of my life, and I do Monday, Wednesdays, and Fridays because why? Because he's telling you what's really going on. He has no game in the fight anymore. He's trying to tell you what's really going on, and part of knowing what's really going on is knowing every side of how a trade works, and not just from the perspective of trading, but if you're investing into futures like crops, ag, baseball games, sports, you want to know what's going on in the weather. And it's one of the things that I've been saying for many, many years that's been missing in fintech and finance is that the sports side of it, the weather side of it, the news side of it, the chart side of it, all of it should be in one place. And to do that, you've got to bring in the weather. So without further ado, I want to bring in Josh Dinkelberg from Crop Profit. And here he is, man. Josh, how are you, man?
Hey, Steve. How you doing today?
I'm on fire, dude. 58,000 people watching you, Josh. You got to talk to us about what is it that you do? Who are you? Talk to us about Crop Profit.
Oh, man. Well, first of all, I feel left out. My name's not even Steve, so I'm going to be a Josh here. But and we're weather people, so we're already Joshing people, right? At least that's what people say. But no, done with the joking. No, so Crop Profit is it's a yield forecast system and a weather tool that grain traders have been using since 2009. The great part about it, Steve, we use machine learning and long histories of weather and crop data to accurately predict crop yield and production. And we had a great year last year. I'll talk about that in a little bit, but greater accuracy and lead time than what you're getting with other providers because we're not out there speculating on what the yield's going to be. We have the data to back up and models that actually calculate that, looking at weather every single day and giving you all accurate numbers so that you can actually anticipate market moves before they actually occur. And people were blindsided when that USDA final corn estimate came out with the WASDE report back on January 12th. We heard about it from a lot of people. But folks that were using Crop Profits that have been following our numbers throughout the year of 2025 were not shocked. In fact, they were right on top of it. The numbers were right there.
And here's what's cool about Crop Profit that if you don't know, and I'll point out that you guys are not just nerds. You guys are actually meteorologists, right? You guys actually know the weather. You're not just technology and data nerds. You're actually meteorologists, right?
We are, yeah. So we have a large group of 6 meteorologists as part of our group. Crop Profit is actually one of 2 brands of the Prescient Weather Ltd company line, started in 2009 by 3 PhDs in meteorology from Penn State University, which is undoubtedly the top school for meteorology in the country. A quarter of all meteorologists come from Penn State. I'm a Penn State guy, and our 3 founders are as well. So the 3 guys that founded the company, John Dutton, Jeremy Ross, Richard James, all had PhDs in meteorology. John was actually the dean of Earth and Mineral Sciences, which is the college that has meteorology underneath it. He was my dean when I was a student there. And when he retired from that, he was looking for something else to do. So these 3 guys were working for another weather services company and decided to start Prescient Weather and came up with a couple of different lines. One built basically for grain traders, that's Crop Profit. The other for power traders, that's the World Climate Service. Both of which take weather data and formulate information that can be easily accessed by these folks to make those decisions and make profit, really, to make alpha.
All right, then let's get to it. Let's show everybody what we're talking about. I'm gonna add the screen here now to the stage. I'm gonna get out your hair. Talk to us a little bit about Crop Profit, what you guys do, and put that meteorology degrees to work, but man.
Absolutely. So what I'm showing here is from our enterprise. This is just weather anomalies. There's been some talk about dryness in Argentina, southern Brazil. And in the last few days, we've actually gotten some decent rain where corn and soybeans are grown in Argentina. But we're heading back into a dry spell. You're going to see down here where soybeans are grown and where corn is grown in Brazil. It's been just a little bit drier than average. Not a big deal for 7 days. We don't react to that too much. But Argentina's gotten a fair amount of rain where corn and soybeans are grown, 40, 50% above average. But if you go back 30 days, it's been relatively dry. We're 20% or so below the norm. And what's important for this is that we don't necessarily we're not going to like just make a knee-jerk reaction to what it's been out the window. We like to take a look of what's ahead. And if you take a look at, forecasts in the coming days, it goes right back to dry in Argentina with corn and soybeans over the next 2 weeks expected to run well below average again, 50% or so. So you can look out the window and say, hey, it's great. It rained. In fact, we got a lot of rain yesterday, which was the case in Argentina. But moving ahead over the next 2 weeks, we're going straight back into a dry pattern, which this time of year is obviously not going to be good for them. So looking ahead,
and when I look at the precipitation, sometimes I don't really understand what it is that I'm actually looking at.
Yeah.
Right. So, look, we know in Chicago when it rains, corn prices get depressed. Right. Same thing here.
Yeah. When you're looking at, I like to show the norms. When you're looking at rainfall in Argentina, for example, where soybeans have grown, we display it this way. So we're looking at, this is the 14-day forecast. And when you see yellow, that is below normal. When you see green, it's going to be above normal. So you see, while there is rain in the forecast in a couple of batches, one coming later on this weekend and the other coming towards the beginning of March, the overall trend is below normal. In fact, there's a forecasted deficit here on the AIFS model. We have all the models that traders can get. We just bring them in a little bit faster. In fact, the European is free, but since we have a license, we can get it to you an hour quicker, which makes a big difference. But if you're going back looking at 60 days of rainfall in Argentina, you're going to see it's been really dry. It was dry last year for sure, but it's dry again this year. And I'm showing you a graphic going back to about Christmas time of where the rain has been with respect to normal and where it's gone. And we're sitting on a deficit that's well below the normal and almost in the extreme category. This level of gray here, Steve, is basically the 90% norm. So if you go out of that range on the high end, then you're in the top 5% of rain. And if you go below it, you're in the lower 5%. We've been flirting with that lower 5% for about 2 to maybe even 3 months.
And when you talk about it from the perspective of, in this case, this was Argentina, and you said Brazil. Is it just is Latin America? Or do you have all over the world? I mean, you have like all kinds of data, right?
We do, yeah. So we have weather conditions for a lot of the grain markets in the U.S., for Canada, for the European Union, for the Black Sea region, for Australia. We are down the road looking at adding other geographies in Asia as well, and some of the other grain markets. But the biggest ones that I think a lot of folks right now are focused on with us is the U.S., Brazil, and Argentina for obvious reasons. But yeah, if you go back to the United States, it's been dry in the eastern United States for a while. In fact, if you go back 90 days, I live on the East Coast, the drought is building. And while this time of the year, that's not really a huge issue, we have to watch it when we start getting into planting season. And of course, untimely rains can be a problem as well. It can be as dry as it wants right now. But if we get into April and May and all it does is rain in the planting regions, we're going to have some problems. So what we're going to be able to do is give you all insight into, when we're looking at weather patterns ahead, based on our forecasts.
Yeah, and I love this. It's not just corn; it's also beans and wheat. And what's interesting? A lot of people don't know this, but wheat's not just wheat. There's winter wheat and there's spring wheat. I love that. KC wheat. There's all kinds of different things in the markets, and it's people go, oh well, why do I don't trade futures? What am I doing here? What am I supposed to do? Talk to me a little bit. Why other things, right? What is it else that needs to happen, right? Think of it like, well, that wheat goes into feed, right? That pig and that cow, same situation.
Yeah, I mean, we're watching temperature departures. We went back to at the very end of January, very beginning of February. We had a lot of cold weather across the plains, you know, in the big cattle areas, and that was a concern. We're always watching this. I mean, winter wheat, we're watching, you know, spring wheat, we're watching river flows throughout the year. It may not show up on the map right now, but it's something at Crop Profit we're keeping an eye on for our customers. If they need to put together something, you know, we've got data sets that we can provide to them outside of what you see on the map here. But the important part about what we're providing to Steve is that we're doing this all the way down the county level. So we can actually map out, you know, where everything is grown and can actually give you a percentage of the national crop. And then we take that data and actually factor it into all of our forecasts. So we're not taking a paintbrush and circling the entire nation and saying, okay, well, it's been hot, so we're going to have a forecast that just shows heat. We're actually factoring in where everything is grown and then taking that and putting a multiplier on our forecasts and on our data.
Okay, I love being a trader because I always learn something. Don't take the screen off because look at that solar radiation. What is that all about, man? I like that. What is that?
Well, you're in the right part of the country right now for that.
I love that. Well, I'm also from Southern Illinois, so I know all about that. The solar radiation.
Not so much.
Talk to us a bit about what does that mean? What does that mean? Solar radiation.
Just keeping an eye on how sunny we are with respect to the norm. You know, where it's sunnier versus where it's cloudier than normal. This is just today, but if you look at the last month, because we're in a La Nina, because the storm track has been focused farther north and west, it's been pretty cloudy in the northern plains, and it's been fairly sunny with respect to normal, you know, in the Midwest, in the Corn Belt, and down south in the Sun Belt as well. Yeah.
And does that shows us the 30 days ending? Is there a way to figure out whether there's a forecast to that too as well?
Yeah, we do have forecasted information. We have a 2-week ensemble here that can show you the southern plains, the south central states are expected to have above normal sun. The Great Lakes, northeast will be cloudier than normal. The northwest will be a lot more wet, and we'll have more cloud cover as well.
I love this. I love this. And show people here. I love this. If they don't know out there, Crop Profit and Quasar Markets are going to be in cahoots. We love this. We're going to have it in the platform coming up. We're going to get it together. But the cool part about it is we want to have all of it together, right? We just really want to show every side of every trade because I want it as much. I don't want to be overwhelmed with the knowledge, right? But I want to have it. How does it affect the price of XYZ? And look, people say, well, I don't care. I only bet on sports. You don't think weather affects the pitcher on the mound? You don't think that that big snowstorm in up north in the Northeast or in Green Bay is not affecting the players and Aaron Rodgers of the Jets? No, it's totally affecting them, right? And yep. I want to know all that data. So I love that, folks. If you don't know, hit that like button, subscribe, go to Crop Profit too, man. Hit that website up. Go say hello to Josh. Josh will definitely say hello to you. I've known Josh now a while, and let me tell you, one of the things I've always said is there's not enough weather to understand that. So I'm super excited about that. I'm super excited about the partnership here with Crop Profit and what we're doing here at Quasar Markets. I absolutely love this. Those of you who don't know, hit that at Crop Profit. That's where the Twitter is. Go see it. Go say hello. Click the button. I love it. I love it. I love it. I love it. All right, Josh, as from all
Steve,
of us here.
Do you have time to see the scoreboard from 2025? Do you have a couple
Hell
minutes?
Yeah, let's do it. Bring it in, man. I love this.
Let's do some shameless self-promoting. How's that? Not shameless, because
absolutely, it's even better. No, right. Not shameless.
So the final NAS number 186.5 on corn yield. We were at 187.9 with our final October 15th number. So we were a little high, but less than 1%. But the production, I know people were saying, well, they were just pulling acres out of you know what. Well, we were right there the whole time. And same goes for soybean and soybean production. If I show you our yield forecast, this is what the trader's looking at here last year. So here's the technology trend. That's the red line here. That doesn't change. The blue is the USDA forecast. And the challenge we had with the USDA forecast is, well, we had the government shut down, so we didn't get numbers for some of the months we needed it. And so traders looking at our forecast at the beginning of the season saw we were predicting, 183, 184. It started coming up when things started looking wetter during the first portion of summer, because that was going to help increase the yield. And as we got into close to the silking phase, the number came up. And the data supported this, whereas some of our, I'm not going to name names, but a lot of the forecasts you saw out there were not necessarily as high on the yield. They were expecting a record yield, but they weren't necessarily expecting this high a yield. So the market may not have been adjusting to that. But then when the USDA came out with the August 12th number of 188.8, that shocked some folks. But we were right in that neighborhood. So people using crop profit were already on top of it. So we're not just pulling a number out of a hat. We're taking over 30 years of data. We're taking models that we have tweaked every single year to give that number. And then you see the trend as the season goes on. And we're predicting that final yield from the beginning to the end of the season, from May to October. So, yeah.
Hey, ADM. Hey, Bungie. Are you listening? I know you're out there listening on this. I mean, that's it right there, right? You're helping the farmers out there make better predictions and better understanding of what to plant, right? Not
right.
just when and how, but what to plant as well. I absolutely love this. It helps people get a better, clearer picture of how they're investing, and weather is one of the biggest pieces of this, right? And you literally have all this data. I love it. I can't wait to put it into Quasar Markets, all of it, and I'm super excited about the partnership here at Quasar Markets. Before I let you go, Josh, anything else you want to talk about from Crop Prop?
Not really. We're working with 4 of the top 6 grain traders in the country. We've got a lot of large hedge funds. We have a lot of ag risk providers, some of which you're probably seeing out there from time to time. We have a lot of people overseas as well, but many in the U.S. Insurance providers, crop insurance, that's a big part of what we are. We don't work with growers, and the reason why is this is really elaborate for what they're looking at. But the ag risk providers and the people that they're following are using crop profit. So it's important to them.
Of course.
Yeah. Yeah.
Well,
so
I love it. Crop profit. Big love to you, Josh. I thank you so much for this. We got a long partnership coming ahead of us. A lot of cool things working on it, and I'm super excited about that. So I appreciate all that. And you got 62,000 people watching you, big guys.
All right.
So the crop profit, I love it. All right, man.
Yeah.
Thanks, Josh, and we'll see you next time, my man.
Check it out. We'll get you on a trial for 30 days. And Steve, as always, I appreciate your time, and thank you everyone for watching.
Thank you, man. All right, ladies and gentlemen, Quasar Markets Live. We one of the cool things is behind the scenes, so much work goes into building and what we're doing. And when I started this whole thing, I needed people that I could trust and could help me build and do that. And I'm going to bring him in right now. Bringing him into the stage, Andrew Johnson, the producer behind the show. Everybody give a big shout out. Hit him up, man. I love this. Andrew, how are you, man?
Dude, I'm not too bad. How are you doing? I mean, it's been a busy day so far. You started a little bit earlier than me, but hey, we're still rolling.
I like it, and I think, I couldn't be me without the back end, the producers, and all the technical that goes on behind this. And I really appreciate that. But I think what's the bigger piece of this is how to be on the show, right, Andrew? I'm gonna put out Andrew's email address. And if you want to be on the show, make sure you I'm gonna do it right now. I'm gonna give you his direct email address, ladies and gentlemen. Here it is. It's really hard. It's a hard one here, actually. It's literally Andrew@QuasarMarkets.com. You got to do it. If you want to be on the show, you want to be back in, you want to see how the sausage is made and how I mean, my God, Andrew, 63,000 people are watching live right now, huh?
I know. Hey, it's a record for Quasar Markets for sure, and we're definitely going to hit the record for our impressions. That's for sure on the Twitter account today. That's for damn sure.
I love it. And, Andrew, you wear a lot of hats here. And I have to say, first of all, if nobody knows out there, his dad's awesome, Craig Johnson, and he put Andrew alone to us. Let me tell you, I love it. I love it, Andrew. But we wear so many hats here. What's your favorite part about working at Quasar Markets, man?
I think the best part is obviously social media is fun. It's fun to do the fun posts and kind of connect to different sections because, Quasar Markets, we cover all data and all sections. So it's fun to go out there and make different tweets of certain stuff. But I think the best part is kind of creating the data because we have majority of all the data in the world is seeing how it can connect to certain markets, right? If if wood lumber in Russia connects to somehow rice infrastructure in China, those two have connecting prices. And if certain thresholds happen in the market, we're able to predict certain things. And it's fun to predict markets, look at markets as a whole instead of as just singular price, cyclical technicals. Because I grew up and my dad does all the technical analysis, a CMT guy, and it's fun to read the charts, but it's more fun to look at the macro look of, wow, this is happening in the world right now. Trump said this. How does this affect another price in South America, like crop profit, right? Does the weather in South Argentina or wherever affect the price something of cat litter in Europe? We don't know. It could, right? But the correlations is really what the most fun thing is for me to look at and kind of how it changes the market, every day. But I would say this though, Stephen.
I was expecting you to say me, hanging out with me and working with me, man. Not me.
I was going to say was, what's your favorite part, dude? I mean, you do it all too. Was it the media? Is it the data? Is it the working with the people? Is it building it? Like, what's your favorite part?
It's seeing the dream. It's seeing the dream happen in real time, right? I mean, the idea that I put all this together, and it's not me. It's the team that we have here, making decisions of, I say to another company, and I make how to leave and how to start. It's not easy. No. Sorry, folks, it's not easy to start a company, but what's cool is working with people to help build it. And I'm not here to make money. I'm here to build something very cool for Quasar Markets, to build for the world, right? And I've always said it's not fair for institutions, not fair for retail to have all the data. Why not make a place for everybody, right? Why not create the next world, right? Why not build something for everybody? And one of the things that we're doing is technology, right? We don't need huge staffs, and we don't need all of that in order to make everything happen. We need people like yourselves, and I always say this: hire smarter than you and me, so that the dream happens, right?
Wait,
and when you do that, what's that?
Am I smarter than you? You say I'm smarter than you, or what? Dang, dude,
I don't know. Yeah, we'll keep that. We'll keep that in hat, right? I love this. For those of you who don't know, folks, I appreciate everybody out there so far. 63,000 people are watching right now. Hit that like, subscribe, retweet. Let's do this. Let's pump this up. Let's get to 100,000 today. I love this, and let's hit it. Let's go, right?
And something else that you mentioned, it's like we don't really need that big of a team anymore. Like, let's just talk about the social media in general, right? I feel like 5 years ago, you needed a whole team to come up with ideas for different platforms. What platforms do the best on X, Y, and Z? But it's like with all these new websites, with all these new AI clipping, AI websites that can essentially make your social media post for you, you don't need a team of 20 people. And it's just like you're sitting there like, where is it going to happen in 5 years? Is anybody going to be working in 5 years? You know what I mean? Like there's like the jobs have gone down so much.
Yes, we're going to be working.
We will be working. We will be working. But I'm just saying in general, like so much of the stuff is being automated now. I'm just sitting there. I'm like, holy crap. Like, this used to be a team of 20, or you sit there on the cloud code stuff. It's like, I can create this module in 20 minutes. And you see all the people on Twitter making their situational rooms or making their war rooms. And you're just like, 5 years ago, that would cost you what? How much money, right?
Millions of dollars, right?
And now
you know what? Let's bring the guy in who knows how much those things cost. I mean, let's bring Ron back in here. Ron,
yes,
he's right.
I was a cost center myself. Yes.
Yeah.
You were a cost center yourself. I love it.
But it's like
you guys. I'm gonna let you guys talk about.
No, I was gonna say like
I'm gonna step out for 10 minutes. You guys talk.
Okay. No, I was gonna say, Ron, it's like how you doing? Then now it's like you can just talk to my computer. Like when I'm doing my homework or I want to build something, I just sit there. I talk to my computer like I'm Tony Stark and say, "Build it, go." You know what I mean? Like it's just like the whole world has changed, and it's crazy, especially growing up in it, how it's been, the trajectory of it, where it's going to go,
And we were talking earlier this morning. So the change is so profound. And again, like for my parents went from radio to movies to television to space exploration. And my mom lived long enough, for computers. I've gone from, a single line phone in the kitchen to when I started at Financial News Network, paper wires, scripts that were, done on paper, books that needed to be updated once a month with corporate information. And it's just been a radical transformation. And granted, the cost's been driven down. I've got 3 Gen Z kids who utilize a lot of these tools. And again, it's at the drop of the hat. They really can move so quickly. If they want to create an MVP, a wireframe for a new business, they can create agents where they themselves are in charge of the agents and be a one-person company. It's interesting. I'm learning about it, and I'm trying to adapt as best I can. It's a little harder as you get set in your ways, but I'm watching the speed with which everybody else is doing it, and it's mind-boggling.
Well, I think the biggest thing from what I saw is going through school. Like, I remember I was my junior year of high school, and I'm sitting there, and someone goes, "Dude, have you heard of ChatGPT can write your paper for you?" I was like, "Dude, what do you mean?" He goes, No. Put the prompt in the ChatGPT, and it writes the paper for you. I was like, no way. I did it. I was like, oh my God. And then ever since that, it was just like the new things coming out, the new thing. I'm just like, I can't even keep up now. The school is so crazy. It's like some of these assignments they have that's a couple years old. It's like, okay, I'm just going to automate it and have it do it for me. Like, why would I not?
Yeah. I mean, listen, when I was in junior high school, my version of ChatGPT was my older brother. He'd either type a paper for me. Nobody ever wrote one for me. But, the craziest part about that was that there was no, we had wasn't even an electric typewriter. It was just a regular typewriter, manual typewriter, right? Yeah. With huge gaps between the keys. And like you're pounding this thing out, trying to get stuff done. You've got whiteout to correct the errors in your paper. And, you have to wait a while, blow on it so it dries. So then you could strike the key again. I mean, the transformation is radical. And listen, the internet was in many ways like that as well, from a research perspective and a communications perspective. And now this is just orders of magnitude beyond that. And so, I think it's going to be interesting. I do think, I think it'll cost jobs that are part of AI that I'm not, enormously taken with, whether it's the hallucinations or some of the geopolitical or national security risks that may come along with it. And then some of the job risks. It's hard to tell, exactly what the trajectory of this is going to be over time.
Yeah. Well, the thing too, I think about too, it's like, I feel like the level of knowledge, the playing field has leveled. Like, I feel like I know the majority of people, obviously I don't know much as you guys, as markets and whatever, because you guys have way more experience, or like my dad or whatever, but it's like on the baseline of knowledge, I feel like it's a very fair playing field now. Like, you don't have to go to school for 5 years to be smarter than this person and get a better job. It's like, oh, well, this X, Y, and Z. Well, I can just look it up and figure it out and kind of,
let me just take the counter argument to as a safety valve for younger people, right? There's some early evidence that the overuse of some of these tools leads to a decline in cognitive ability. It leads to shrinkage in the size of your brain if your brain is not used at max capacity. And so there are some things to think about over time, which is, how do you maintain your capabilities of thinking if indeed some other agent is going to do the work for you, do the research for you, do the legwork for you, right? And it's not to be an old fart, pardon me, but it's just, there are considerations around this stuff that, there's the utopian case in which all of us have nothing to do and we get some sort of basic income to live our lives and have a great time. And as Elon Musk would say, it's all leisure all the time.
Well, do you think there will be the universal income? Like, think that's coming? Because people say all the time on X, like, oh, universal income is coming. Like, get ready. But
so here's the deal. If nobody's working, no one's paying taxes. Mm-hmm. Corporations pay 7% of the government revenue that's taken in every year. So let's say income taxes fall off because people's jobs are displaced by, artificial intelligence. Mm-hmm. So where's the tax base to recycle that into universal basic income? That's a critical question. Where does the money come from for UBI if nobody, and nobody is an exaggeration, but if nobody's working, how do you functionally make that happen in a country where you already have $38 trillion worth of debt?
Right. Yeah. I mean, for me, it'd be kind of great. Universal income, stimulus. I wouldn't mind it. I would still work here, but if you're giving me
I want universal income. I want to go fishing every day and not have to worry about anything. I love that stuff.
I know. Wow. All right. Well,
wild. All right. So I think
how cool is this, guys? I mean, it's like the old and the young coming together. And look at all this, man. I love this.
Yeah, there's somebody still left with hair. It's amazing.
I can have some of mine, Ron. I gave some away yesterday. All right, Andy. Thanks so much. All right, Ron. Wow, we got a pretty cool product.
Yeah, you got a friend of mine coming on, so I don't want to be conflicted in any way, shape, or form. So I will drop out and watch.
All right, I'm loving that too as well. But before you leave, what are the things that talk to me a little bit about what you see as the future of all of what we're building. What do you you said to me you've always wanted to do this. What is that you've always wanted to do?
I create a very high quality, product in the information services business that doesn't flinch in the face of challenges, that isn't given to access solely for the purpose of getting an interview, providing people with actionable, intelligent, insightful information. And now, because of the technology, just to ping off what we were just talking about with Andrew, the technology stack to do this is infinitesimally cheaper than, I should say, orders of magnitude cheaper than legacy media has had to endure. I mean, when I look, if I wanted to go 24/7, 7 days a week, my tech stack, in order to facilitate that, is going to cost me between, let's say, $5 and $10 million max, as opposed to hundreds of millions of dollars. So I can pay people with experience adult wages. I can pay staff, who are supporting a product like this, adult wages. And I don't have to spend money on cameras. I don't have to spend money on studio facilities. I don't have to spend money on satellite time. All this stuff that is just extraordinarily expensive makes the process of putting together a high quality product that much easier than it's ever been before. The barrier to entry now is so low that, whether it's $10 million, whether it's $30, $35 million, you can do extraordinary things with that money. And I think that's the opportunity set that I really find interesting, that it doesn't have to cost, $100 million, $200 million, $300 million to get off the ground and start something that, if it doesn't work right, maybe nobody's watching and you just, sunk $500 million into something and it didn't happen,
Well, I know that's not going to happen here because it's under good because you are the best at what you do, Ron, and I absolutely love that. All right, Ron, I'm gonna let you go. I'm gonna switch over a little bit, but
I know David's
coming in a little bit
from another meeting, from what I just heard. So I hope he's joining you shortly. I think it's an interesting business that they'll be talking about, and I think one that may be intriguing to us. I don't mean from a connection perspective, but one that I think conceptually is quite intriguing. Look, I think one of the things I really find interesting when talking with Andrew too is that what I've seen with my kids, my Gen Z kids, is that their ability to create on the fly and act on ideas that they have and experiment freely for so little money to find out whether or not a product.
Do you think that's because of tools, or do you like technology that's catching up now, or do you think it's just that there's more smarter people?
Well, I mean, a little bit. I mean, with respect to my kids, of course, the latter. But look, I mean, as I said, with respect to what we're doing, right? I mean, the barrier to entry is low. You can, my daughter, my youngest daughter, and all three of my kids. I mean, whether they learn Fiverr, Lovable, whether they create MVPs with and wireframes for their various products, on the fly, and it takes them a couple days to learn it, no cost, but $20 a month to utilize the tool. I mean, it's an amazing change. And I've been around VCs who are saying, look, you can have one person control 100 companies, right? Because you've got all these agentic tools at your disposal. I think that's fascinating. Now, whether or not that's really practical is another story. Whether does any individual have 100 good ideas? I don't know.
Sure they do. I mean, I think people have a lot of ideas, but to me, it's execution, right? To me, it's about, okay, you got an idea. Everybody's got ideas. I had an idea, but it's all about execution. Can you actually do it, right? And 99.99% can't do it. And that's why they pay Mark Zuckerberg, and that's why they pay Jeff Bezos, and that's why they executed, right? That I think that's what separates.
Yeah, and they also experimented, and
experimenting.
Experimenting now is free for all intents and purposes, right? So you can fail quickly and inexpensively without draining your bank account, and then move on to the next thing. And I think that's also interesting because it gives them an opportunity to learn, to make mistakes, and you're not costing some set of angel investors, seed investors, VCs, whatever, boatload of money to learn the job. And so I think that's a big differentiator these days as well.
And Ron, I appreciate the love you have for us and what's going on, but I think you have an even bigger love that's coming on here now. So I'm excited to let you go and bring them in. Okay, all right, here we go. I appreciate that, Ron. Look, folks, when we built Quasar Markets, we had the idea that we would bring in some amazing people and let them do what they do best. And I've done that with Ron. I've done that with Andrew and with Howard and Steve Flanagan. And we got behind the scenes, we have over 300 people coming in. And one of the things that I wanted to do was also showcase other companies as they are building, right? And first of all, I want to say thank you. All of 67,000 people are now watching live. We've just passed the White House up. Here we go. I'm going to do this Upside Invest. I'm going to bring them in right now. Hey, guys, how are you?
Good, how are you?
Hey, Steve. Great to see you. Thanks for taking the time.
You too, man. And for those of you who don't know, that is Ron Insana's daughter on the show right now. So how are you guys? I'm going to get out of your hair. Tell us a little bit about what Upside Invest is. You're welcome to share your screens as well. And I'm going to let you guys just have the screen today.
Awesome. Thanks, Steve. Great to be here. So we were actually just watching Gordon Scott from My Edge Finder on earlier today. We love that segment. And one thing he really touched on was around separating your strategy into silos to diversify your portfolio. And it really aligns with what we're doing at Upside, where you can see the full index of what other people are holding, not just one trader on a single position. So every trader, every investor on Upside has shared their full verified portfolio with Upside. In fact, Upside is kind of like Glassdoor for retail investors, but instead of sharing salaries and job positions and titles, you're sharing your full retail portfolio. So it's like the same benefit that a Bloomberg messaging community has for institutional, but we're bringing that to retail. And so by aggregating that data voluntarily from everyday investors, we can see at a level beyond just retail sentiment. We can see in precise metrics what is the most popular stocks among the community and what is rising and falling in popularity, what's rising and falling in momentum, and what price other investors are getting in at and holding it. The way it works is you join Upside's app, you link your portfolio securely and anonymously, so no one sees how much you're worth or who you are, but you get the benefit of the full access to the community data, which includes everyone else who has shared their portfolio. And you also get a personalized benchmark of everything you own. So you see for each of your names, all of your open positions, did you get in lower or higher than others? And for that name, what percentage of holders with an open position are more buy and hold style investors or active speculative traders? And based on your style, we also show you other names of investors that are similar to you in style, similar to you in strategy, and what they're looking at that you might not be looking at. And so the point of Upside is to both help investors find names and setups from others, and also to give investors interested in understanding the psychology of other investors who also hold a name they're interested in, to give them an edge in their research and due diligence. And we're happy to share a quick demo of what that looks like.
So we can go in.
Yeah, and I love this as you guys put that on the screen. I love this. It's exciting, because we all have different portfolios. People go, oh, well, what if everybody has all the data? Are we all going to just invest the same way? We're not, because we're all different people. And I always want to see what everybody else is investing in. Hell, we always want to look and see what Warren Buffett's got his money in, right? We always want to see what Peter Thiel's got his money in. And of course, Steve Cohen, 0.72. But here's what I want to know. I want to know what everybody else is investing in, right? So I love what you guys are doing. And as you guys pull up the charts there for your website, I can pull up your website too if you want me to. But what's really cool about all of this is that the entrepreneurship you guys have. I love that.
Yeah, definitely. And we appreciate you highlighting, early young companies. And we launched just late last year. We have about $80 million of notional shared on our network across a few thousand investors. And we're looking to grow that through, interested and active traders and sort of just get our name out. So let me, let us pull up the share here. And okay. We just pull up the share here.
And while you do that, I can also show your. I'll show this. I'll share my screen too as well while you're doing that. Upside Invest. There it is, folks. If you don't see it, right there it is. Boom. Wow, 68,000 of you watching right now. Hit that subscribe, like, retweet, get it out there. I love it when it hit 100,000 today. I'm gonna get out of your hair once again. I'm gonna remove my screen and put yours up there. Here we go.
Awesome. So the whole promise of Upside is that you can invest with more context by understanding what other investors are doing. So the first thing we show you is just that the other investors and their portfolios, again, all anonymously, and how they rank on the website. We give you a sense in a snapshot of their allocations across stocks, funds, crypto, their top holdings. And from those verified portfolios, you can see real metrics, not just social media sentiment of what's popular among retail, but you can see down to the percentage point of everyone who's linked their account on Upside. 37% of them currently hold Amazon. In fact, over the last month, we've been tracking among retail investors, Amazon and NVIDIA have been trading over the 1 and 2 spots continuously. And then you see the rest of the Mag 7 also popular, but about 20, like a hair less popular. And then you can see that through November and December, Tesla falling in popularity. And maybe this is, you could speculate as to why. Maybe it's the Elon being in the news and sort of the political turmoil, but retail has been falling away from Tesla. And so once you actually link your portfolio, you not only get to access the full breadth of this data, including like every name that everyone else holds, what percentage of users are holding it, but you also get our proprietary investment grade system, which is it's a concept that I feel like it's so obvious once you think about it, but it's not something that we talk about today, which is, are people that are good investors holding this name more, or are people that are more speculative, potentially have bad risk-adjusted returns holding a name more? And so that's what that means. And that's something that we can expose, where we can see, for example, one of the most popular stocks that everyone knows is NVIDIA. Right now, less than 30% of NVIDIA holders are patient buy and hold. And that means about 35% of them are moderately active, like they trade that position in and out at least a few times a month. But this red bar is showing that over a third of them are highly active, trading multiple times a week. And then you can see for all the people that hold NVIDIA, who got in at the lowest price. And you can also see like the distribution of what everyone that has an open position in that name are holding. So it's very obvious. Most people that currently hold NVIDIA got in near all-time highs. They're fair weather fans that have bought in recently. The interesting edge that this gives you is,
I'm looking at it from my phone. I'm loving this, man. I'm like looking down, going, yeah, this is good stuff, man. I love this. This is great.
Yeah, and this is what we're so excited to share, because it's so obvious once you see it. It's like, I would love to know what other people got in at. I would love to know sort of where that distribution is at a level deeper than like volume charts give me today. And the crazy thing is, you can see it really varies by stock. So let's say Alphabet, right? Google, another really big name. 53% of NVIDIA holders also own Google, but the Google leaderboard looks very different. It has many more people that have been holding for a long time at a lower entry price. So it has a larger, loyal, long-term holder base and a smaller amount of people that got in near all-time highs. And that's, I think, the real sauce.
Are you sure you want to give all this data to everybody? I mean, that's the whole point of doing this, right? Is make people smarter traders.
Exactly, and that's the thing. It's almost like it's this community where you benefit from this, but you're also contributing to it as an active member. Like by sharing it, you also get to compare yourself and get the benefit of all of this intelligence. And so what we say is like, you can look at this almost like a New York Times, where you can browse the data for free, but not forever. Like we really want an engaged community that are that sort of has like a vested interest in making each other better. So what we're trying to encourage people to understand, and why we made it anonymous, is that by sharing your portfolio, you're also benefiting from the thousands of other people that have also shared their portfolio.
And how do you entice people to actually share who they are and what they're doing? And I know you don't see the numbers and all that, but how do you entice people to do that?
So there's sort of the two ways. First is, if you want an edge in your research and you understand that, like, understanding investor psychology is such an important part of setups, right? Of understanding, like that earlier example, NVIDIA, there's not going to be a lot of support near all-time highs because a lot of people are right at that break-even point. But Google, there's a lot of people holding from earlier, and so there's going to be more support as Google falls. And like that type of edge for sophisticated and investors that see that, that's an immediate hook of, like, if I have to give my data to get access to this intelligence, it's worth it. For the novice investor, we also give you a full AI analysis of your setup, what you're doing well versus others, and give you that immediate value, almost like a sort of a diagnostic, a checkup of your portfolio to give the beginner more of a sense of where they are relative to the community.
I love that. And does it also help you understanding other portfolios, right? Where your weaknesses or where your strengths are, and understanding and maybe pressuring yourself to be a little bit better of a trader, right?
Exactly. And another big thing is, in the long run, like, you can compare yourself. It can be a little bit of a competitive atmosphere, but we can also recommend things based on people similar to you. So in this case, this is actually, we're looking at Anna's real portfolio. Of people that are similar to style, these are the things that other people are holding that have the style most similar to her. And so that's like a real recommendation, not just like, hey, you might want to check this out. Like, mathematically, we know, based on investors that are highest match for your style, these are the next 5 things that you might be interested in looking at.
And how long does it take to analyze a person with their style? I mean, if I get in here and I start putting my portfolio in there, is it going to know me like immediately? Hey, BigBeat, what's going on, bro? Like, here's your style.
Yeah, it takes less than a minute. So as soon as you link your portfolio securely and read only with Plaid, which is the software middleware that banks and other brokers trust across like millions of fintech applications, we give you an instant analysis within 60 seconds.
We love Plaid. Plaid's a good company. Of course. I love this. All right, so I have to ask, your young company, how did you guys come up with this idea? This is awesome. Like, how did you come up and say, all right, you know what? We're going to get together. We're going to build this company. So how did that all happen?
So the thing that we see is that in the GameStop, like in the early 2020s with the GameStop setup, that retail investors want access to community. But the way they're getting it now is this mix of sentiment signals from social media and sharing kind of screenshots of their gains. But that comes with sort of this, like, you don't really know if they're putting their money where their mouth is, right? Kind of like that social media reality where maybe I'm just sharing a screenshot of only my wins and none of my losses. And so why can't we, with the technology available, just let people share their actual verified whole portfolios, both the good parts and the bad parts, and take that next step where to take that next step beyond just retail sentiment, beyond social media sort of signals, and take that further. And so that was the genesis of Upside.
Yeah, I'm so proud of you guys. I can tell you that, you know, when I look at the markets, and I've been doing this 35 years, the best part about it is new people coming in and taking over that technology. When I started, it was Globex was the big deal, but we're going to go 24/7 trading around the world, and that was craziness, right? In the 90s, and the technology has changed quite a bit, and it takes people like yourselves that have that entrepreneurial spirit to do this. I love UpsideInvest.io. Get out there. I'm going to do it one more time. Click on that button. Those of you out there right now, 70,000 of you watching right now. Okay. I want you to click on the button for Upside Invest. I want you to give them love and follows and all that stuff that you're doing. But sign up. Put that portfolio in there. Find out what you're doing right or wrong. It'll tell you, and you'll also see other people's what they're doing right or wrong. And I mean, this is some cool stuff. this is the kind of technology that Quasar Markets wanted to build and doing and building and seeing and bringing to other people. This is exactly what needs to happen in the world. And I love this. I love this so much. I always ask the same question, like before I'm let you guys go. I'd love to have you guys come back and show us some of the data that you're seeing out there and what's happening. And as you're building this out, because you're not done building, right? You're going to keep building. I mean, I love this. Most performance stocks held by people under 25. Like, it's not just who you are, but it's also other people in general and groups. And where do I fit in this group? Is that right?
That's exactly right. And you can see things that exactly like maybe you want to follow people that are similar to you, but maybe you want to learn from people that are totally the opposite of you. And you can get both sides of that.
I absolutely love it. All right, last question. I'd love to have you guys back. Yes or no?
Of course,
definitely.
Yeah.
I love it. I love it. I love it. All right, folks. One more time. It's up there right now, upsideinvest.io. Anything you guys want to add before I let you guys go?
It was great to be on, and we love the show, so we really appreciate you having us on. And you know, we're building for not only the current like strongest investing generation, but the next one with the great wealth transfer. You know, we're making this tool accessible to Gen Z, which is a huge passion of mine, which is what brought me to the team. And yeah, it's a fun time, and our motto, we invest better together. So hop on.
Wow, I absolutely love that. That's a great line. That should be like on the top line of your website. I love that. It's interesting when you talk about that. I've been talking about the great wealth transfer for 15 years. I remember almost coining that term and talking about it back in the day, saying, look, there's going to be this huge baby boomers. They're going to give their money to the younger ones, and they're not going to go to JP Morgan and Goldman Sachs and say, please invest my money. They're not. And they didn't, right? They went to Robinhood's, they went to those places. And I look in the future, I think it's going to be even better. I think we're going to see futures and options trading the way that we don't even know today. We're already seeing that in the prediction models, right? And when I talked about options, people are like, what the hell's an option, right? Today, we don't really even think about that. Everybody knows what an option is today, but they didn't know what certain things like unusual options. Because when you look at portfolios, this isn't your grandma's portfolio. This isn't your dad's portfolio. This sure as hell ain't no Goldman Sachs, JP Morgan portfolio. It's the portfolio of the younger generation, and they've been getting it right. They crushed when GameStop came through. They crushed them, even though pretty much they were wrong down the road, and we do that. But they took some people out. I want to be ahead of the game, and I think UpsideInvest.io is part of that process of being ahead of the game. Thanks for being on the show, everybody.
Yeah, thank you so much.
Thank you. Great to see you.
Thanks, guys. 71,000 people are now watching the show. Upside Invest. I'm gonna leave it right there one more time. Please, 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 please click on that button. Check out the website. Tell them what to do. Give them some love. I like this a lot. I do. One of the things that I've enjoyed about Quasar Markets is the build of what we're building here as well. And I'm going to show you some cool things. I'm going to give a little bit behind the scenes a little bit. It's not quite ready yet, but not far off. All right, ladies and gentlemen, without further ado, I'm going to share the new look of the website, quasarmarkets.com. We're going to see, you see world government data, financial data, all the things that we've been talking about, social media, sports, weather, all of it inside of here. One of the things that I have always said is that it's all about all the data, not just some of the data. And I think it's very important when I look at data, all the data is coming in. So we have an institutional grade intelligence layer for next generation markets. As we build this out, you can see what we're building out, and a new layer of infrastructure for the platform, one that nobody can do. Sorry. We built something very, very cool. Institutional validation. Behind me are all the awards, all the things we're talking about. We're going to talk about that, me, of course, and we're trying to give it away to you for free. Yeah, you heard me, for free. And we're trying to build an institutional platform where it's not even that expensive. So we decided to do this all, including getting educated. Y'all saw Andrew Johnson. Y'all saw him. He's going to be working on the education side of this and getting educator side. If you're an educator, we want you. If you are wanting to be educated, we're going to be here, the place for you. And we built a very, very, very cool platform Think of it like Zoom and Discord and Reddit on fire. All right, for those of you out there, okay, we'll go right to it. We're going to have media. So you'll see media as you can tune in live. You'll be able to live stream it, as you can see us here. You'll also be able to see spotlights like the journey itself, right? You'll also be able to see our team. And we have some other cool things I won't even talk about here, but definitely a very, very, very cool platform that we're bringing to you. I'm super excited. I want to show it all to you because that's what we're bringing to you. All right. Those of you out there, look, this is your opportunity to actually hit me up, ask me questions. I know a lot of you have been my phone has not stopped ringing, and I tried to turn it on to vibrate here so I can hear it. But 72,000 of you like, subscribe, retweet, all those things, everything you've been talking about out here, passing everything up. I love this. We are an ecosystem. We're not about just charts. No, we're not about news. No, we're about everything here. Building an ecosystem bigger than all of us and putting it in a platform for everybody. Right? That tells me everything that I need to know. People are saying it's been needed for so long and we built it. So I'm excited to bring it to you soon. We're not just doing this here. We're going to have other people coming on today. I've got another friend coming on here in a little bit. I can't wait for him to come in. And if you don't mind, hit him up and let's get him in early if you can. I'm looking forward to this one. And one of the things that I've said as we build charts out and all that, and I'm going to bring up my charts, actually. I think it's important that we talk about the news. I think we've been missing that all day. I'm going to present my charts here. All right. Share my screen and the window because everybody's going to say, hey, what's going on in the markets today? Let's get to it. Right now, Oracle having a really rough day this morning and all afternoon. So I'm going to pull up a 1 minute chart on Oracle. Oracle slipping a bit here all the way, all day long. But is now back down into my numbers here where Oracle, I was concerned about Oracle. And I like this again. Those of you know, we've crushed Oracle 3 times. Do it again, right? And this is where I really like down in here. I'm going to pull this up here a little bit. For those of you that also don't know, I was long Amazon, you know that, and I did my thing. And we've already blown that one out of the water. We've already crushed it and killed it and did it again. Why? Because my charts are telling me that, right? That's one of the things that I said that I was very interested in doing, was making sure that I understood why the markets. You saw where the sellers are at. They're here at 210. They were there, and that's where I sold 210. So we had a nice run from under 200 to 210. That's a 5% run in less than a few days. Multiply that by, yeah, you get it. It's been a good run here. You saw earlier from Steve Flanagan, who's in the show earlier, talking about the dollar. I want to pull up a daily chart of the dollar. He has absolutely crushed it. He told you where to buy, and he's telling you where to get out, and he's not saying get out yet. And this has been a nice run from the dollar. He said 96.50 was where he was going. He's going higher. He loves it. We had him on earlier talking about it, and that's been good. The NASDAQ, quick market check here now. The Qs, I'll pull the Qs up for everybody. And we do have charts. Love it. By the way, TradingView is in the chart system, in our system. We love TradingView. We love the partnership with TradingView. Great company, right? I want all 72,000 of you, listen to me. We love TradingView, okay? And we've implemented it right into the system here. So you can use it right in the system, Quasar Markets. And, of course, in the new version coming out very soon. The Qs have had an up and down day. As you know, earlier today, I'll pull this up here. There's a 1 minute chart. We know where this morning. We said it. We told you this. 3 minute chart. Why 3 minute charts? That's where Wall Street is, right? So under 600 is where I liked it this morning. We nailed that. Look at that. Look at that buy opportunity, right? We know that. We bring the professionals in to show you that as well. And, of course, we got out around 610 earlier today. So I haven't played with it later. But look at this. Telling me that the market isn't controlled by algos. Right there it is. Look at these bounces. Look at these numbers. Look at that linear regression. It's right in the numbers, folks. We know what's going on in the markets. So for me, that is what it's all about, is understanding of how the markets actually work, and not from what somebody told you on Twitter or on LinkedIn or whatever, but actually bringing the real data to you. And that's what we really wanted to do here at Quasar Markets, and I appreciate that. All right, spot gold. You saw Peter earlier today tell you, every dip's being bought up. Who's buying it? Institutionals. Right now, 5,078 is now the new number here on. We'll pull it up here on gold. 5,078 now an ounce. Look at that. Boom. Oh, boom. 5,078 now an ounce. All right. Let's get to it. Let's and guess what else is up again? Bitcoin, 67,800. You got to love it, right? You heard, oh, Bitcoin's dead. Bitcoin's dead. Politicians saying, I can't wait to destroy it. No, you don't. Sorry, you're U.S. politicians don't have the answer to all of Bitcoin. It's a worldwide product, folks. Get it to your heads. This is not a U.S.-centric product. It's all around the world. It doesn't care what the politicians think. Okay, it's anti-politicians. So think about that from that perspective. Hood, Robin Hood is, look at that, testing those bottoms down there all day long, right? All right, let's get to it. A couple of stocks that I have been looking at this morning, and that one here is Microsoft. Microsoft has had, you can see all these bounces down here, and there it is. There's the bounces 1, 2, 3, 4, 5, and you know where the buyers are. This is a 3-minute chart. You know why? Because that's what Wall Street uses. So, yep, I love it. I love it here. I'm going to turn it over to the Qs. Here we go. And of course, I think we got another run here on the 3-minute chart to the upside here. We don't talk about what to buy or sell. But look, it's telling you right now, look, there are buyers in here. You see the linear regression, it becomes resistance, become support, and this is where it's at. All right. I'm going to step away for 1 second. I think we got it. Yep, I got you. Understandable. Yep, I understand. Okay. And when I look at, all right, Amazon, there you go. That's what we talked about earlier today. Amazon, there it is, Amazon. And of course, I sold at 210. That's why I knew it got a little higher than I thought was going to happen, but this is where it's at. You know what? I like this run. If I pull up a day chart on Amazon, that's where it was. I saw the buyers, and we saw it. I laid these lines out long time ago that there were these dip buyers in here, and look at this run, and now we see where the sellers are, and that's where they are. 73,000 W, folks. I can't wait, folks. We're trying to get to 100,000 a day, 100,000 live. Can we do it? Can you retweet us? Can you subscribe? Can you click on the follow button? I want to see 100,000. Let's be together. Let's do it. Yeah, look at those numbers. Let's go. 73,000. 200 more of you. I like this. Thank you so much. Retweet this out. Get it out there on YouTube. Hit me up. Say something to me. Talk to me. I got the charts. Wow, look at that. 200 more people just showed up to the site. Thank you so much. We're having media day here today. We'll do this a lot, by the way. We wanted, and this is not even the beginning. This is just getting started. We are looking to be what everybody else isn't. Okay, here we go. We're seeing numbers already coming in. Yep. Yep. All right, and we got him coming in here in a little bit. My boy, I am super excited about this one. He's just texting me. He was in the wrong room, and I'll smack him around when he gets in here, but we all love him, and I just cannot wait to bring in my boy, Hank. Listen, for those of you who don't know, I'll let him tell the story, but here we go. Folks, without further ado, the partnership that we have is what makes Quasar Markets really cool. That ecosystem, the ones that bring professionals to you and a different perspective. We don't care about your perspective right now. It could be different, but I wanted to bring all perspectives in here. And one of the things that I said, I wanted to partner with other companies. It's not just about Quasar Markets. It's also about Roxham TV. Roxham and Hank, what's going on, my man? I will pull you off. Unmute your mic there, Hank, and I think we'll get going here. You muted yourself, my man. There you go. And, you know, I think one of the cool things about Roxham TV, yeah, you're still on mute. Just if you need to step out and step back in or turn it back on, let us know, Hank.
A microphone. Can you hear me? Hello, hello.
There you go. What's going on, Hank? I love it. Hank,
I swear, guys, this isn't my first time using technology. I apologize, but I'm here. Thank you for having me.
We know. Look, Hank. 74,000 people are watching you right now, and they want to know who the hell is Hank, and what's Roxham TV, my man. Talk to me.
Oh, Who is Hank? That's a question nobody can really answer, but I can do a really good job about talking what Roxham TV is. So Roxham TV is a newer digital platform where we are bringing to you the best signal in the business. Right now, we live in this legacy media world where everybody is owned by somebody, but guess who isn't? Roxham TV. And what we're here to do is bring you some real news with real facts that's not clouded up by big money in the background. And we're doing that 24/7. We have hubs in 3 different parts of the world. San Francisco, that's the hub my show is on. BigBeat's on all the time, which is incredible. He joins us on Mondays. And then we also have locations in London and Hong Kong. So we're bringing you the most up-to-date signal in 3 fully different parts of the world, 7 days a week. And we're a year in, and it's great. And the whole team looks at the world through this Bitcoin lens, which I think everybody can learn a lot from. And it's been a wild ride, and we're so thankful to partner with people like Stephen BigBeat here and, other parts of the Bitcoin community and world news community, and it's going great. So if you guys haven't checked it out yet, just check it out, Roxham TV. It's on all of your favorite doom scrolling platforms. And that's kind of where we're at right now. We're a year in, and year 2 is underway. So we're excited.
Yeah, and I one of the cool things about you guys is you really are literally moving up the ladder and taking the banner of crypto forward. Mm-hmm. I've always said the problem, Hank, is that education is the key, right? Oh, the narrative's changed. The narrative didn't hold. The Peter Schiffs of the world. Oh, the crypto sucks. Buy gold, right? But they don't really understand that the narrative isn't a U.S. narrative. It's a worldwide narrative, right?
It is. It is. And that's a big part of it too. It's like letting people have a better understanding of the cause and effect narratives in the world. Like we hear these stories, right? You hear about things that are happening halfway across the world. And okay, you hear about a big factory that blows up in China, but it's so far removed from your everyday life. You're thinking that doesn't affect me. But guess what, guys? It does. And there is this cause and effect in the world that we just don't pay attention to. And at Roxham TV, it's a big priority of ours to really help people understand the mechanics of the world and how it works, because especially when it comes to the financial markets, that's how you make really informed decisions, right? It's kind of betting on what's going to happen in the future. And we at Roxham TV really prioritize helping people understand that bigger picture in a way that I think most news outlets don't really do. They tell you the news, but they're not telling you why it matters. And that's something we really pride ourselves on. And we think our viewership has been really responding really positively to that. And so if you're trying to figure out the why of things, Roxham TV is a great place to start.
Yeah, and I just put it out there, folks. If you don't know, literally click on the button. Once again, click on that button, Roxham.tv. You see it right there at the bottom, right? They've got a whole website about crypto and talking about with the social media side of it. We think it's part of it, right, Hank? Is that it's not just about the buyers and sellers or when is that going to happen. It's also about all the other things too that are going on around it, right? So, like for example, what's the news saying, or what's Hank saying? To be honest, I also want to know what Hank is having to say. I absolutely love this. And talk to me a little bit about the future.
So I still got the future of Roxham TV, did you say, BigBeat?
Yeah, the future of Roxham TV. I'm excited about that.
Yeah. So what I think it is, we're really fortunate already that we have this truly unique set of voices from different landscapes. It emerged originally from kind of a Bitcoin landscape, but we have other people too, including myself. I'm more of kind of like a comedy background, but I do have a background in world news as well. So you get these different flavors and people and how they are approaching bringing the news to the world. And I think that's what makes Roxham TV especially unique and interesting compared to a lot of other outlets out there, is we're really starting to embrace each individual's personality. Because like, hey, listen, we can all agree we want some ice cream. We want that ice cream. We want that news. But everybody else, we all kind of like a little bit of different flavor. Maybe a little chocolate for you, Stephen, maybe a little cookies and cream for me. And that's something we're really trying to deliver. So people can kind of get the worldview. Strawberry, Neapolitan maybe. So there's a little something for everybody. And I think that's a really unique thing at Roxham. Remember, the team is going to continue to grow, and we're going to get even more interesting voices that, there'll kind of be something for everybody. So that's the way we think the news is trending, and we're certainly excited to be at the forefront of that.
And what's really cool is, and we know what's really cool, Hank, is that when I first saw you guys at the Bitcoin conference, it's that camaraderie, right? It's that understanding of, hey, we're all in this together. We're all investors. We're all thinking about the world the same kind of differently, but how do we all get together? How do we understand the world a lot? And when you see news coming in and not understand the news, I think one of the things that you do, you bring a perspective of that news that isn't coming from CNN and coming from Fox Biz, is coming from everyday people. I love that. I love that there's not just this thought process of going, okay, what does mainstream media think of me? Right. I don't, look, I love mainstream media. I've been in the mainstream media for half my life, and I love that. And I love that. But there's also other opinions, right? And sometimes opinions kind of get lost in the train of life. And as I want to be, I don't want to be in the caboose. I want to be in the driving the train. I want to be the conductor, right? And when I look at the conductor, when it comes to crypto, I think that's Roxham TV. You guys have really started something, and you got to love Olivia, by the way. Olivia, big shout out to you about what you're starting here, what you're doing. And I tell you, people love it. It's exciting. I mean, I when we all started, we had 5 viewers. Hank, we got 75,000 now watching us.
Wow.
When people say you can't do it, don't listen to them. Turn them off. The negativity around crypto right now is pretty high. You even got Elizabeth Warren saying, "Oh, it's just for the bad people in the world." I don't believe that. I don't think so. I think digital assets are the future. What do you think, Hank?
Absolutely. Oh, absolutely. And it reminds me of, if you're a football fan at all out there, Robert Saleh, he's the new coach of the Tennessee Titans, but he used to be the coach, I think it was of the 49ers, and he was on the show Hard Knocks, and people were giving him a lot of criticism. And you know what he said to everybody that was giving him criticism? He said, you know what? If you don't got haters, then you ain't popping. So the very fact that we still have, if you don't have haters, you ain't popping. So if you ain't popping, that means you're not about it. You're not in it. And that's exactly what we're seeing from Bitcoin right now. So, people give it grief and it's a scam thing or whatever. Get real. The writing is very much on the wall. We've seen it for the better part of 16 years. It keeps moving forward, and it's an instrument, it's a tool, and it gets conflated with all these other things, scam tokens, pump.fun, people trying to make a quick buck. But to anybody that's done the work, you and I both know it's the future. And you and I have both interviewed, I'm sure, hundreds, maybe even thousands for you, and the story's always the same. It's skepticism at first, they do the homework, and then even the biggest skeptics end up being fans, and there's a reason for that. So yeah.
Hell, Hank, I was a skeptic. I mean, I bought Bitcoin at $75. I was like, I was late to the game. I thought I was very late to 75. And it went to 19,000. I understood, right? But when people go, oh well, you like it because you got in early. No, I liked it because I finally understood it. And when I first got into Bitcoin, I didn't get it. Right? I was like, I don't get it. The guy that taught me Bitcoin, I gave him every reason why I wasn't going to like it. Oh, well, Wall Street's going to hate it. Wall Street loves it now. Don't let them kid you. They're buying it, right? The institutions are buying it. Well, you know what? The bank's going to hate it. Well, the banks did hate it, but guess what? Money's going out the door. And if you're not a bank, guess what? Digital banks are picking up everywhere. We just saw Blue Owl get spanked this week, right?
Yeah.
So look, I think Gandhi was right. First they hate you, then they like you, and then they join you, right? And whether we've seen the ups and the downs and the ups and the downs, but what we need and what Roxham TV is bringing and has brought, I've done Broughton or whatever the movie was, is that you bring in the perspective, right? You're bringing all the different perspectives in the crypto space, even ones that maybe I don't even agree with. There's times I don't even agree with them, but you know what? I want to hear the perspective. I want to understand. You know what? The thing I love about trading is that I always learn something new. And I have learned more from Roxham TV than I have from any other channel when it comes to crypto.
That's the best kind of endorsement we can get, and as you said, everybody's got their own flavor. Like, hey, if you like having a cold beer watching football, but also like to stay on top of your investments and make sure you're not getting screwed by the Fed, you might like what I put out there, right? Like middle America, that's who I appeal to. But hey, if I'm not your cup of tea,
everybody's getting screwed by the Fed, Hank.
Yeah, well, I was throwing out one there everybody could kind of latch onto. Sorry, but but there's a lot of other great personalities out there, and Roxham just keeps getting more of them, and it's just like you, BigBeat, and we all kind of had a magnetic pull, you and I, to each other, because I think you and I are of a similar ilk when it comes to this type of entertainment and information. And we're seeing that same thing here at Roxham. All the right people are kind of gravitating to each other to create this real collective force, and we couldn't be more excited.
And I think one of the cool things about Roxham is that the international side of this too. I love your international flair to Roxham TV. And you really have a wider scope of the thought process behind crypto, because a lot of times in crypto, we all just think of it like, oh, it's a US product. It's not. It's definitely not just a US product.
No.
It's just, I just want to hear people that speak English. Trust me, more people that don't speak English are using it. Oh, well, those are the bad people. No, they're really not. If you think about it from the perspective of the US dollar, more bad people are using the US dollar. So stop that narrative, right? Yep. What do you say to the Peter? I mean, look, I like Peter Schiff, by the way. If you don't know it, I've had nice conversations with Peter. You've had conversations. Talk to me about what is the directive that when you look at the negativity around crypto, what is Roxham's thought process behind putting them on to letting them have their own chance to talk about their thought process?
About people who have like a negative opinion of crypto? Yeah, I mean, listen, we're here for it. We're here for it. That's kind of part of the whole thing of Bitcoin, right? It's permissionless, it's decentralized, it promotes freedom. And we're for the freedom of people to argue against it. The Peter Schiffs of the world, man. Like, get on your soapbox. We're here for it. Honestly, I'm glad you're inviting the conversation, because the thing that is really important about the international vibes at Roxham, as you mentioned, is that one thing we, especially here in the United States, don't think about is how is Bitcoin viewed in other parts outside of the world, outside of our United States bubble, right? And it's so fundamentally different. I think people wouldn't believe it. We think of Bitcoin as this kind of, or a lot of Americans do, as this volatile investment vehicle, kind of akin to gold, but also more like a tech stock thing. When in South America and many countries, Bitcoin is a lifeline. Bitcoin is a way for people for them to preserve their wealth and not lose their hard-earned money to these terrible government currencies. And it's really important that we start bringing those stories to light here in the United States before we become the next in that line, because that's the way things are going. We're seeing inflation at seemingly unparalleled rates that we had really seen in our lifetime here, BigBeat. So it's really important to give people that international perspective, because we're seeing in other parts of the world what could very well happen here in just a couple of years' time, 5-10 years' time. Let's take those cautionary tales and not become one, and do something.
Yeah, I'm gonna bring up if you guys. I'm gonna do it one more time. I'm gonna bring up Roxham.tv. Click on the button, folks. You'll get to see Hank, and of course, I love the fact that Hank and I are on every Monday on the show. And big deal, Victor. I love Victor, the boy. But when you look at the shows that you have on there, you're not playing around. You've got the real deal shows, and I love that. You've got the platform along newsletter, and you can join the newsletter here, the latest news and the shows. This is not a small startup, folks. This is the real deal. And I think that when you look at what it is that you're trying to produce and trying to create, it's done. You know, 20 here it is, 24/7 Bitcoin native financial streaming network. Yeah. One of the things that I always talk about, Hank, is execution, right? So many people have these great ideas, but no execution. And you got to give it up for Roxham TV for the execution on the side of this. I love this execution, you guys. And you're one of the things you also do, you listen to the people that are on your show, you listen to the feedback. Yeah. And you've implemented it. You've implemented the whole thing into this thing. And I love it. I love what you guys are doing.
We appreciate that. You know, it's all about in today's world. You got to meet the audience where they are, and how are people consuming content, and what's ultimately important to them. You know, we're not trying to shove any narratives down people's throat. What's kind of the beauty of Roxham, right? You mentioned the production value. We have this incredible team of professionals who come from legacy media in mass, but they also kind of got sick of the same thing we in the public are sick of, which are these narratives that are controlled by something bigger than just the actual news and reporting the news. So it's like we have this team that could be broadcast anywhere, but they're here on this singular goal of trying to give broadcast level content to people, but with a news source that's unbiased, that's literally just trying to inform people and make them understand why the world the way it is and what they can expect from the world now that it will be this way. And we do our best to inform everybody through all of our great personalities. And they come from all different walks. I mean, yeah, go ahead.
When I talked to my friend Ron Insana, I asked Ron, I said, what is it that you want to do here? And he goes, this. I want to build something that everybody can be a part of, right? And let them do their thing. right? And when I look at Roxham TV, I go, wow, you really have done your thing, right? And you know, everybody goes, oh well, you're small, you're big, you get put into a pigeonhole, and I don't think that's the case. I think in our case, I think letting people do what they do best and let them do it. I don't believe in young or old or color. I just, everybody has opinion. And I this is going to be a new thing, a bigger thing, and I'm super excited to be partnered with Roxham TV. This is one of the best things I think that we've seen, and I'm going to tell you, people are going to be very shocked about what's going to happen here in the very, very near future here. What we're building, and I love it. And man, the partnership with Roxham is just is awesome. I love it. I absolutely love it. Hank, I mean, I'm gonna let you have your last word about it.
Yeah, no, Big B, you know, it's just a pleasure to get to visit your house this time. And we certainly appreciate you with the Roxham family as you do join me on our show every Monday at 10 a.m. PST. So if you haven't already, make sure to check out Big B and I there. And yeah, you know, if you're looking to really understand the whys of this crazy world, it's ever changing. It never seems to make any sense. And somehow we're still not talking about the Epstein files. Come to Roxham TV. We do our best to give you all the news so that you actually understand what matters and how you can best respond to that in your life. And, you know, not financial advice, but maybe make some better investment decisions along the way. And that's what we got Big Beat for. So, you know, thank you again for having me on, Stephen. It's always a pleasure. And everybody, check out Roxham TV. We'd love to see you there.
You know, you've got some fan out there, Hanks. Let's do it. Someone's asking. Yeah, okay. Someone's asking about your haircut. Where'd you get your haircut, my man?
My haircut, Great Clips, $30, baby.
I don't think my wife would let me go to Great Clips.
I got a girl. She's great. She knows how I like. So yeah,
I did too until I went to Great Clips and got drunk, and I get it. Okay, the market quick update. The market's Dow up now 182 points, Nasdaq up 0.79%, and the SPOO's now up 0.6%. Trump screwed the markets up and brought them back to the market. I don't know, but I love it. Hank, my man, listen, 78,000 people right now are watching you live and giving you big thumbs up. So thank you so much, and thank you for the partnership here with Quasar Markets.
Oh, thank you, Big Beat. Always a pleasure. And everybody at Quasar, thanks for having me. Great seeing you. Enjoy your weekend, everyone.
Oh, listen, what a great day so far. I have the pleasure in here a little bit. We've got some really big deals coming up here in about looks like about 10 minutes here. Our boy here, Ron Insana, is gonna be running here. I'm excited about this one. Okay. And I'll tell you why I'm excited. I'm probably gonna cry while I do it. When I started out in the markets 35 years ago, when I was growing up, I always wanted to be a stockbroker. I didn't know any better, right? I grew up in Southern Illinois, and there was no financial TV, none. I lived 6 miles outside town, and I didn't even live to cable. My parents had to go buy a satellite dish just so I could watch financial news. And you know, it was a long time ago, right? But what happened is you start to learn, right? And at that time, there was nobody that could help me to be, you know, my parents did not know what to do. And I got the chance to watch the Financial News Network. And back then, with a satellite dish, and the only one. I had to wait 2 days to get the latest Wall Street Journal. That's how it all started. I learned on graph paper and pen how to trade. Yes, 35 years ago. I don't care how old. I'm okay to say it. But I got to watch some of the smartest and brightest people on Wall Street bringing that news to you in a way that I'd never seen before and had never been done before. They pioneered what we see today and how we see it. And as my friend Tully Wood would say with CMT Association, we stand on the backs of giants. I never thought that I would get to see the people that actually I watched my whole life. And I do not like it when companies throw people to the side or do things wrong. I'm excited about the next episodes coming up that my friend Ron Insana is going to bring to everybody here. This is going to be really cool. We're going to call it something different. It's about 9 minutes out. I cannot wait to bring this to you. And one of the things I've always said was that I wanted to bring professionalism to the world. I wanted to bring it in a way and letting them, with news, people are not allowed to have their own opinions. Well, we don't believe that here at Quasar Markets. We allow them to say what they want to say because they have opinions too. Why? Because they're the ones, listen, they hear every news piece, folks. They hear it all. They already know what's going on. They know what's going on. They know the people that's bringing that news to you. So I know I just texted me a second ago. Ron's coming on here. We're gonna do something called a homecoming. I'm super excited about this one. Look, folks, man, I don't even know what to do. I'm probably gonna let him come in early if he's okay with that. Give me a thumbs up. You're okay with that, Ron? But yeah, this is something very, very exciting, folks. Without further ado, I'm going to bring Ron Insana in first, and he can do that with seeing some more people. Like, all right, I'm not even going to tell you who they are. This is going to be the homecoming reunion that we all love, and the people that are coming in this show today are people that you love too and should be heard from. So without further ado, bring Ron back in here to bring them in too as well. Ron Insana, folks.
Thanks, Steve.
How are you, man?
Doing all right. Thanks for all the hard work you're doing today and carrying the ball. It's a long run.
Let's talk about carrying the ball. You said your daughter. How cool is that, man? Watching her on the show, I love that too as well. Ron, I'm going to step out. You've got this very cool piece coming in the next few minutes here. I will step out, let you do your thing. But with all further ado, man, super excited about this next episode. I want all 79,000 of you that are watching live. I want you all to hit that like button, subscribe, and retweet. I want to get this out. We're going to break 100,000 here. This is a very big day at Quasar Markets and a very big day for all of us. And I'm.
Thank you, Steve. And yeah, so a lot of my compatriots that I've grown up with in the business are going to join me here today for about a half an hour, 40 minutes. One of whom, of course, was my co-anchor for a period of time, Sue Herrera. We grew up together at Financial News Network. She started Financial News Network along with Bill Griffith and some other individuals you may recall, if we were to call them out by name, back in 1981. Tyler Matheson, of course, joined CNBC, worked with him for over 30 years. And Bob Pisani was an original or near original at CNBC as well. So we've all known each other for anywhere from 30, in my case with Sue, to 41 years and worked together in the early days of the Financial News Network. And then after that, the merger between FNN and CNBC, where we all got together and built out what is now a quite well-known brand and is still humming along just as well as it always has been. And, we're going out and doing other things and having conversations with people. And I travel in the country in my case and talking to different groups about what's going on in the economy, what's happening with the financial markets. Today, rather interesting. We have the Dow up almost 200 points. The NASDAQ's up almost 200 points on a day in which we had a wide variety of pieces of information, whether it was the softer than expected GDP report that came out today, showing a 1.4% annual growth rate, would have been about a point higher had it not been for the government shutdown. Inflation, which was included in the personal income and spending data that we saw this morning, running a little hot at around 3%. And then, of course, the big story of the day, the Supreme Court announcing later in the morning that indeed it was illegal for the president to impose those tariffs or import taxes using the Emergency Economic Protection Act, IEPA, that he was using to justify very broad tariffs across a wide swath of countries. They said he can't do that. He does not have taxing authority. That power belongs to Congress. And as a consequence, now the president, of course, responded rather harshly to the Supreme Court, even intimating to his audience that some of the Supreme Court justices may have been influenced by foreign entities or foreign individuals, which is a very strong allegation to make, one that would be quite unusual. He also went on to say that under Section 122, he is going to impose 10% tariffs across the board on all countries. Now, that's something he could do for 150 days. That does affect the overall tariff rate. We don't know, quite frankly, whether it's come down from the average of around 14 or 15% that we've seen over the course of the last many months now. The average tariff prior to the Trump administration's second run-through was around 2.5%, jumped up to as high as 16%, and now it's probably somewhere in the 9 or 10% range. We haven't been able to kind of comb through all the numbers to determine exactly how the tariffs are being affected. It's also a wide open question as to whether or not those importers or any other company that was hit with the import tax would have to would be in fact allowed to get a refund. The president said they will litigate that, and it could take up to 5 years. So this is an increasingly complex story. There were dissenters among the Supreme Court justices who felt differently than the majority. It was a 6-3 opinion in favor of removing the tariffs, or conversely, nullifying the tariffs under the International Emergency Economic Powers Act, IEEPA, again, as it's known. The president himself identified other tools that they could use, some things we've talked about earlier in the day, Section 232 and 301 tariffs that can be imposed for either national security or anti-competitive practices among some of our trading partners. All of that apparently appears to be on the table. Treasury Secretary Scott Bessent was talking about this publicly as well, not viewing it as a defeat for the president, and again, suggesting there are other mechanisms by which tariffs can be imposed and maintained for a period of time. Now, the big question, though, is if indeed those tariff monies had to be refunded, there have been estimates from around $135 to $175 billion collected under IEEPA that would have to be refunded. Those were also, by the way, used to lower the federal budget deficit, so there would be a change in the math there as well. But all of this is going to take some time to iron out. It just not going to happen by tomorrow or Monday or whenever we start the new business week. This is going to take a lot of time to sort through, comb through all the various details, the commentary from the Supreme Court itself, and then, of course, the backlash that the White House is offering now, and again, in no uncertain terms, suggesting that tariffs are here to stay. So that's a philosophical position of the president that's been in place, quite frankly, for the bulk of his adult life. He views those as a better means of collecting revenue for the federal government relative to, say, the income tax, and suggests it would make the country, more competitive if these tariffs remained in place. So it's something that obviously we have to keep an eye on, although the markets do seem somewhat resilient. Once again, we're in a striking distance of record levels. The S&P's at 68.98, Dow's at 49,566, and the NASDAQ is at 22,834 as we move deeper into the day, head toward the close. And so as we wait for my friends to join us, we're looking at a day that's, quite frankly, I think fairly confusing for a lot of people, and is going to, we'll have, as you will see on other networks and other places, a coterie of lawyers who will be dissecting this to the very last word. We'll have political analysts and economists all talking about this and what the ultimate impact might be on the overall economy, the markets themselves, individual business sectors. For a time today, retailers and other importers popped up on the news once the Supreme Court handed down its decision, and then, of course, reversed course because there were some, of course, concerns that there would be additional tariffs imposed that could replace those that were just recently nullified. So all of that, look, is out there, and we'll have to see how it plays out over time. I'd like to invite Sue Herrera in, if indeed somebody can let her out of the waiting room. And there she is.
I'm out of the waiting room.
And
there's Rob and there's Ty.
Tyler Mathis is here. Hey, everybody.
How you doing?
It's Old Home Week.
It is Old Home Week.
Pisani smile. It's all right. It's all good.
And what a day to get together. I mean,
yeah.
This when I saw the Supreme Court ruling this morning, I was like, this is going to be like a 5-year story. It's going to go on for a long time. And I think that's why we're seeing the volatility in the market, and the market's trying to figure it out, right? What happens to refunds? Do we get refunds? Does it go to the lower court? All of that.
Individuals don't get refunds. Maybe some companies do, but consumers who paid higher
consumers are not going to get a refund.
They won't get a dime. There's no mechanism.
How would you do that?
Ty, I think you're muted.
Turn your microphone on, Ty.
Robert, thoughts? Bob, you there?
I seem to have lost the audio there, Ron. Hold on one second.
Okay. This happens.
We'll chat. We'll chat, Ron, while we get
amongst ourselves, as it were.
I think it's going to be interesting to see how European markets react to this, and how European allies react to this, and Canada. How does Canada react to this? I mean, how does it affect the relationship between the U.S. and major allies, and that relationship has fractured to a great extent over the last year or two, and I think that's something I'm going to be watching for.
And Ty, what was interesting to me was that President Trump said that some of the Supreme Court justices who voted to
Ron, I'm still trying to get the audio up here. Hold on one second.
Okay, they'll work with you, Robert. That some of the Supreme Court justices who handed down that decision may have been influenced by foreign entities. That is a very strong allegation to make.
Yes. Yeah, it really, it's the most overused word with respect to the administration is unprecedented. And that kind of comment is really unprecedented, suggesting that there's some not just unpatriotic behavior, but potentially treasonous behavior if the members of the Supreme Court, several of whom, oh, by the way, Justice Gorsuch and Comey Barrett were, I believe, his appointees, correct?
Yes, they were.
Yeah,
they were. But I think that the comment undermines the faith in the court and in the system. And I mean, there have been a lot of people who have lost faith in the system. So I think the comment comes at a very pivotal point for the country, for the court, you could lay it bare on almost any platform. And I think it is a pretty strong, outrageous statement. And I wait to see how it plays out.
And one thing I would say I agree with is the idea that this is likely to play out over a period of years in Syria in various ways, in all kinds of litigation. And if there's another thing one can say about President Trump, and that is he does not give up easily, and he will fight as hard as he can for as long as he can to prevail or find some way to balance the trade scales in ways that he sees as important and economically beneficial to the country. So I think there's going to be long litigation. That's sort of to state the obvious, litigation that will probably continue beyond the end even of his second term in office.
Bob, what's interesting is that we had the largest trade deficit in goods last year in 2025, even with the tariffs being in place. The overall trade deficit itself was $2 billion smaller than it was the prior year. The president said it was down 78%. It was down 0.002%. Yet the markets, for some reason, seem to be shrugging a lot of this off. Bob, you used to stand down there every day and talk to people. If you were there today at the New York Stock Exchange, what do you think they'd be saying about this?
I can tell you what they're saying. I mean, the people on the floor and people I still stay in touch with, they're amazed, frankly, that the market continues to hold up so well. But look, the bottom line is the market reflects a future stream of earnings. And the bottom line is that even amongst those most affected, like retailers, they've been able to pass along the goods, the price increases. So far, to a large extent, the consumer is not dramatically pushing back. Frankly, I keep wondering when eventually they are. I'm amazed at some of the rise in prices and the rise of, for example, just going out, the rise in just going out to a moderately priced restaurant compared to the last few years is rather.
Which you've been doing a lot lately, as I understand it.
Yeah, well, it's I always do that, Ron. That's part of my old raison d'etre and hanging out with my old friend Art Catch, and that's what I did for 30 years, hanging out in restaurants and bars. But
you do your best work.
I was taught by the master himself.
I do see pushback from consumers as I travel around the country, as Ron does as well. You hear a lot of worry and complaints about rising prices. Two indicators that I watch very closely, and it was very prevalent over the holidays, was layaway was back because people were worried about not being able, one, to have access to toys because of the tariffs, right. But also, two, they weren't necessarily able to pay for it right up front, but they wanted to make sure that they could, have a family Christmas. The other thing is thrifting at thrift stores is way up.
Yeah.
And I think those are just peripheral indications, to me anyway, that certain parts of the consumer sector are feeling the effect of rising prices, are feeling the effect of the tariffs, because all of those costs are being passed on to them.
Yeah, it's funny, and Tad, I don't know if you've heard this, and Sue and Bob too. Is my wife several months ago, for the first time in the 34 years that I've known her, started complaining about grocery prices, and actually switched out. She's going to Aldi. She's going to, Costco. And again, I'm not trying to be like a smart aleck about, what we can afford and what we can't afford, but she was just noticing that the difference, the delta in prices from a place like Aldi to another one, I won't name the other one, but I mean, it was like 50%.
Yep.
And she's like, I don't know if you guys are hearing the same thing, but that's
absolutely. I go, we have a market in town, and it's a brand that I won't mention here, but you guys are familiar with it. The price of milk there is double what it is at Trader Joe's.
Yeah.
Basically double. And it's just, hey, it's really expensive. You do feel it. I can't get out of the local market for less than $100 anytime I go there, basically. If you buy any meat or any fish,
Oh God! When my kids were growing up, I could not get them to eat fish. Now that halibut is like $25 a pound, all of a sudden they're like, we need to eat more fish. Really?
Yeah, sadly, my kids discovered sushi early on. I was like, no.
Yeah, exactly.
So,
right?
so is everybody spending more time if they go out in happy hours? Amongst my friends, I'm turning 70. I'm perfectly willing to admit that.
Turning 65 next month.
They're going out, and they're still going out, but they're more conscious of whether they're going to spend $200 for a couple out. And if you go out at a happy hour from 4 to 7, it's half the price. I hear that a lot amongst my friends too. So I think that's a sign of subtle pushback. But if you actually still look at the numbers, they're still pretty good. I mean, I'm quite amazed at the resiliency of the U.S. consumer.
It's interesting. Moody's, and I use this in my Substack the other day. Moody's put out a chart of the top 20% of all wage earners account for 60% of consumer spending. And then when you look at the other 80%, it just rolls over completely. And you have this bifurcated or K-shaped, or in my estimation, two separate economies operating at once.
And doesn't that worry you, Ron? I mean,
yeah, sure. We haven't.
Absolutely.
It's more pronounced than any other time that we've seen a similar phenomenon.
People ask me all the time, what do I think is going to happen to the S&P 500? And I say, I don't worry about whether the S&P is going to be up or down this year. I want it to be up, but I worry a lot more about the wealth disparity. Remember 15 years ago when I think it was Wolf, the fellow at NYU, put out that survey that the top 10% of households owned 86% of the stock, the top 20% owned 93%. And it's only gotten worse since then. That worries me a lot. That's a sign. This is what you were just saying, Ron, about the top 20% doing most of the spending. That means that the top 10% own 86% of the stock means that's who's listening to CNBC, for example, and the other 90%, or certainly the other 80%, don't have that much skin in the game in terms of stock and bond ownership, which we all know is the surest way to gain wealth in this country. That worries me. When there are people who have 80% of the households that don't have as much skin in the game, that means they're not that interested, and that means they can make decisions, of course, that are really antithetical to long-term savings. So how do we expand the wealth pie? I guess that's my question, Ron. How do we expand
Tyler owns 75% of the 80%. So, we should get perspective on
that. But here's the thing. I think the confusion that emanates out of Washington in whatever shape or form, from whatever department that we're hearing it from, I think that confusion makes people pull back. If you were thinking of getting into the stock market, but then tariffs come into play, or you were thinking getting into the stock market, but now we may have an altercation in the Middle East. I think all of that headline risk makes people want to sit on their hands and sit on their money. So my question is, if you are going to invest in the market, or if you are managing money in this market, how do you do it against a backdrop of extreme headline risk?
So what's worked this year, Tyler? So, it's interesting. Last year, the rest of the world outperformed the United States roughly by a factor of 3. So far this year, S&P is effectively flat. The global Dow ex-US is up 8.8%. And people, Tyler, just aren't trained to look outside the United States. And for the last now 14 months, that's where the majority of the gains have been.
No, that's right. But for the preceding decade or so, it wasn't where the gains were. But I think you're onto something there. I think Americans, going way back to when I started in covering financial markets. We're very chauvinistic investors. I can call it chauvinistic. You may call it patriotic. In other words, we tend to buy what we know. We tend to go with American companies, and the rest of the world is the rest of the world. And I just don't even want to deal with that. And so we've been under, as a group, as a population, an investing population, I think we've been underinvested internationally. I've kept money in international funds for years, and I get to the end of the year for most years, and I've been swatting myself. You dumbass! What do you got all this money in international when you could have it in Nvidia? You could have it in some American S&P fund, an index fund, and do very well. But last year, you're quite right, was a year that international and so far this year, international has outperformed, and I think you ignore it at your own danger. You ignore
that. Getting reversion to the mean, right? We've been waiting for this in international for 15 years, essentially, since the financial crisis. And this goes back to the value of diversification, what all of us have been talking about for 35 years at CNBC. On the other hand, the U.S. stock market is 65% of global market cap, right, Ron? I think
it's an all-time high. Yeah, absolutely.
Yeah, it's 70 trillion in the U.S. stock market, and it's 110 trillion global, something like that. So the numbers clearly favor the United States. But
they do, but that's also a peak number, Bob, right? I mean, so when you get to those things, and you have minimal cash among money managers down to like 1%. You have margin debt at an all-time high. Those are the types of things that, years ago, decades ago, Sue or I or Tyler or you, we'd all be screaming about that these are, risky numbers, stock market capitalization, GDP, pick one. They all say we're closer to a top than a bottom.
The other thing, and I'm just thinking of this because my daughter, Jackie, who's graduated college, started her first job as an engineer, and I said, do you want help with, your 401k allocation? What are the benefits like? Yada, yada, yada. And I was struck by how narrow the choices were in terms of funds for her to invest in, which to a certain extent goes to what Tyler was saying, which is we tend to be very US focused, even down to benefit packages. So what I said to her is, why don't you take some extra money and put that, in a fund that invests in Europe, or a fund, Matthew's Asia fund, whatever it is, and get some diversification. And she did, which I was very happy about. She actually listened to me, which just made my day. But I think it does go to the point that Tyler made, which is we tend to do what we're used to doing. And that, I think, the world is changing in really dramatic ways. And I think as investors, we need to look outside of our own little cocoon.
Yeah. And Bob, I want to come back to what you said about the resilience of the market, because this is kind of like the Dracula market. I mean, you can hold up a cross, you can, a ring of garlic, it doesn't really matter what you're doing. It's not dying, it's not melting away. It's not shrieking in horror. And you've got, and to be serious, you've got the imminent threat of a war between the United States and Iran. You've got all these other metrics that we talked about. You've got the rest of the world outperforming. And you've got now, obviously a lot of unpredictability and uncertainty around policy. And yet, Bob, the market doesn't seem to care.
Well, of course it cares. But again, the market is a discounting mechanism for a future stream of earnings and dividends. And if you look, and Ron, you're a great observer of this, like I was, the numbers went only up last year and are still going up in this year. I looked microscopically at the S&P earnings picture for 30 years, and I still look at it once a week. Can't get rid of old habits. And I don't see it going down. And I look at tech is still expected to have 30% earnings growth this year. The same as last year was 25%. I think that's quite amazing. I'd like to pivot a little, though, and talk about what I see as the biggest threat here, which is the AI situation. You've seen what's going on when slight changes to Anthropic's models or ChatGPT models has resulted in paroxysms in the last few weeks in insurance stocks, in software stocks, for example. And I don't know what your experience, guys, are, all three of you, but I have spent a lot of time in the last 6 months with Claude and ChatGPT. It is quite shocking, and it's awesome and frightening at the same time how much it's changed just in 6 months. These are much, much better, amazing devices here that literally are changing in front of your eyes. So what I saw about 6 to 8 months ago, people were laughing at it, saying, oh, this thing hallucinates. All of that has mostly gone away. These things have matured astonishingly fast. And the predictions of people who said that there's going to be a hyper acceleration, I don't know about a singularity, but a hyper acceleration in the knowledge base and the ability of these things to work, I think has come true. I have spent a lot of time with Claude and with ChatGPT. And it's shocking and scary what it knew about me, for example. It started talking back to me in ways that indicated it was extremely familiar with me and who I was and what I did. And
that's frightening.
I thought it was a little scary.
Hey, Tyler, you've got some University of Chicago connections these days. So you're around a campus. So what are you seeing, with respect to the way the kids are starting to utilize these tools in ways that
I think it's ubiquitous, and I'm with you, Bob. I like Claude. I think Claude's really good. He's my best buddy now. I can do faster research and more research using Claude than I could ever before. But I think the young people that I encounter at U Chicago or elsewhere when I go visit my son who's at Indiana, the national football champions of the year, by the way.
Yes, indeed.
Your quarterback's going to end up on the Raiders and go 2-11.
They're all using it, and they're all, I think, smart enough to realize. And there are, professors are using filters that can tell them what's AI and what isn't.
Right.
So they're smart enough to know that they can't just cut and paste documents from AI into their papers or their essays or whatever, but they're using it all the time, and they're going to show us the way, as they always do with technology. And
I think we're frightened of it, and they're embracing it.
Yeah, they're embracing it. I embrace it. I couldn't do half of what I have to interview. An eminent business school professor from London named Herminia Ibarra in a couple of weeks. And I was not familiar with her or her work. She's an esteemed scholar who writes a lot about leadership and the pathways to leadership and the pathways to career transition. And I went in and I did all of my research on Claude and OpenAI or ChatGPT. And it was just astounding what that device could tell me about her and her background and the themes of her book. It's really good.
Is there a good reason, guys, for us to be concerned about the idea that AI is actually going to be an effective substitute for some software that's out there, is an effective substitute for financial analysts, maybe for financial journalists, and for knowledge workers in general? That's the one thing the market can't figure out. So the optimists will say it's going to augment. So you and I, all of us, are going to be more productive because suddenly we're going to have more work that's available, that we're going to be able to put output. And other people say, well, frankly, a lot of you may not be that necessary, you knowledge workers. And that's kind of like the hidden question. We don't know what the answer is.
And one question that's been on my mind is are individual investors likely to accept financial advice or individual security choices that they know are coming purely from artificial intelligence engines? I mean, I think there's some level of comfort that most investors feel from interacting with a human being who they can get.
Yeah, Ty, but some kids are turning to these devices as therapists, and they're agents of interactivity that would I be comfortable talking to Claude about my personal life? For a wide variety of reasons, no. Not the least of which is somebody may purloin the information. But I mean, by the same token, it's just certainly not the way we were raised. The kids don't seem to have that reticence that we do.
They don't. I see it in my kids. They're perfectly comfortable with it. And in terms of financial advice, I think they might. There's no motive. Do you know what I'm saying on AI's part? Whereas I think maybe some people are kind of cynical about money managers and what's in it for them and what's their cost basis, and what fees am I paying, and why should I do that if AI has no vested financial interest in how I do and can give me advice? I don't know the answer. That's just the debate that I hear out there.
The question we haven't asked yet, Bob, and this goes right to you, is, I mean, we've been debating whether or not all of this is bubble-like or a bubble or something that's going to lead to a financial market problem down the road. But, we've seen a 30% drop in software stocks. We've seen a knock-on effect, but we haven't determined yet whether or not this experience is going to be like 1999 and 2000 and create a problem in the financial markets when maybe some of its potential is not realized as quickly as people would have liked.
No, I think this is not 1999. I think you and I probably both would agree on that. It doesn't mean the value, we're not overpriced. The valuations are too high. We've been at 22 times forward earnings on the S&P for, several years now. And you know the story here, Ron. Markets can stay overvalued for very, very long periods of time. 22 times forward earnings.
Longer than you can stay what?
Solvent. Thank you. The problem here is that you can say the markets are overvalued at 22.4, and there is no information in that at all. Should I buy, sell? What should I do when you do that? And the answer is generally probably nothing, because the market eventually will smooth out. If you're a long-term investor, I wouldn't worry about it that much. But you were onto something here, your discussion here, because these are what I call useful lies we tell ourselves about AI. So here's a useful lie we tell ourselves. It's not going to replace human interaction. People are always going to want to talk to people. But as Ron said, we now have people doing therapy. We now have healthcare workers that are working with AI, sitting there talking to them. People seem to be able to actually get used to this a lot quicker. People were appalled when a digital actor was created 6 months ago, and people our age said, oh, we're never going to watch a digital actor. He has no backstory. But the kids today, as Ron pointed out and Sue pointed out, they're going to get used to that. You're going to have digital actors that have backstories that are going to be interviewed on Saturday Night Live in the next 5 years, I'm quite sure. So I want to believe that we all have value added as human beings, and that the four of us all have personalities that people want to hear about because they know us. And I want to believe that too. But long term, I see how humans interact with things. And if it talks like a duck and quacks like a duck, eventually you start treating it like a duck.
An AI duck. Yeah.
Yeah.
Tyler, what's your take on that? I mean, because you've done personal finance as well as broad business news. I mean, when you look at individuals, do you think they will be comfortable, paying $20 a month for financial advice?
Well, I mean, there's been a migration to sort of robo planning over the years, but I think an awful lot of people, I think an awful lot of people are just more comfortable dealing with a human being, and than they will ever get, unless the results of AI models prove that AI can do it better. Yeah. Because then the money will go where the performance is, and if the performance is better by following some AI advisor who looks human, who interacts with me as though they were human, and understands me and my portfolio needs and so forth, and can make recommendations that are profitable for me, well, then I think inevitably people will go where they think their financial self-interest is served best. And if that happens to be an AI-generated investment engine, then that's the way it will be. I can't get over the fact, Sue, that your daughter is out of college. How did that happen?
No, how did that happen? Well, and the other one, they're twins, but one of them is a year behind, and she's about to graduate. And I got to tell you, time goes fast.
Yeah, how did this happen?
I know. But you know what? For all those years when I was at CNBC and they were little, and I worried about, being there enough for them and balancing that with, having to go downtown and anchor our show together, Ron, and, the time away from my family. The one thing that I think all of my kids took away from that is the fact that life is expensive. You have to work hard and you have to invest. Otherwise, you're working until, you're 80, 90 years old, and none of them want to do that. They they are not my kids are not soured on the market. They want to participate in it because they see what the upside is. But they also saw me cover numerous financial crises. So they know how bad things can really get when things go bad.
So I have the ultimate question I want to ask here before we wrap up. Bob, you said you're turning 70. Happy birthday. Welcome to the 70s.
Many more.
Thank you. I'm going to turn 72 in 6 months. So join me on the other side of the 70 barrier. But I know how I'm going to Rome in a couple of months, and I want Pisani's favorite restaurant recommendations for Rome.
I have many favorite places.
I know you do, and I want them.
Is Tula still there, Bob?
I'm sorry?
Is Il Tula still there?
I don't know that place.
Well, then you have to go to Rome.
Yeah, sorry about that. Before we go, Ron, I just want to get you guys' thoughts on the other two big stories that are out there, which I think which is prediction markets and crypto / Bitcoin. Just on prediction, I just want to get a quick round robin from you guys. I am amazed, interested, and appalled at the same time. I think prediction markets show some signs of being very useful in improving forecasting methods, which I care a lot about. I know you guys do. We all know how terrible stock market prognostication is, and prognostication in general. So I really like prediction markets because it shows signs of improving forecasting methods. At the same time, it's appalling to me the continuing increase in gambling culture that prediction markets have enabled in this country.
Absolutely.
So I'm sort of two minds of this. So I'm just sort of throwing this out to see what you guys think of.
As background, we are on a platform that is going to utilize prediction markets, AI, predictive analytics, and is heavily involved in crypto. Look, the thing that scares me most, and even though predictive markets and tools may be increasingly accurate, they might be increasingly accurate because there's a lot of inside information embedded in the contracts that are being traded. And that's the thing that concerns me most, where it's illegal in other parts of the world, but not illegal there.
Not illegal here. Yeah, I would agree with you, Ron.
Yeah, so the CFTC is really trying to grapple this. They're basically trying to take control from the states, it seems like, and to a certain extent. And they're claiming that they'll be able to develop the same tools. Like in futures markets, you can't trade on insider information in the futures markets. It's clearly illegal. I mean, the SEC seems to be trying to take control of the prediction markets and say, well, we'll figure out a way to avoid that kind of insider trading. But I agree with you. And look at the purity of sports. We've already have horrible sports events where there are players that are throwing games. I mean, this is going to be a potential disaster, but it seems to have a real head of steam behind it. I don't get any way it's going to be particularly
Brandon
stopped.
Cooks, the Buffalo Bills receiver, made the catch against Denver. That's all I care about. I was a horrible call, ruined my season.
It was a bad call.
I know that. Don't take me back there. Don't take me back to that, please.
So listen, some final thoughts. We're going into a weekend in which we have to think about the Supreme Court. We have to think about Iran. We have to think about economic data that this morning were quite mixed. And just round robin, Bob, I'll start with you, Tyler, and then finish up with you, Sue.
Well, I just want to finish a quick thought on crypto / Bitcoin. The proponents of Bitcoin used to say it was digital gold. It turns out gold is digital gold. It turns out it's quite astonishing to watch Bitcoin essentially become part of a gigantic momentum trade that exists where active traders will move from Bitcoin, but if gold does better, or silver, or prediction markets. I think prediction markets are in competition with Bitcoin right now. So it's very interesting to see that whole milieu change. I'm a big backer of blockchain as a technology, huge backer. I love it. I'm not such a big backer of Bitcoin and never had been. So it's interesting to see that whole discussion evolve, Ron.
Tyler, your final thoughts?
I think what I'm thinking about over the next few weeks, apart from the international threat of what's going on in the shores off the shores of Iran, I guess on the tariff thing, I don't know whether we've got less certainty or more certainty. I think we probably got a little less certainty, and the market doesn't really like uncertainty. On the other hand, I think the economy looks like it is ramping up to do pretty well, despite the numbers that came out this morning that were the inflation number was high, but then a week before last, there was an inflation number that came in maybe surprisingly low, and the last jobs report was better than expected. A lot of people are expecting that 2026 is going to be a pretty good year economically, and in the past few years, more people have been, well, I certainly have been, too cautious about how the market was going to perform. I'm not saying that means that this year I'm not cautious. I think there's probably more reason for caution now. But the economy looks like it's in a pretty good place. And so I'm more cheerful than fearful.
Susie.
Well, I'm going to be watching reaction to what happened today in Washington with the Supreme Court, but I'm going to be watching it from our allies' perspective. Does this give them more breathing room, less breathing room? Does it make more uncertainty? Does Europe continue to grow closer together and further apart from us? What about Canada? I think the Middle East situation is a wild card that is not to be underestimated, and that worries me a lot. So that's what I'm going to be watching. I'm trying to take a high view and watch international reaction. That's what concerns me the most.
That makes sense. This is a great inaugural edition of Old Money, as we like to call it.
Yes.
You know what it is, Ron?
What's
to me,
that?
sitting here looking at you three, it's 1999. That's the way.
And we know how that ended. Wait, you said it
Business Center. Ron, those of you who don't know, Ron and Sue were the anchors of Business Center.
Well, as Tyler was as well,
in 1990, Tyler too, and I was the reporter on the floor in 1999. So this is like a reunion here for us. It makes me smile to see these three faces.
It's family, though. That's what it is. I mean, people think that's cliche. They never believe it, but Ron and I had lunch 2 weeks ago. Ty and I talked. I mean,
and what I like about it is like the cumulative wisdom that we've acquired over the course of 40 years or so. Each doing this. And so
what's fun is that we're all really, and I hope it comes across, we generally like each other and are friends. And so it's like having a business conversation with your best friends. And that's a cool thing to be able to do,
It is.
I mentioned this earlier to Steve, Sue, this was 3 years prior to my getting to Financial News Network. I got there in 1984. In 1981, Sue, Bill Griffith, and some others were practicing in the parking lot of Financial News Network in Santa Monica, California, with fake cameras before they launched. And also the checks were bouncing at the same time. But but they got that off the ground in 1981.
And we're not only friends, but we've been through the wars together.
Yeah.
I got hired during the
some literally,
Yeah.
I got hired during the
good time.
Resolution
You know
Trust
what?
Corporation in
We've
1990.
been through really, really good times and really, really dark times. And that's why these friendships are so very important, and our ability to stay in touch. And we've seen each other's families grow up, and we've seen marriages and
babies.
I mean, it's so for those of you who don't know that may be listening that don't know the broadcast industry, it's not like that anywhere else. It is not.
We had an extraordinarily long run between two entities.
No, but you know what I mean. The relationships.
Yeah. No, but I mean, we all stayed together. I mean, it's kind of great. You don't see that in a lot of places.
Thank you, Sue, for reminding me of marriages plural.
Oh, sorry.
No, but you're right, Sue. Nobody lasts 35.
But you picked the right girl. You're good.
It was my first day.
Also, I love her.
Yeah.
First day at CNBC. My wife was an intern.
Yep.
Imagine that today. That would, I mean, it wasn't. We didn't start dating then, but I mean, still, it was a.
But to your point, Sue, that's why CNBC was such a special place. Nobody lasts 30 years, 35 years.
It just doesn't.
In one place. It just doesn't happen. And it did at CNBC. And it was part of the magic. It was part of the reasons I stayed. I just felt like of the family, and I felt close to them. Still do.
Right. I couldn't agree with you more, Bob. That's exactly right. You know, I had 2 chances to leave and go to other networks, and I didn't do it because I knew that there was no way that the atmosphere was going to be as collegial, as family-like. You know, it really is. It's an amazing place. Always has been. Hopefully, always will be. But you all look good, by the way.
Well, we
You
do
too,
this again.
everybody here.
Well,
Wow.
last time, I trust.
I've been following Art Cashin's dictum, which is when Plan A goes bad, add more booze to Plan B. Art Cashin taught me that
I
30
miss
years ago,
him.
and I follow his advice very carefully.
On that note,
My head.
Steve, we're going to give it back to you.
You know, I'll tell you, as the guy who's helping build Quasar Markets, CEO and founder here, I can tell you that this is solid gold, and I appreciate everybody coming today. It was really good, and I promise you, Bob, I promise you, Tyler and Sue and Ron, no AI could ever replace the 4 of you. You literally.
God bless you.
I tell you, you know, there's 90,000 people out there watching right now, and I'm gonna tell you that the sheer amount of love that's given back to you is just very high right now for all the moments in time in TV history that you have brought them through those times, like 9/11 and the 87 and those times. You were the ones who were there, right? And that's what built this family. And the Quasar Markets is doing the same thing, building that family run. I've had that chat. Bob, you and I had chatted not too long ago about it too. And I love this. I love this a lot. You know what? I believe the knowledge that the 4 of you have, this homecoming reunion, I want to keep it going because I think that so many of these new traders coming out, they just don't get it. You know, they are turning to the chat GPTs and the Claude, and so am I, and I'm building it. But at the same time, the institutional knowledge that the 4 of you have is just unreplaceable. And it's in a place where people really need that, especially now in these uncertain times. So from the bottom of my heart and all the years I've been watching you, thank you so much.
Thank you, Steve.
Thank you.
Thank
Hope
you.
to do it again.
Enjoyed it. Thank you, guys. Love you.
Take care, everybody. Thank you, Ron. Thank
Bye.
you,
Good to
Steve.
see everybody.
You too.
Good to see you too. Bye.
Wow, what an amazing special moment that we just had at Quasar Markets. That reunion, looks, folks, you just don't get that anywhere else. You know, decades and decades of willing to build this. That was solid gold for those who watch the Olympics. That was solid gold, and the partnerships that we have here at Quasar Markets is growing and getting bigger. And I want to put all that together and show the world what's really going on. And I really am very appreciative to that team there. But listen, I couldn't do this by myself. I had to partner with several people in order to make this happen. The 2 things I needed to do to make Quasar Markets happen was money and developers. And in order to do that, I needed to have a quality company that was supportive of what we were doing and who we are and what we're thinking about doing in the future, and what we built and what we are building further. So without further ado, I'm going to bring in the CEO and founder of Quasar Markets and the CEO and founder of Kiwi Tech. The reason that we're doing this, he's on location in Palm Beach. But my friend, Rakesh Gupta, how are you, my man? How are you, Rakesh? Rakesh, can you hear me? Rakesh is on the road right now, so I'm hoping he'll come back in and we'll get him in a second here. But you know, one of the things that I've said about the build of what we're building is how we build it, right? And I wanted to build it on new rails. I wanted to build it on GUI 3 and Web 3 and the next generation of technology. And in order to do that, I needed a team to do that. So Kiwi Tech was the company that I built, that I partnered with, I should say. And I'm going to show you a little bit about their company. Pull them up here a little bit. I'm going to pull up their website as well so you guys can see the company that we are actually using. Yep. And I don't know if he's coming in right now. Let's see if he's coming in. All right. And I also want to thank all of you out there. Man, you know,
the sheer number of people that are watching right now. 92,000 of you are now watching here. So I'm gonna present the screen here. I'm gonna share my screen real fast so everybody can see what we're doing here. And there you go, Kiwi Tech itself. This is the partnership that we have with Kiwi Tech. Oops. We're gonna pull up in a little bit here. Yeah. Oh, I see him coming in. Hold on a second. I see him coming in back in now. Rakesh Gupta, how are you, my man?
Doing great. Sorry about that. I had a little bit of an audio issue. I'm on the road.
That's okay. We know how it is. You know, Rakesh. Yes, of course I do. Yes. Can you hear me? Hopefully you can hear me. You know, Rakesh, one of the thing that, I said at the very beginning of this was I was at, it was the Bitcoin conference in Miami, and I said I was hungry and I wanted to go eat, and we all went to have a lunch, and I gave you the plan for Quasar Markets, my thought process, and you didn't even for 1 second, hesitate. You want to be a part of what we're doing here today. So here we are, 92,000 people watching us live. Rakesh, how do you feel like we're doing so far, my man?
Incredible. It's hard to believe that was 3 years ago, and so much has happened since then.
Yeah, and Rakesh, talk to us a little bit about, I'm going to take you back a little bit.
Yes.
And explain to me your thought process about Kiwi Tech. Why you got started in Kiwi Tech a long time ago. You've been doing this a long time, and you've seen, God bless your heart, because the one thing you've been saying is you helped a lot of startups get started in the world and that would not have had that chance, and that's because of you. And I'm gonna skip out here so you can talk about Kiwi Tech and what you guys have built and what you're doing.
Thank you. I appreciate that. So it kind of was built on the prior experience we had in our prior company. We saw an opportunity to create greater alignment between investors and startups. And in the Kiwi Tech model, what we've done is we do in-kind development for startups. We give them a discount on the development in exchange for getting some equity. That creates a great deal of alignment between us and the startup entrepreneur. They're building their product, we're helping them build it, and we're getting part of the equity rather than trying to make a profit on it when we're building it. And that's the basis of the model. It's a venture accelerator model. In that way, we've invested in hundreds of startups using this in-kind methodology. And the second thing that we've done is we've started buying software solutions businesses. Now we've bought 3 services companies in Kiwi Tech. We bought 8 in our prior company. Again, in what we're doing now, we're creating a great deal of alignment. When we buy a company, we buy part of the company, we keep the sellers in, they continue to scale the company with us to get to the next exit. So in everything that we do, we're trying to create greater alignment. So that's I guess in a nutshell, what we're doing at Kiwi Tech.
Yeah, and I think we just saw from CNBC, the former team at CNBC that started it. One of the things that they said there was that they thought of it as a family, and I think one of the things that you and I talk about all the time is your sister and your brother. You all got involved with me. We all know each other's families. We've all had this is not, you're not just that guy who says, hey, here's a little bit of money and here's my company and go invest. You actually roll your sleeves up, shall we say, and you get involved in some of the actions. I call people don't know. I call you. I think I talk to you more than I talk to my own wife sometimes.
Yeah, I mean, we literally are a family. My brother, sister, and I had started our first company together, and then Govinder joined us as a co-founder, and he's like a brother. And then there's an extended family. Steve, you, and others who we work with. It really does feel like an extended family. I was really interested to hear the CNBC team talk about that. I think that really gels very well with growing a company, understanding each other, caring about the other person in terms of how they're doing, and it just creates a much better situation where there's that collegial attitude to building a company.
One of the things I love about you is you just pick up the phone and to call me. It's not even our business here. And you and I, we don't ever stop. I think the two of us, you're in Palm Beach and I'm all over you. You live in 3 different places and we just don't stop because we love what we do. But one of the things about Kiwi Tech is you don't just love what you do, but you love the people that you're involved with and what it is. You don't just go, oh, is this going to make it? I don't know if it's going to make it. You actually get involved in the companies. You like things, you like technology, And so many people look at us and go, oh, well, I don't know. Is this going to make it? Is this important? You just go, let's do this thing, right?
Right. Yeah. That's part of what we want to do, is create that alignment that makes us want to get involved, be committed to what's happening in all levels of our team. People are involved with the companies.
Yeah. Okay. But it's not all roses, Rakesh. I think you mentioned to me the other day, welcome to entrepreneurship is the word that you used to me. Talk to us a little bit about sometimes with the bad stuff. There's always a bad thing, right? There's always something that's just wrong, right? Or something went wrong, or the money, or the people, or just something. Give us an example of how you overcame that problem at Kiwi Tech.
So, yeah, there are always challenges. You look at the startup market, it's been very challenged over the last few years. Startups are having a lot of trouble raising angel funding and venture funding. Steve, you're kind of an exception. Quasar Markets has been rolling along in terms of raising money. But in general, we're finding startups have a lot of trouble since March of 2023, when Silicon Valley Bank melted down, Republic Bank melted down. That really created disruption in startup funding and venture funding in general. So that's something that has been a challenge, and that's part of why we added on, the private equity model, and we run the venture model in a way. We're now gotten to the point where we run it at a break-even point, where we are getting equity, but we're not spending money getting that equity. So that's part of the pivot that we did in that, and then we also added on cash flow businesses in the form of our private equity model. So there definitely are points at which you pivot, and there can be market challenges, and I think having a good team and being able to look at it and say, okay, what do we need to do to pivot, is a very key part of being successful.
I think that so many people have said, Steve, you got to do this for yourself. You got to be in business, and they don't always see the day in and day out. And Rakesh, you've seen startups from the very beginning. What makes a successful person say than opposed to someone? It's not about luck, right? Luck is great, but what is it that you say one thing to me that I've always admired, and I still remember this today, Steve. I don't invest in businesses. I invest in people. So what are those qualities that you look at, and what is it that you see in their heart? What is it that you look for that makes you go, I'm pulling the decision, I'm going to invest in this guy or this girl? What is it that you like about it?
So generally with a startup, what I find is it's better to invest in a grade A person and maybe a grade B idea. If you can get grade A both, that's great. But the person will figure out how to pivot. The CEO, the founding team, they'll figure out how to pivot, how to adjust to market circumstances, how to tweak their idea. So really it's about that person. Of course, you want intelligence, but I think one of the most important qualities is just passion and perseverance. So having some passion about what you do, and Quasar Markets is a perfect example of that. You're very passionate about building that financial platform, and you have the perseverance. The roadblocks that come up, and you're going to push through that. So it really, I think those are the main traits that we look for in a CEO or a founding team, to be able to push through and build a business. And there are always going to be challenges. And you hear a lot of these stories about this overnight success, but it doesn't happen that way. There are a lot of roadblocks and a lot of things that happen along the way that people overcome to become a so-called overnight success.
And what were some of the roadblocks in your own personal life that you overcame that you can tell other people, hey, here's how to get over that roadblock?
Well, I think one thing that we realized is that having an alignment between us and our investors, and then having alignment between us and the people that we're investing in, the entrepreneurs who are doing startups and the companies that we're buying, we just found that that's really important, not to say anything about the past, but, if just looking forward, it's just really important to have that alignment. It just smooths everything over, and you are able to collaborate better in building.
Yeah, and Rakesh, your fingers are literally on the button of the future. And when I hear the words AI and developers, and of course I'm in the AI business and as well in developer business, or yourself, what is your forethoughts about the future? Are you excited about it? Are you nervous about it? Talk to me about the future and Kiwi Tech's future too as well.
I would say I'm excited and I'm nervous, because you don't know exactly what the future is going to bring, but I feel that the exciting part of it is that with these tools, we can do so much more, with AI tools. It's going to make developing code is going to become cheap and very easy to do. But then there are all the other things around developing code, such as, interacting with a person who wants to build a product and architecting it. And so there are other parts of this that will remain, but there are definitely going to be fundamental changes in how the, software development process works. And the writing of code itself will become easier and potentially even trivial. And it's going to be more about like figuring out what you want to build and building that. And then, of course, when you have large platforms like cybersecurity platforms and other platforms like that, data intelligence platforms, in that there's a lot of architecting and implementing a solution involved, and it's less about writing a lot of code. And so I think those are really interesting areas that will continue to develop. But I think AI is going to be very additive, and it's going to really benefit us in all different areas of our lives. I've heard some very positive outlooks with AI well controlled in terms of how it can benefit, the humankind.
Right. And one of the cool things about you is it's not just fintech on your side. Is you've got other things like healthcare and education. You really got the gamut of development, right? You can pretty much handle anything, right? Even the future stuff is coming up.
Right. Yeah, we're working across verticals. Anything software. We typically don't work on hardware as much, but anything software we work on. So we work across verticals: fintech, ed tech, health tech. Yeah, across those different verticals. So we get to see a lot of ideas. And that's part of the fun of it. You get to see really interesting new ideas. We're looking at them at the early stage. Success rate isn't that high at the early stage, but you're getting very innovative ideas. It's before it's developed and become more obvious to everybody.
Well, obviously, from my heart to yours, you already know you're my buddy. So thank you for believing in Quasar Markets. And here we are with 94,000 people watching you right now, Rakesh, live. I mean,
amazing.
Talking about the future.
Excellent.
All right, Rakesh, you got one chance, one opportunity in front of all these people. What is it that you love about BigBeat the most?
I mean, Steve, you have a big personality and you're going to build something big. And I'm along for the ride. Love you and looking forward to seeing you make it happen.
We will make it happen, my man. Thank you so much for being a part of this and making that dream come true, because we're almost here, right? So it's super good.
Yep.
All right. Well, don't get too
Thank
much
you.
trouble in Palm Beach, Rakesh. Be safe out there and come back, and we'll see you. We'll see you on the flip side, my man. All right. I'll let you go.
Sounds good. Thank you, Steve. Appreciate it.
That's part of exactly what we need in life is, and people always ask me in my own life, what is it that you need? What do you need in order to succeed? And I can tell you all kinds of things, right? But you need friendships. You need those partners. No, it's not luck. Sorry, I don't believe in luck and hope. It's loyalty. It's just. But you heard from Sue, you heard from Tyler, you heard from Rakesh, you heard from Bob, you heard from Ron. Family, right? It's about creating something for the future together. An ecosystem. And that's what Quasar Markets has been about, is building that ecosystem. And I'm going to tell you, the guy I have coming up next has been on the ride the whole way, and that's Alan Ellman. I'm going to bring him in. Alan Ellman, the blue-collar investor himself. I mean, you, Alan, you have been with me since the beginning. You have believed in me, and here we are with 95,000 people watching you right now. Here we are. We built this, right, Alan?
Steve, from day one, when you came to me and you told me about your idea, right away from the very get-go, it just felt right to me. And now I knew I wanted to be part of it. 3 years later, 94,000 viewers? Are you kidding me? Amazing.
Thanks, man. And for those of you who don't know, Alan here, just amazing options guy. You look at options, and we just had Scott Bauer on. These are the people that actually do the stuff for life, right? You guys, and that's what we wanted to do, Alan, was we want to bring the right people, the adults in the room, back to the forefront. And not just because you have a Twitter or just because you have a huge following does not make you the best trader out there. I've seen so many TikToks and Instagrams I want to throw up sometimes because they don't really know what's really going on. And they think of options as just, oh, well, naked puts and naked calls. There's so many more strategies around it. And you left
being a dentist so that you could teach other people about how to. My God, if there's not more of a family feel to this or who you are, I don't know what is. And you know, you always say, don't call me doctor, call me Alan. As a friend, I get that. But there's a reason, because you had that passion and that ability to go get that doctor from being a dentist. But you did it, and you did it in two different levels, being on the healthcare side and on the trading side. You won both ways. So I love this. Alan, talk us. Let's go back. I thought it's all day today. Let's go back to the very beginning. How did you? I want all the way back. How did you become a dentist first, and then how did you switch over to be in the options market? I love this.
Well, you know, Steve, as far back as I could remember, I always wanted to be a dentist. And I remember in 6th grade writing to the American Dental Association how to become a dentist, what I needed to do, what classes I needed. So that goes back as far as I can really remember. And then I had the good fortune of going to a good high school, a good college, and I got into New York University Dental School. I graduated there and I opened a dental practice in New York where I had a staff of 15. So I was really had a great gig in dentistry, but I started investing in the mid 90s. I realized at some point in time, I would need a passive form of income. I was doing great in dentistry, but I knew I would need a passive form of income. And I really didn't have any clue as to how to invest. So I said, oh, by the way, Steve, I knew that I didn't want to just hand my money over to somebody to invest for me. So I started teaching myself how to invest in the stock market, which led quickly to options, and also in the real estate market. So actually, my first presentation was not options or stocks, it was real estate. I was invited to speak before a large real estate investment club regarding some deals I was executing in Austin, Texas. But during that presentation, one sentence came out of my mouth that was about to change everything for me. I said that I purchased my first investment property with the profits I earned from selling stock options. Well, after that, everyone was asking me about options, not real estate. Eventually, that led to me creating some seminars. And then in 2007, my first book, Cashing In on Covered Calls, which went right to #1 on Amazon on stock options. And then everything changed. I started getting invited to speak all over the country on stock options. And in 2011, I realized, you know what? I can't do both anymore. I was doing a lot of dentistry. I was doing a lot of speaking. And I gave my partner 2 years notice that I'd be leaving in 2013, which is the year that I hung up my dental drill, no more crowns, no more root canals. And I dedicated everything to the blue collar investor, which started in 2007. So this is our 19th year in existence. So in a couple of sentences, that's the metamorphosis of going from dentistry into stock options, education, and stock screening. Steve, I think
I think one of the things that people need to understand about you is that you just went at it. You just said, you know what? I know how to do this. I love that. It's my philosophy too. And wow, folks, 95,000 people are watching. If you're out there right now, hit the like button, subscribe. I'm going to show you Alan's website here for the blue collar investor. But you know, wow, let's get to 100,000, folks. We're almost there. We're almost getting the numbers, and we did it before I even said we would do it. So I'm loving it. There's a lot of love for Quasar Markets today. I'm super excited. And Alan, one of the things that I kept hearing, and I heard it from Rakesh, I heard it from the old CNBC team, the family, the love that they all had for each other and the beliefs that they all had of each other. You've got your own family involved in what you got going on too, right? Barry's part of it. You got them all going in. So talk us a little bit about blue collar investor, what you're doing now. You and I are on the show weekly. You give me the PDS and I get the show. I mean, you get to do the thing. It's so cool to see people learning the right way and then coming to your site. And we'll show that here in a second. But Alan, tell me a little bit about blue collar investor. Like you got it going and look at where it's at now.
Yeah, Steve, my demographic when I started this was retail investors. I wanted to be able to educate retail investors, given everything I learned over 30 years, 10 to 20,000 option contracts I estimated I've sold over that time frame, with a few thousand more trade adjustments. And I wanted to give that to the retail investor. Now, we also have a lot of professionals that follow my work. But my goal initially was to teach retail investors how to generate income in a low risk manner. I am on the sell side of options. So my two go-to strategies are covered call writing and selling cash secured puts. Now, a lot of people are afraid of options. They think it's too risky. There are option strategies that are quite risky, but not these two. These are low risk strategies. Now, Steve, I'm underlining the words low risk. They are not no risk strategies. So we teach not only what stocks and exchange traded funds to select, and not only what options to select, but also how to manage your trades. And this is based on the 30 years that I've been trading options. And so we teach every aspect of generating cash flow in the lowest risk possible. And if a trade turns against you, you will know what to do. You won't be like a deer in headlights saying, I better call Alan or I better call Steve. What should I do now? You will know initially, if the trade turns against you, I'm going to do this. And if the trade turns way better than you anticipated, I'm going to do that. And so we do that. Plus, we have a stock screening service, which saves our members just a ton of time, because every week we provide these 4 different reports to our members. What I do is just print it out. It goes on my computer desk until the next one comes out the following week. So it does save quite a bit of time.
And you save time because you also have that calculator, the BCI calculator, blue collar investor calculator. That you don't need AI to get that. I mean, you've got the calculator, you've got it all for you, and I love that you teach that. All right, let's get to it. Those of you who are out there right now, there are 96,000 of you right now. Click on that button right now, bluecollarinvestor.com. The button's right there. Just click on the number. It's so simple. Just click on it. Give him some love out there. And listen, I know Alan personally. He will answer all your questions. And he will be able to come back to you. But I'm gonna bring up his website for everybody here, the Blue Collar Investor. I'm gonna take this site off so I can get out of your way, and you can talk about Blue Collar Investor here, my man.
Okay, well, I don't know if I could. I created a bit of a PowerPoint. I don't know if Andrew can put it up, but if not, I could just basically talk a little bit about what we do. Again, our go-to strategy, Steve, are covered call writing. And covered call writing is where you buy a stock and then sell an option. So what you're doing is you're selling someone the right, but not the obligation, to buy your shares at a price that you determine by a date that you determine. What Steve is showing you now are some of the free resources we offer on our site. And this one here is our covered call video series. It's an 8-part video tutorial, kind of an overview on covered call writing. And there's another one there for selling cash secured puts, which what you're doing is you're selling someone the right to sell their shares to you, or for you to buy shares at a discounted price. So again, I'm on the sell side of options, and these are low risk option strategies. As a matter of fact, Steve, every broker I know and our government allows you to use these strategies in self-directed IRAs. And since you're generating weekly or monthly cash flow, you won't have any tax issues until you start cashing in later on, unless, of course, you have a Roth IRA, in which case you'll never pay taxes. So in addition to that, we also talk about various related strategies. What you're looking at now are some of our packages we have available. By the way, in the middle of the screenshot, Steve, is the calculator that you mentioned before, the trade management calculator, which is at my pride and joy, BCI trade management calculator, which took us 1.5 years to develop and has over 2,400 formulas in it. So if you're using covered calls or cash secured puts, this spreadsheet will walk you through the entire process. Trade entries, initial calculations, trade adjustments, because there's over 20 different exit strategies inherent in the spreadsheet, post-adjusted results, and there's also a trade journal on the spreadsheet to make various notations, and that becomes a great learning tool. So we also do related strategies to covered calls, like the portfolio overriding, which I believe is the one that most Quasar members would be interested in, because if you have a portfolio now of stocks, and I'm sure many of the viewers right now do have that, and you're generating share appreciation, puts a smile on your face, many of them dividend income, another smile on your face. But did you know you could generate a third income stream by writing covered calls and generating another income stream using these very same stocks that you've owned for many, many years. That's portfolio overwriting. There are other strategies, Steve, like the collar, where you add a protective put to the covered call trade to protect against catastrophic share loss. And finally, a strategy that some of your members may have heard of, the poor man's covered call. And that's where instead of buying a stock and selling an option against that stock, you buy a deep in the money, long dated option called Leaps options and write short dated call options against that. And that's just a less expensive way of getting into a covered call trade. However, there are a lot of moving parts to the poor man's covered call, and you got to educate yourself before you decide to use it and make a decision that this is the right strategy for you and your family.
Yeah, you know, Alan, it's interesting because one of my rules of trading is that options aren't scary. And, you know, 20 years ago, the only people trading options were you and me, right? I mean, most people didn't even understand options. And when you boiled it down, it was 100 shares per, and like, I got it. I understood it. But I think the technology has moved so far and so fast that people are now catching on to how options are, but they don't understand strategies. And 9 times out of 10, they don't know how to put the right strategies on with the stocks they are already trading. And that's one of the things that you do. Your calculator, your training courses, your live course, even your beginning helps people start that process of getting the right types of strategies at the right time, at the right types of companies they're already investing in, right?
Yeah, well, you know, for people that are interested in options, and I'm talking to all 94,000 people out there right now, if you're going to start with options, these are the strategies you should start with. Start with covered call writing, then move on to cash secured puts. Now, I'm not saying that because those are my go-to strategies. I'm saying that because I truly believe that this is the starting point. Now, you may decide after that to go on to more complicated multi-leg option strategies. That's possible. And you may also feel, well, those are better than the two that I'm starting you with. That's what I did. I started with these two strategies and then moved up, and then I ended up coming back because this is where I've had the most success. There's no right or wrong. But let me just say this to your audience. Before you invest even 1 penny of your hard-earned money into options, you must master these 3 skill sets. Number 1, what stock or ETF is going to be my underlying security, whether you're selling calls or puts? Number 2, what option am I going to sell? What strike price am I going to use? Am I going to go in the money or out of the money? That's the second skill set. The third skill set is once I enter my trade, how do I manage it if the trade turns against me or ends up way better than I anticipated? Can I make more money than a maximum return? And I'm here to tell you, if you master exit strategies, you can actually make more money than a maximum return. And you must have all these 3 skill sets.
Yeah, you know, I always say the same thing. You're absolutely right. Don't get in a trade unless you actually know how to get out of the trade. I mean, you need to know your entry and your exit before you even get into the damn thing. I mean, you can really get hurt sometimes. And that's why I always say, even if you're trading like I do day trading or when I trade other things, I always know where I want to get out. I mean, it's always important to me to understand why I'm doing what I'm doing. Because if I can't understand it, Alan, then what am I doing? There's so many people just, well, why did I buy that? Or why did I put that strategy? And they can't answer the question. Well, no wonder you lost money, right? And that's why 80% of traders lose money. And that's why we're building Quasar markets with companies partnered with people like yourself at the Blue Investor. My heart, Alan. I'm really thankful for your friendship and what we're building together and what we're doing. It is incredible what we built. And you know, there were a lot of people who said we couldn't do it.
Yep. And you know what? I just love being part of this, Steve. And as they say in the business, mazel tov.
Mazel tov.
Great job.
Thank you, sir. Well, for those of you, one last time, I'm going to put it up there. All of you guys, listen, click on the button right now, thebluecollarinvestor.com. Make sure you give him some love out there. I know you're giving me and Quasar Market and Andrew behind the scene. Andrew Johnson is happy too. We're about to break 99,000 people watching right now. Let's get to 100. Okay, let's get to 100,000. Hit that like button, subscribe, retweet us out there. Give us some love. Hey, we're here. You can actually talk to us. We're here too as well. But we're about to break 100,000 here, and I'm excited about the next person coming up too as well, because part of life. But for right now, Alan, thank you so much for being on the show here. And man, this is something else. I love you to death, man. And I'll see you on the flip side.
Thanks, Steve. See you next week.
Wow. I say it all the time, this whole business has been built on love and friendship and people and wanting to do what's good for people, right? And sometimes that's very hard. Business is not easy. A lot of people, and my wife always said the same thing. Hey, you know what? You know why you're not having problems? Because you've already done it. Well, it's great. But here's the thing. I can't do it without great partnerships. I can't do it without you. I cannot do it without your likes and subscribes and your friendships and your fun. And I can't do it without the partners that we have. And the psychology behind that is very hard. Let me tell you, being an owner of a company is not easy, folks. It's just not. It's not. But you know what is having people around you that are. And my next guest is not a guest. She's a friend, Agnieszka Wood, the head coach. Social media says psychology isn't the key. And I'm going to tell you right now, psychology is the key to trading. Am I right?
Absolutely. I think psychology is the key to everything. Hi, Steve. It's really so good to be here. Thank you so much for inviting me. We have been, I have been with you guys since over a year now. And it has been a real cool journey to really see you grow and going through all the obstacles that you have faced. So I'm very happy.
We're calling it the roller coaster, but here we are. And when I'm asked all the time about building the business, and I just had Rakesh on, my business partner, and we just had the CNBC team on, and I've had we've had over 40 interviews today. It's all about psychology, right? It's that mindset that you have, and mindsets of traders is always another thing. So I'm gonna let you go, Agnieszka. Just have fun, tell the people what you do, who you are, and I'll bring your website up for you if you don't. If you can also show your website too as well. But ladies and gentlemen, we're at 99,300 people are watching right now. Let's get over that 100,000. I want to do it while Agnieszka's on the show right now. I love it, folks. I love this. All right, I'm gonna let you go, Agnieszka. I'll see.
Awesome.
Tell them about.
So I'm actually gonna, before I tell you guys who I am, I'm gonna start with what Steven was talking about. Going through all these obstacles and facing challenges on your way. This is when you have business, when you just have life is happening, and it's just not always easy to get over those obstacles without pushing. And that's like the biggest issue in trading, that especially like when you are someone who has been successful in your life, you are probably used to not just working hard, but really pushing and proving yourself, showing to yourself and maybe even others that you can do it. And when challenges come on your way, the very first kind of a natural reaction to it is just, roll up our sleeves and let's do it. I can fix it. I can do it. Now, in trading, this works totally different, because doing that, pushing and forcing, makes you go against the power of the market, makes you go against the trend and fighting. It seems like you're fighting the market, but a lot of times you're just fighting yourself. So this is what, when you encounter all the challenges, whether it's a market or your life, there is this part of you that resists change. And this is where the most challenges are happening, because when you choose trading, you have to also say yes to growth, because market will be teaching you lessons every single day. And if you are not willing to take those lessons, and I know how hard it is to take the lesson from a loss, because when you take a loss, especially if it's a big loss, you just don't want to think about it. You want to put it aside or behind you and just move on, right? Ideally, quickly jump into another trade and make your money back. And that resistance to change, which is growth, is stopping you from actually moving forward, because you start pushing and you push and push against that resistance, and you push your success further away from you. And that's what I'm helping traders with. So I am Agnieszka Wood, and I am a trading mindset coach. I'm also a trader. I have been in the markets for 15 years, and I have gone through every possible mistake and challenge that every trader goes through. And I have been that person who thought trading is going to be really easy for me because I have a lot of success in my private life. And guess what? Trading taught me the lesson. Trading humbled me completely.
All right, live here, Nishka. We did it. 100,000 people are watching us right now live on the show.
That's awesome.
Yeah, you know, and what's cool about it is this is exactly what I'm talking about, right? Is this knowledge that I want to bring to the world, the professionals. Just because somebody has a large following does not make them smart. It just makes them a good marketing. And people like yourself that have got this thing down and understand it, right? And understand the psychology, and you're bringing that knowledge to people. That right there is worth its weight in gold, literally. And people should. I mean, let's do that. I mean, talk to us a little bit about your philosophy of how a trader should be in life, and what gets them going in the morning. But 100,000 here live on 100, 200
awesome.
more have showed up.
Yay!
So here we go.
Yeah, so, you know, I was talking about resistance, and basically my philosophy is less is more and go with the flow. And I know it sounds like, oh, is that it? But it's easier said than done, because we usually choose the difficult way, and choosing the easy way makes us feel like we are lazy. So we are choosing usually the way of most resistance, while in trading, you should always try to go with the flow and choose the least resistance. So the moment that you feel you are pushing and that things become difficult, you should actually step back and start looking, what am I doing that makes it difficult? Because we are standing in our way most of the time. So when things become difficult, it's really a moment of reflection and looking back at yourself and thinking, okay, how am I making this difficult for myself? And if you guys want to know more about this and really start looking at your relationship with how do you approach the market, how is your relationship with pressure, which is immense in trading, and some traders don't even realize how much pressure it's being exercised on them from the market. I will be giving a free masterclass on Wednesday, so next week already, February 25th. And you can register. It's completely free, and I will be teaching the 4 steps process that I have been teaching now for over 6 years to traders to help them to get consistent, confident, and calm in trading and getting on the path to consistent profits. And isn't that what every single trader wants, right? So yes, you can go to my website, and I see Steve, thank you for showing my website. If you click on the top bar, the green bar, my website is a head coach. But if you want to register for the trading mindset class, you can just go to trading mindset masterclass or click on that green bar at the top of my website, and that will bring you to the registration page. So I'm looking forward to see you there. The class is filling up pretty quickly. Unfortunately, it is limited, to make sure that you grab your spot. Even if you cannot join, only the registered people will receive the recording. So I would love to have you there. If you are struggling in trading, please make your life easier. Stop thinking, I have to figure it out myself, because it's very difficult to see your own blind spots. It took me a while to do it, and I was able only do it myself because I have had the background of a coach of neuro-linguistic programming, and I started spotting the patterns, subconscious patterns that were playing at the background, pushing me into behaviors that have been there forever. And once you start looking at those patterns and see how you actually sabotage your trading, it's absolutely fascinating. And even though it might seem like some of the traders I work with struggled for years. And if you see how quickly you can switch and get out of those patterns, or at least see them, and then start getting out of it and creating new habits, that's you will see such a difference. It will be really night and day, and your life will become much easier. So not just in trading, but in general. So I would love to see you there.
I wish I had an Agnieszka when I first started trading, because I'll tell you, my first trades, I lost $10,000 in the market. So hell, I mean, that was back in 19. Not it. So I wish I had a psychologist back then to help, because when people ask me all the time, Agnieszka, my son or daughter wants to get into markets, and they're in fintech, or they're in finance, or they're in whatever. What should I learn? And I always have the same thing: psychology, because psychology is still what makes the market become the market. And when I started out, man, there was nobody tell me how to hey, dude, you gotta chill out. You gotta get rid of the emotional side of it, and think about it from a perspective of I want to make money, but here's how I'm going to do it. And I tell you, doing this, so many people give up, Agnieszka, in trading, and they need to learn how to be perpetual and get up every morning, and that feeling of I'm going to do it every single day, because that's what makes a good trader, right?
Yes, but that's the part that becomes really difficult, because we never rise to the level of our goals. We always fall back into the level of the structure that is supporting you. So if you have some habits, and most traders have been trading for a long while and hoping that the time will solve their issue, they have learned a lot of bad habits, and that's their structure. So they will always fall back into those old habits. And that's why it's so difficult to really get started if you don't do the work at the structural level, at the foundational level. And most traders, they take an Advil pill. They think that when they do few breaths, this whole problem will go away, or they say, oh, I'm just going to go to the gym. That's just treating the symptoms. Going to the gym is great. It helps you with cortisol, with the stress hormone, but it's not taking the issue away. So if you keep taking the Advil pill, it will mess up your stomach eventually. So this is not a long-term solution. So and that's what I work.
When I went to go work at the White House, I had a bottle of Maalox and you name it. I went across the street to the CVS. That was Walgreens back then. I think it was Walgreens. And I said, when this bottle of aspirin is gone, I'm out of here too. Agnieszka Wood, I just want to tell you so much. Thank you for being a part of what we're doing. Quasar Markets, the love
honor.
that you have given me and this company and what we're doing is right back at you. And folks, I'll do it one more time. Be a head coach. Click on the button right there and do that. And go talk to Agnieszka. I know her personally. She will literally reach back out to you. She'll answer your questions. And I know I got a lot of questions, so I love it.
Thank you so much, Stephen. And thank you everyone for being part of this amazing day. I look forward to seeing you at the class. Please come, even if you say, you know what, I'm already I just started trading. It doesn't matter. Even though you just started, it's maybe a good time to actually start thinking about what it takes to be a consistent trader, so that you don't even build those habits that are not good for you, right? So I look forward to seeing you there. Thank you so much, Stephen, for having me. And I love being part of this fantastic company. Thank you so much. Thank
you so much, Agnieszka. I appreciate that a lot. All right, folks. Well, I always say that the psychology side of things is always important. But when you are trading, it's always also important to have some of the smartest and the brightest people in the business in front of you. And nobody's smarter than Bloomberg. Those guys are awesome. They have a great team. And I'm going to bring the next one on, which is my favorite love, is commodities and futures. So, Mike McGlone, how are you, man?
I'm good, Stephen. Hello, and happy Friday evening to everyone, and happy hour time very soon. And thank you for having me on your show. It's an honor to be able to play show and tell and to banter with you.
One of the things you said to me is man, I got to be on Steve's show. I got to be, I'm save this time for me. And I said, oh, hell yes. Mike, right now, there's 102,000 people watching right now. So you've got it's on you. I'm gonna let you do it. But Mike, let's go from the very beginning. Talk about how you got started in trading and your journey to our love as Bloomberg as well. Talk to us a little bit about that, and then let's get into the commodities, and you can add your charts, and let's have some fun today. But I'm gonna let you go. Have fun, Mike. Tell us a little bit about yourself.
Well, I got in the business. It started with a snowmobile accident. My brother had an issue. This was back in, I forget, it was like 84. And he couldn't go back to college, so he had to take a break and got a job in the Board of Trade. Long story short, I got out of college. I'm like, can you get me a job? I didn't want to be at a desk. So started at the Chicago Board of Trade in 1988, got to New York in 93 by making a few good calls. And long story short, I've been with Bloomberg for 10 years and Miami the last 5 years. So as a commodity strategist, it's a fun job, and partly because I get to talk to people like you and just talk about markets, give a completely unbiased view, and try to put all that wisdom and experience and try to show I got some ideas of where things are going.
Yeah, and you know what's cool about it is you don't actually have the positions on. You're actually giving direct knowledge. I mean, the amount of knowledge that you have, like it's like spitting out diamonds. I mean, you really have been you're just a super smart guy, and you really give back that knowledge, and I really enjoyed that a lot. Mike, what is the best part about your job, though, that you like? Not what we think of it, but what do you like about your job?
Oh, this is it right here. The hardest part is doing the research and the work, and I don't deny it. Like, I've been in Miami for 5 years, and I have not made the time to learn Spanish because it's too important to me to find out what the next thing I need to know about crude oil or gold or Bitcoin is. So to me, it's a 24/7 job, but it's not a job. It compels you. I just want to know everything about everything. I need to know about what I'm supposed to know. So that means podcasts and things 24/7. But it's great. It's just, it's good to be addicted to learning in markets. The key thing that benefits me, I think, and with being able to extol some of this to our, people, and certainly like this, because number one customer is Bloomberg. And I do love when people criticize some of my work outside of Bloomberg. I'm like, well, you got to get in line because Bloomberg clients are first. They pay for me. But the bottom line is, you pointed out, everything I do, I'm an ex-trader. I used to have hair. It's good that Bloomberg, we have a no trading policy, no options, which was a killer for me initially, but it was great. I did my fair share of that. 30-day minimum. Everything has to be pre-cleared. And make a long story short, I was getting really bulled up in Bitcoin 2019, 18, 19, and I had to pre-clear everything. I didn't buy a lot, wasn't allowed to, but I had to test the system. So I opened up a bunch of wallets. Everything was pre-cleared. And then at some point they said I had to sell my Bitcoin because of the conflict of interest. I'm like, okay. So I did that, but they allowed me to buy MicroStrategy. I held that for I don't know how long, gave me a 10X. And that was just by luck because that was the only thing I was allowed to buy. That was, it was at a discount at the time. But that's the key way that things worked on my space is I will talk about some positions somewhat. I don't give investment advice, but I've never been told by any compliance officer I can't say overweight treasuries. And I'm saying overweight treasuries. And I'm willing to take that risk because we have stock market volatility, the lowest on 180-day basis, lowest in 8 years. Gosh, that's great. It's got to stay there or lower. And we stock market valuation is about the highest in 100 years by some measures. Cryptos are collapsing. Precious metal volatility is breaking out. That volatility is going to trickle over the stock market. I think it's going to be this year. And I think the best thing to focus on this year is not losing money and look for opportunities. And so far, the opportunities I've seen so far this year is buying those T-bonds when they got around 5%. So far, there was the high for the year is 496. And selling a little Bitcoin around 90, selling a little copper above 6, and a little silver above 100. Those I look at as prudent shorts because first of all, for them to go, all those things to go higher, or bond yields to go higher, you need the stock market to go up. So that's and my point is, it's somewhat prudent because if it goes down 10%, which we're way overdue for, most of those markets will drop 20% or more, and Bitcoin's leading the way. So that's my macro view. That's my main strategy. And my key point is stop me out. Make at least Bitcoin stay above 74,000.
Yeah. And so, Mike, you and I have been talking about futures, and we talked about all kinds of fun things. And let's get down to the basics of trading. We just had Agnieszka on here as well. And what separates the wheat from the chaff when it comes to good investors or good traders? there's 104,000 people watching right now. And what's the best advice that you can give as a person who's not trading right now? You're sitting in the big desk with Bloomberg, with the awesome terminal, all the data in the world. What is the thing that you would tell investors starting out or investing now that may be having issues? What would you tell them right now?
Looks like we have a little delay here. Can you hear me now? I'm closing some apps.
Again, we'll go back. That's okay.
Yeah, I'm back
now.
Back I'm just closing off a few apps. I think we had a delay there. I got the question. Yeah, so to me, the most important thing is Alicia. Can you pronounce her name again for me?
Agnieszka Wood, yeah.
Agnieszka. Well, discipline of the trade. Never get emotional about a number on the screen. Use discipline levels to get in and out. Define your risk. This is all stuff that's easy to say, much harder to do. And I try to do that as a strategist. Like I already defined a few levels this year. I thought were disciplined, prudent shorts. And I'm just following up on that. Bitcoin above 90, got lucky. Bitcoin below 64, first spot to cover the short and look to reset. That's just prudent stuff. That one got lucky. I'm due to get, but the key thing is I've been hot. I'm due to get my face ripped off. And that's the key thing traders always have to remember is understand your streaks, understand the discipline. And here's a key mistake I really sensed a lot in crypto people last year is they're way too emotional about the profits and the greed. And that's part of what really turned me bearish, particularly the big taunting from Michael Saylor and things like that, which really turned me initially bearish on strategy. And once that went down, to me, the dominoes are tumbling on the back of the leverage of strategy. The bottom line is the discipline. And when you feel yourself getting emotional about a position, a lot of the best traders, I say, just get out and try to reset from better levels. And that's my advice for this year is coming in this year flat, I think is the best way to be and looking to be responsive. I already mentioned a few levels to be responsive to. But the only thing I've seen worthy of buying has been T-bonds on that little pop in their 5% in treasury yield. As far as risk assets, the discipline of buying a risk asset, my thought is when you have NASDAQ volatility at 15%, that's the lowest in 8 years, you got to at least wait for that to go up before you consider buying any risk assets, and except for a trade. The trade is define your risk, define your resistance. And I look at like some people might have bought Bitcoin around 64. And I think, well, 74, 72 is a decent bounce.
Yeah. And, I have to say that I actually read the book that you recommended last week and
really?
About time and the value of time. Yeah, I did. That's what I do. I mean, look,
man, you're an avid reader.
Thanks. What's interesting is I want to hire people and be around people and enjoy people that are smarter than me because that makes me a better trader, right? It makes me understand the markets a little bit better and see it from their perspective too. And you talk about the psychology. So you've had the opportunity, Mike, in your career to see a lot of very intelligent, very smart people in the markets and to know them, to get to know them personally. Tell me who you think the smartest person is that you've actually had an opportunity to hang out with and be part of.
Well, I can't tell you his name because that's the key thing I have the honor of meeting in my side of the business. The smartest people that I know in trading, investing, you will never hear about and they will never speak to the press. For instance, back when was it? Might have been 2020 or so, GBTC had peaked around 58 and dropped to 8. And some astute, smart hedge fund guy called me that I've been talking to for 20 years. He goes, Mike, what do you think of GBTC? And he was hemming and hawing about buying. I said, well, you can hedge it in futures. And his only quote after he did the trade and it made a killing on it is I should have just underweighted that delta. But that's a key thing about smart people. The people, that's the one thing I always have to warn people sometimes when they call the smart traders. I usually think of leveraged hedge funds. And some of them will speak to you. Like I really was appreciated. I want to shout out Jim Chanos recently because he was bold enough to really push back on Michael Saylor, some of the stuff that he was saying. And that was really helped me feel better because I pushed back too. And I felt very lonely. And then when Jim Chanos jumped on the trade to short strategy and buy Bitcoin against it, I'm like, why buy Bitcoin against it to short MicroStrategy? But I really appreciated him for that recent call. It was a very good call. But I think it's part of the beginning of the melting iceberg. That to me marked the peak. Now we're in just next levels of the stage lower. So there's one key smart person who did a big trade. Typically might not talk to the press, but that one he did.
And Mike, you know, you get hit up all the time asking you, oh, what should I do? What should I buy? What should I sell here? What should I short? Talk to me a little bit about the future a little bit. I've had over 60 people today on the shows, and I've asked the same question. From now, the S&P, the SPOOs are, you know, right now looking at it 69.09, higher or lower by the summertime?
So that's the tough question. There's few times in my life I will say things like I'm going to tell you right now: overweight, risk off U.S. Treasuries, not even gold. Gold is lost its safe haven status because it's got one key flaw. It went up too much. You never buy gold 2 times its 60-month moving average in history. So my advice, and my advice, not advice, but a key things I was really bullish on the last 5 years was key 3 things: Bitcoin, gold, and treasuries just the last few years. And then last year, I jumped off the Bitcoin horse too early, but I said, don't buy any treasuries. Not so I can't give advice, but I still think most cryptos are going lower. And now I think gold's going lower. So all I have left is just hang out in US treasuries, clip your coupons over 4% on most of them, and take a little risk if you want and go out in duration. That's what I've been thinking is the right trade to do. And if you're wrong this year because the stock market did fine, it is setting records that are unprecedented. Sort of the most expensive versus GDP in 100 years. It's creating excessive inflation. It's the wealth effect's getting out of hand. It's part of the reason the Fed can't ease. You see how extreme we are here? So my advice is KISS, 1S. Keep it very simple this year. Get as flat as possible. Wait for the opportunities. And so far, to me, the opportunities have been that doing things that would benefit you when stock market volatility reverts. So that's a key fact I'll make. Stock market volatility is always mean reverting. And right now, at an about an 8-year low, 100-day volatility can stay low and go lower, but it will always go back to about 17, 18%. It's when, not if. Yeah. I think it's going to be this year. And the key reason I think it's going to be this year is because what's happening in parabolic precious metals, plunging cryptos, and now we know we have a very volatile president. It's also becoming more of a lame duck every day. There's going to be battles going on. So I'm just looking for triggers. And that's my key advice is like something I'm not supposed to do, but no one's ever told me I can't say overweight treasury. So that's what I'm saying.
Overweight treasuries. Before I let you go, Mike, I just want to tell you, I personally want to say thank you so much for being a part of what we're doing here. And we love the partnership and we love your insight. Like I said, you're spitting out diamonds. If you're not listening to Mike McGlone, you need to, folks. And you know, one of the things that I really like is the ecosystems that everybody's being building now and putting it all together. But Mike, you give back. I mean, people don't really realize that the people at Bloomberg, they don't actually trade. You guys are actually telling people what's really going on, and it's not all the noise around it.
Well, it's one thing I love about the job, Stephen. I'm glad you pointed. I've been sell side. We got to sell product. I've been buy side when you might talk your book. Here, my main focus is to publish profound research on the Bloomberg terminal that helps the top professionals on the planet who are willing to pay for that terminal make their investment decisions. And so that's a pretty high standard. And I take it seriously. But the best way to do that is you can't be involved in the trade, because once you are, the psychology ruins it. And I have to admit, to be neutral in overweight treasuries is the best way sometimes for someone like me. But everything I do is pre-cleared. And that's a good thing about our rules. But it's also, I'm enjoying doing it. I got to be on your show, and thanks for having me.
I appreciate it. And as always, man, Mike, so much. So thank you so much. We really appreciate your time. And it's just, like I said, you're spitting diamonds, and spitting diamonds is always important to me. All right, Mike, I will see you back here next Friday, my man.
Yes, sir. Cheers.
Well, ladies and gentlemen, that was a really good one. Bloomberg is a great partner. It's awesome stuff going on here, and so much love out to the Bloomberg team. We've seen so much happening today. What an incredible day! But none of this could have happened without you helping out and being a part of this. 106,000 of you right now are watching me and Quasar Markets and what we're building. We've got some pretty cool products coming out, and we're going to talk about that over the next week and two, and as we reveal the secrets that we're building. But one of the things I want to personally say from my heart to you is thank you for watching. None of this could have happened without you watching, tweeting, retweeting, posting, saying hello, texting me, and the team. And the team that we have here has been working diligently behind the scenes. Andrew Johnson is working very hard to make sure this happens and goes off. And today went off without a hitch, right? Even the things that went through, it still went through great, right? The new world order is here, folks. The way that the markets are moving, the way that we're talking and being a part of each other, and the excitement is here. So I want to say one more time for you all go, thank you so much from Quasar Markets to you. We couldn't do this without you. And before I let you go, I'm going to say this. The world is changing very fast. Help me build this. Help me create the future that you've always wanted. Not one that's stuck in the past or one that's not building for the future. I am building for the future on rails, on new technology, on a way that we all love it, and the way you see the markets, and the way you want to be a part of it. Not the way someone's shoving it down your throat. Not the way that you think. That's why we're successful. Be a part of that. Help me build Quasar Markets. Help me bring the future of financial markets to the actual future. Thank you, everybody. And from Quasar Markets Live, we'll see you right here on the flip side.